some liquidity to some LPs, some asset owners, for them to rebalance, reduce, dispose of their commitment into other managers. Because what we've heard so far in the market was effectively all this evergreen, semi-liquid fund, some structure that should have dealt naturally with the liquidity, and because there was, back to the basic supply-demand, Paul, there were more demand for redemption than what the funds could offer. That created these gates. The public BDCs should be taken care of themselves. Effectively, that's a stock price that is adjusted at the end of the day on the supply demand. But when it comes to the drawdown fund, which make up the bulk of the private credit, and that's why I think it's really important, and thanks for the opportunity that people can understand that the bulk of the private markets are still wrapped into some drawdown credit, a fund that has a maturity, and where the LPs know that there is no liquidity provision until this maturity. Nonetheless, as it happened with private equity over the past 20 years, that's a great opportunity for people who actually want out to find some people like us to effectively provide this liquidity. Because here, Paul, you're becoming a price setter. You buy that at a discount to the NAV, and you can generate the incremental premium.
Hello everyone, good morning to all of you. Welcome once again to this live commodity analysis. Start करते हैं आज का सेशन. न्यू वीक फिलहाल देखोगे क्रूड ऑयल को तो फ्लैट ही ओपन होने वाला है. लास्ट ट्रेडिंग सेशन में एक बाइंग का काफी अच्छा ट्रेड मिला था. मार्केट ने टारगेट दे दिया था ऑलमोस्ट 400 पॉइंट का. मैंने कहा था अगर ये पॉइंट ऑफ इंटरेस्ट के ऊपर निकलता है तो एक चांसेस है कि सेकंड टारगेट तक जा सकता है. फॉरेक्स में मार्केट एग्जैक्टली इस लेवल के आसपास ओपन हुआ है. वहां से थोड़ी बहुत सेलिंग आके ये कुछ इस तरह का प्राइस एक्शन दिखा रहा है अभी फिलहाल के लिए इन फॉरेक्स चार्ट. तो एक गैप ओपन होते हुए हल्का सा लग रहा है क्रूड ऑयल में, ज्यादा कुछ खास नहीं. नेचुरल गैस कल लास्ट ट्रेडिंग सेशन में एक सपोर्ट था, काफी देर रुका, याद होगा आपको. क्लोजिंग भी सपोर्ट पे दे थी, ऑलमोस्ट 6 घंटे इसी सपोर्ट एरिया पे साइडवे चला गया था. गैप डाउन है, सपोर्ट ब्रेक हो चुका है, इसमें गैप डाउन ओपनिंग हो रही है इसमें. थोड़ा सा देखते हैं. इंडियन मार्केट देखोगे तो फ्लैट ओपनिंग है इंडियन मार्केट एज वेल. कोई मेजर न्यूज़ की बात करें, डेटा की अगर बात करें तो आज एक एम्पायर स्टेट मैन्युफैक्चरिंग इंडेक्स का डेटा है. तो अभी 12:30 लंदन सेशन ओपन होगा, 5:30 न्यूयॉर्क सेशन, 6 PM पे डेटा है, और 7 बजे फिर यूएस मार्केट ओपन होगा. उसके अलावा और कोई फिलहाल के लिए डेटा नहीं है. न्यूज़ की अगर बात करें तो मेजर न्यूज़ फिलहाल के लिए यही है दैट फ्रॉम यूनाइटेड स्टेट की ट्रम्प जो बाकी कंट्रीज हैं उनसे बातचीत कर रहे हैं कि किस तरीके से स्ट्रेट ऑफ हॉर्मोज को बाकी सारी नेवी मिलकर एक साथ ओपन करें. और यूएस प्लान कर रहा है कि जो ईरान का जो सबसे बड़ा एक ऑयल का एक्सपोर्ट करने वाला एक आइलैंड है, कर्ग आइलैंड, ठीक है, उसको अपने अंडर ले ले. तो ये एक स्ट्रेटजी है, मेजर न्यूज़ है, क्योंकि अगर ऐसा होता है तो ये बहुत बड़ा मेजर एस्केलेशन है. इससे क्रूड ऑयल के प्राइस पे क्या इम्पैक्ट पड़ेगा? देखो, दो चीज़ हो सकती हैं. अगर कंप्लीटली यूएस ने कर्ग आइलैंड को सीज कर लिया, क्योंकि वो ईरान का सबसे बड़ा ऑयल एक्सपोर्टिंग हब एक तरह से आप कह सकते हो है, तो वहां से वो ऑयल एक्सपोर्ट कर सकता है. बट वो इमिडिएटली तो नहीं होने वाला, तो उसकी वजह से प्राइस डाउन जरूर जाने चाहिए थे. बट अगर ऐसा होता है तो ईरान रिटेलिएट करेगा, ईरान बाकी जगह भी अटैक करना शुरू कर देगा. तो दैट इज़ अ वेरी नॉट गुड न्यूज़. क्रूड के लिए बुलिश न्यूज़ है कह सकते हैं अगर ऐसा होता है, अगर कंप्लीट सीजर यूएस कर लेता है इस खर्ग आइलैंड का जो कि ईरान का है. ठीक है, तो देयर अ वेरी हाई चांसेस. एक्सोस ने भी न्यूज़ को रिपोर्ट किया था, तो मुझे लग रहा है शायद ये डेफिनेटली कोई बहुत बड़ी न्यूज़ है. चांसेस हैं ऐसा ही होने वाला है डेफिनेटली. बाकी न्यूज़ रिगार्डिंग और कोई न्यूज़ नहीं है. लगातार कंटिन्यूसली अटैक कर ही रहा है ईरान. सो लाइक ऐसी कोई मेजर न्यूज़ नहीं है इसका कुछ हम कहें डायरेक्ट इम्पैक्ट मार्केट पे और पड़ेगा. कोई नया डेवलपमेंट नहीं है इस न्यूज़ के अलावा. ठीक है, तो दिस इज द मेजर न्यूज़ राइट नाउ that the US President Donald J. Trump is working to assemble a multinational coalition of countries to reopen the Strait of Hormuz and hopes to announce it later this week. ठीक है, तो अगर बहुत सारी कंट्रीज वैसे मिलके अगर आ गई उनकी नेवी, तो स्ट्रेट ऑफ हॉर्मूज ओपन हो गया, तो उसका एक वैसे देखा जाए तो नेगेटिव इम्पैक्ट भी पड़ेगा प्राइस पे. प्राइस को गिरना चाहिए, बट डिपेंड करता है फिर ईरान कैसे अटैक करता है, क्योंकि अगर सारी नेवी एक साथ आ गई और ईरान ने सब पे अटैक कर दिया, That will be a very concerning thing as well. बाकी ये जो खर्ग आइलैंड वाली न्यूज़ है, देखो इसके लिए आप सिर्फ एयर कैंपेन नहीं कर सकते, ठीक है। आपको कहीं ना कहीं उस आइलैंड पे जाना पड़ेगा, तो बूट्स ऑन द ग्राउंड यूएस और इजराइल की फोर्सेस के डेफिनेटली लग रहा है हो सकते हैं। ठीक है, हल्का सा गैप अप, हल्का सा गैप डाउन, नेचुरल गैस एज एक्सपेक्टेड। बाकी दो कंट्रीज की ओर से स्टेटमेंट आया है, एक जापान के प्राइम मिनिस्टर सनाई ताकाइची और ऑस्ट्रेलिया के जो फेडरल ट्रांसपोर्ट मिनिस्टर हैं कि हम अपने शिप तो नहीं भेजेंगे स्टेट ऑफ हॉर्मुज। Flights have been temporarily suspended at Dubai International Airport following a number of drone attacks tonight by Iran. According to Kuwait news agency, new supreme leader of Iran, Majataba Khamenei, after suffering injuries during joint US-Israeli strike, was secretly transported to the Moscow and underwent surgery there. According to reports, he is currently still in country in Russia. Israeli government is set to approve to call off of up to 450,000 reservists as the IDF forces prepare for yet another major ground operation against Hezbollah in southern Lebanon. British Prime Minister Keir Starmer discussing the need to reopen the Strait of Hormuz to end disruption and global shipping with US President Trump. ओपन इक्वल टू हाई कैंडल लग रही थी बट नॉर्मल कैंडल में कन्वर्ट हो गई है अब, नेचुरल गैस की कैंडल। ठीक है, निफ्टी ओपन होने में टाइम है थोड़ा सा अभी भी, बट लग रहा है थोड़ा सा फ्लैट या हल्का सा गैप अप हो सकता है, कुछ ज़्यादा बड़ा तो नहीं लग रहा है मुझे। स्पॉट में फ्यूचर में देखना पड़ेगा ओपनिंग कहाँ पर होती है, फ्यूचर की ओपनिंग बड़ी इंपॉर्टेंट रहेगी। हाँ, फ्लैट ही लग रही है। ठीक है, तो ये एक तरह से एस्केलेशन कह सकते हो मेजरली, मुझे लग रहा है जो दो न्यूज़ आ रही है मेजरली फिलहाल के लिए। एक, यूएस कैप्चर कर सकता है ईरान का खर्ग आइलैंड, नंबर वन। नंबर टू, ट्रम्प अनाउंस कर सकते हैं कोलिशन जो स्ट्रेट ऑफ हॉर्मोज को ओपन रखेगा, जिसमें बहुत सारी नेवीज इंक्लूड रहेंगी। तो इट इज़ अ काइंड ऑफ एस्केलेशन बोथ फ्रॉम बोथ साइड। ठीक है, इवन दो अगर ओपन भी होता है हॉर्मोज, स्ट्रेट ऑफ हॉर्मोज, उसमें भी रिस्क है काफ़ी है फिर बाकी कंट्रीज को। ठीक है, तो थोड़ा सा देखते हैं अभी क्या प्लान कर सकते हैं यहाँ पर वापस से। एज यूजुअल क्रूड ऑयल वापस 9400 की ओर देखना पड़ेगा, वहाँ पर रिजेक्शन लेता नहीं लेता, या फिर मार्केट और ऊपर की ओर ही जाता है। मुझे लग रहा है शायद हो सकता है इसके भी ऊपर निकल जाए प्राइस, चांसेस आर वेरी हाई। प्रोबेबिलिटी देखोगे इस लेवल पे तो काफ़ी ज़्यादा है, बट मार्केट यहाँ से देखोगे एक रैली में गया है, तो मुझे लग रहा है शायद थोड़ा बहुत रिजेक्शन यहाँ लेना तो चाहिए। ओवरऑल बुलिश ही है, याद रखना नेचुरल गैस सॉरी क्रूड ऑयल सेलिंग आती भी है तो जस्ट फॉर प्रॉफिट बुकिंग। 35। कि और कमोडिटी मार्केट को भी चेकआउट करोगे तो बिटकॉइन 70,000 के ऊपर प्रॉपर्ली सस्टेन किया है. Wow, look at the current candle open equal to low in 15 minute in Bitcoin. Single candle goes almost 1500 point. ऐसी क्या न्यूज़ आ गई सडनली? कुछ तो न्यूज़ आई है. बिटकॉइन सडनली स्पाइक किया है 2% सिंगल कैंडल पे. ठीक है, बाकी गोल्ड और सिल्वर को देखोगे प्रॉफिट बुकिंग में ही चल रहे हैं. सिल्वर वापस $80 के आसपास आ गया है. ब्रेक होता है $80 तो मुझे लग रहा है शायद थोड़ा सा फिर प्रॉब्लम क्रिएट करेगा. आज वापस से 78-79 डॉलर पे आके मार्केट ने सपोर्ट लिया है. क्या यहाँ से और करेक्शन मिलने के चांसेस? देखो मल्टीपल टाइम सपोर्ट टेस्ट हो गया ये 78-79. ब्रेक होता है तो मेरे रिकॉर्डिंग वापस 65 तक जाने के चांसेस बन सकते हैं. एक तो इसमें हायर हाई बन नहीं रहा है इस पर्टिकुलर जोन पे. पॉसिबिलिटी है क्या वापस आने की $80 के और नीचे? वैसे तो अभी कंसोलिडेशन में ही है, कह नहीं सकते ब्रेक करेगा इतना इजीली. बट यार $78 के नीचे अगर 4 आवर टाइम फ्रेम पे सस्टेन किया तो वापस हम एक्सपेक्ट करेंगे $68 के आसपास गिरे. इसका मेजर सपोर्ट हायर टाइम फ्रेम पे सिल्वर का काफ़ी लो लेवल पर है. देखना पड़ेगा वहाँ वापस जाता है क्या आने वाले टाइम में. बस क्या एक बार $62 को टच करने आएगा सिल्वर? नीड टू सी. और के सिनेरियो में भी ऊपर नहीं जा रहा है तो अगर प्रॉफिट बुकिंग बाद में अगर आ गई तो जरूर जा सकता है. अभी के लिए $78 के आसपास स्मॉल सपोर्ट इन स्मॉल टाइम फ्रेम. कि अपसाइड कहोगे तो मैं अब एक्सपेक्ट नहीं कर रहा हूँ $86 के ऊपर सस्टेन करेगा अनटिल अनलेस कोई बहुत बड़ी न्यूज़ नहीं आ जाती है फॉर गोल्ड एंड सिल्वर. There will be a major resistance now from $86 and above. $86 से देखोगे $88, 86 to $88 is a major resistance now. गोल्ड भी गिर रहा है बट इतना नहीं. इंडियन मार्केट ओपन. निफ्टी हाँ हल्का सा गैप अप फ्यूचर में. बैंक निफ्टी भी हल्का सा गैप अप फ्यूचर में. देखते हैं सस्टेन करता है या फिर नहीं. 60 पॉइंट लगभग गैप अप हुआ है. बैंक निफ्टी वापस सेलिंग में जा रहा है. लेवल रिफ्रेश कर देते हैं. अभी तो यहाँ पर कोई नया ट्रेड है नहीं. नेचुरल गैस में बाय मत करना आप. ठीक है. ओके क्रूड ऑयल को भी चेकआउट करोगे तो यहाँ तक तो जाना चाहिए अब 9400 के अराउंड. फिर देखते हैं. यहाँ पर अभी फिलहाल के लिए और कोई बाइंग तो नहीं है. सॉरी इस पर्टिकुलर जोन पे तो मत करना बाइंग फ्रेश. काफ़ी ऊपर आ गया प्राइस ऑलरेडी. इसके लेवल भी एक बार अपडेट कर देते हैं. लेकिन दोनों जगह निफ्टी बैंक निफ्टी रिजेक्शन ही है. बैंक निफ्टी थोड़ा ज़्यादा रिजेक्शन ले रहा है. निफ्टी भी ठीक ठाक गैप अप हुआ था बट वापस से नीचे आ गया है. फर्स्ट कैंडल के बाहर निकलता है, फिर देखते हैं थोड़ा सा नेचुरल गैस को, ऊपर आएगा तो सेल ही करेंगे ऊपर। इसमें नीचे एक बार देख लेते हैं, ऐसे आ तो गया है थोड़ा सा, क्या बाइंग वापस इनिशिएट हो सकती है इस पर्टिकुलर जोन पे या फिर नहीं। ऊपर आएगा तो 300 के अराउंड मेजर रेजिस्टेंस नाउ इंट्राडे। सपोर्ट तो काफ़ी नीचे है नेचुरल गैस में, वहां तक गया तो काफ़ी बड़ा फॉल कर जाएगा। दो पॉसिबिलिटीज़ हैं, या तो पुल बैक देके रेजिस्टेंस पे आए वहां सेल करें, या फिर वेट करें नीचे सपोर्ट पे आने का, विच इज़ फार अवे फ्रॉम हियर। 287 चल रहा है, एटलीस्ट 280 तक तो जाना ही चाहिए इसको, अगर सपोर्ट लेने डायरेक्टली जाता है तो। मैं देखो ऊपर का जो रेजिस्टेंस है ना इतना स्ट्रांग नहीं है, फिर रिपीट कर रहा हूँ, है जरूर वहाँ पर थोड़ा बहुत सेलिंग का जोन, बट नॉट दैट मच स्ट्रांग। ऑलरेडी इतना पुल बाइंग कंटिन्यूअसली आई है, थोड़ा बहुत हो सकता है प्रॉफिट बुकिंग दिखाने की कोशिश प्राइस करे। उसके अलावा देखोगे तो ऐसा कुछ मेजर मुझे लगता नहीं है प्राइस रिजेक्शन लेगा। देखते हैं, लास्ट ट्राई जरूर करेंगे। ओवरऑल इट इज बुलिश, क्रूड ऑयल सुपर बुलिश राइट नाउ। नेसेसरी ज़्यादा क्वांटिटी में रिस्क मत लेना सेलिंग के लिए क्रूड ऑयल में। ऑलरेडी 9000 के ऊपर आ गया तो एसएल छोटा नहीं होगा ना टारगेट छोटे होंगे। तो 200 पॉइंट तो मान लो नॉर्मल है। सिंगल लॉट भी अगर ऑप्शन बाई करते हो तो 50 पॉइंट तो आप मान के चलो नॉर्मली एसएल हो गया वो ऑप्शन एट दी मनी का। फ्यूचर में गए तो सीधा 100 से 200 पॉइंट का नॉर्मल एसएल। सिंगल लॉट का रिस्क उसी हिसाब से बनेगा फिर। मिनिमम एसएल भी लेंगे फ्यूचर में तो वो 10 to 20 के बनता है सिंगल लॉट। उस हिसाब से टारगेट भी ऑब्वियसली 40 to 50,000 बनता है, बट नॉर्मली ध्यान रखना प्राइस ऑलरेडी काफ़ी ज़्यादा प्रीमियम पर है इन क्रूड। तो एक बार फिर से ऑल टाइम हाई जाएगा क्रूड ऑयल, स्पेशली अगर 9600 के ऊपर सस्टेन किया तो। देखोगे मेजर सपोर्ट नेचुरल गैस में 275 के आसपास दिखता है। देखना पड़ेगा वहां तक जाता है या बीच में कहीं पर रुकता है।
Minister of India, Jaishankar. He called his counterpart. Prime Minister Narendra Modi has also spoken to President of Iran. This has all been done in an effort to ease down the supply of gas. Now, this is a very crucial. India imports 90% of its imports, of its domestic usage. And this is a very crucial year for the Modi government. There are some 5 state elections, and the economy has already started seeing the impact of energy shortage. So with the critical elections lined up, the threat of inflation and fuel shortage, all these are very big factors for the Modi government to take care of right now. However, this is a fine line for the Indian government, for Modi particularly. It cannot afford to annoy the US, with which India recently announced a trade deal, or the friendly Gulf countries there like UAE and Qatar. So the government is trying to balance its diplomatic relationship with both Iran and the US.
So what is the Modi government also doing to shield the economy from the pressures that arise due to the conflict? Gas prices are spiking.
Yeah. So as I said, almost 90% of its consumption is imported. India is a big energy importer. The government is very aware of the impact it can have on the wider economy. It has set aside a 6.2 billion economic stabilization fund. Now, this fund is essentially to deal with the global shocks such as these. Crude prices have crossed $100 a barrel. So such exigencies would be taken care of through this fund, which the Finance Ministry announced last week. On the other hand, the government is also aware of the risks that exporters are right now taking and the hardships that they are facing right now. There are plenty increased costs like demurrage, higher insurance, higher freight charges. The government is looking to bring in a scheme which can partly offset these high charges that exporters are being forced to bear right now. It is also mulling some of the COVID-era measures like moratorium on loan or higher period for the exporters to bring back the foreign earnings that they have. These are the measures which the government says would be rolled out only in case the conflict lasts longer than estimated. While there is no estimation of how long the conflict will last, but I think the main intention here is to give exporters some sort of support to ensure that they are able to bear the brunt of what's playing out in the region.
All right, Bloomberg's Shruti Srivastava there in New Delhi. Well, Southeast Asian nations have also been hit hard by the Middle East conflict, with most countries reliant on imports for oil. Bloomberg's Avril Hong is back with us to break it down. Avril.
Yeah, Paul, as you rightly pointed out, a lot of Southeast Asian countries are still reliant on oil imports. And in the past week or so, we've been seeing some of them taking drastic, sometimes innovative measures in order to mitigate the energy crisis. You look at the supply front for the likes of Vietnam and Indonesia, for example, they are focusing on the local needs when it comes to sales and output. On the demand side, as part of efforts to reduce these energy needs, the likes of Thailand, they've been implementing these work-from-home arrangements for government agencies, telling bureaucrats to take the stairs. In the Philippines, for example, we're in the midst of a 4-day work week for government agencies as well. And this is all coming at a very interesting time because by some forecasts, some of the Southeast Asian countries could, in the next couple of months, face higher than average temperatures this year. Flip the board because, of course, smaller countries such as Cambodia have also been taking efforts to mitigate the energy crisis. You're still hearing about fuel depots being shut because of stock delays, but authorities have ramped up oversight of fuel markets. They've also been telling petrol station operators not to manipulate prices. It's worth noting the energy mix of Cambodia as well, because they have been taking efforts to ramp up the renewable sources of energy. But if you take a look at this pie chart, if we can show it to you, they are a country that's still pretty reliant on fossil fuels, both for coal and for oil products. Paul?
All right. Thanks very much, Avril. Cambodia's Minister of Mines and Energy, Keo Rotnak, joins us now exclusively. Minister, thank you so much for your time today. And I do want to pick up on some of those themes that Avril was discussing. The Strait of Hormuz is pretty much closed. Cambodia is still to a large degree dependent on imported energy. Now, you do have a 30-day strategic reserve, but is there any reason to feel nervous at the moment as Minister for Energy?
Thank you, Mr. Allen, for having me. The disruption at the Strait of Hormuz has been the largest in the global oil supply disruption, and as per the IEA indication. Cambodia is not immune to this, just like the rest of the world, because 84% of the oil and gas from that part of the world is destined for Asia. We have had direct impact, and therefore we have been calling on the consumer to use the oil and the gas product more responsibly. Having said that, we are able to manage the shock in a way that is transparent and orderly, so that yes, there has been a rise in petrol price by more than 30%, diesel by more than 60%, but in terms of supply continuation, we are able to manage it so far. So far so good, although we are calling on the public to make sure that they can use it more efficiently and more responsibly.
How much time do you have on your side before so far so good becomes a problem?
We are slightly less than 30 days because we don't have oil refinery, we don't have crude stockpiling in the country, although we are working hard to have one in the near future. Basically, we are about 3 weeks, but the good thing is that we are able to diversify our sources of import, and that the sources of import are still continuing to provide Cambodia with the regular replenishment of the stock. So that is what we are trying to do. At the same time, we are trying to make sure that the public does not go to panic mode. So far, so good in the sense that the public are able to get the gas and the fuel they need, but without having to really go for a panic mode by doing illegal stockpiling or the price going crazy without a proper system in place.
Retail petrol prices in Phnom Penh have been rising, though, I believe up about 70% over the past 3 weeks. So at what point do you need to move from, just monitoring to potentially active intervention or even offering subsidies?
Basically, the petrol prices has risen by more than 30%, diesel at more than 60%. We have a pricing system that is open, transparent, and predictable, that is linked with the movement of the oil and gas prices from the outside. But we also have a cushion in that formula. And that cushion allows the government to manage the shock from outside like this so that it does not go 100% to the consumer. So through that open market pricing linked mechanism and formula published, we are able to take some shock in terms of the government support. But at the same time, we have to recognize that we cannot really absorb that price shock 100%. No country can do it in the world. Just Cambodia is the same. So we're trying to have a system that allows some shock to be absorbed by the government, but also some to be shared by the consumers. So this has been in practice for quite a while, and it's done in a way that is transparent to the public, so that no importer or industry partner can really exploit the situation by going for profiteering.
Do you imagine you will need any policies to support cost of living pressures for the public?
We are. One is starting with energy. The good thing is that Cambodia is already at more than 63% clean energy. If you look at the Cambodian grid today, we are more than 63% clean energy based. So, and situation like this highlight the importance that Cambodia has been right all along, that our energy transition has to be going forward, and the target is to have at least 70% clean energy by 2030, which is not far from now. So when we have this kind of shock, the energy system of Cambodia is still evolving around depending on electricity as the bulk of the shock absorber. We have been able to electrify a little bit already for the transport sector. We have been doing quite well with the manufacturing sector. Agriculture, we are moving into that as well. So this kind of shock can be absorbed by clean electrification. Now, on the oil supply side, the government is reviewing all the pricing formula with the view to making sure that we can absorb further price shock from the international price movement. So that even price going up more, we believe that we have a pretty decent cushion to make sure that our consumers can be protected.
You mentioned earlier that there is a plan recently announced for Cambodia's first oil refinery by 2029. Can you talk to us a little more about the significance of that? And does it just create a different kind of dependency because you still do need to import oil?
It would, but I would like to again highlight the three important components for our policy. One is that energy efficiency has been and will always be at the core of our energy security going forward. Secondly, we have to really improve our electricity further by going cleaner, at least 70% by 2030, but also move to a faster rate of electrification, transport, manufacturing, agriculture. So if we could do that, it would certainly lessen the dependency of the import of petroleum and gas products. Now, of course, our energy system, just like many of the systems in the world, we would not be able to disconnect entirely from oil and gas anytime soon. And therefore, we are working hard to have a refinery, because when we have refinery, we can do strategic stockpiling in terms of the crude oil. So far, our stockpiling has been around petrol, gas, and diesel, which is not the best scenario. Aware of that, but we are working hard in negotiating with proposal from the United States, from China, from Japan, and others to look at the possibility of oil refinery. And we hope we will be able to do so in the next 4 or 5 years.
Well, we have actually seen a slump in oil imports into Cambodia, 7.8%, I believe, so far this year. Is that an indication that your energy efficiency and your clean energy transition plans are working, or is it an indicator of a slowing economy?
It is basically largely the success of the electricity sector. We have been able to reduce the electricity import. We used to import a lot from neighboring countries, but we have been able to reduce import, for example, from Thailand to zero, because we are able to do a lot more domestically. And we also successful to some part in terms of energy efficiency program. Yes, the slowing down of the economy also has a factor to play, but that does not mean that the electricity sector is not improving also. So if you look at manufacturing, it's still growing. That means that electricity is still providing to the manufacturing sector is a lot more in terms of quantity, but energy efficiency has been successful in curbing the energy intensity in manufacturing. But in terms of the rectification also, we are able to do more for EV. So we're rolling out a larger scale EV charging station across the country right now.
Is the argument for new coal-fired power plants in Cambodia effectively dead now? Can we say that there won't be any more?
Yes, Mr. Allen, Cambodia has put up a policy in the COP26 that we are not going to do any coal generation for the grid. And therefore, our target is to make sure we're going cleaner by 2030 by having the 63% plus right now to the 70% by 2030. So no coal going forward.
Just on the conflict on the Strait of Hormuz, I mean, Cambodia does have a stance of neutrality on this, but if energy prices continue to rise, if this conflict continues to drag on, do you feel you might need to align yourself with somebody, even if it is, for example, India that's managed to get 2 gas tankers through, or China as well, which is, well, apparently allowed to transit the strait? Are these relationships something that you would seek to leverage?
At this stage, it's a bit early for us, but we are looking at all options. Cambodia is calling for peace, international law. We understand the issue, the challenge at the Strait of Hormuz, but we are very much in talks and support our friends and allies. That include United States, Europe, China, India alike, and ASEAN also. But currently, the point is that we are trying to do what we can to make sure that the flow of oil and gas from different sources will continue to be the case. And we basically see there's an enormous amount of goodwill on the part of many big players, talking about US, Europe, Japan, China, Korea, ASEAN in general. So we are seeing that kind of collaboration in the middle of this crisis. That's a good part.
Yeah, you mentioned ASEAN there. I mean, if this blockade does continue to drag on for longer than anybody wants it to, does Cambodia look to the ASEAN power grid, or are the member nations of ASEAN too focused on their own problems?
Yes, Mr. Allen, Cambodia has been at the forefront with some members of the ASEAN 11. We have been advocating for the ASEAN power grid because we believe that this would be the most efficient and effective way to help ASEAN decarbonize, improve blocked energy security, but also we believe that this would be the opportunity for unlocking multi-billion, if not $1 trillion of investment by our friends and allies, because there's a huge amount of investment that can go into the subsea cable, for example, that link a nation together. We can see a huge amount of upstream investment in good, clean energy like wind, solar, battery energy storage systems, and the like. And Cambodia will continue to spearhead this effort with Singapore, Malaysia, and other like-minded ASEAN partners. And we hoping that our meeting in Manila towards the end of the year will also give some additional breakthrough. And we keeping our hope and our head very high.
Okay guys, ये crude oil में as I said earlier market overall तो positive ही है, but एक selling expected है, थोड़ी बहुत profit booking आ सकती है प्राइस में इस particular zone से, एंड थोड़ा सा नीचे आएगा तो वापस बाइंग ही प्लान करेंगे। अगर नीचे आता है थोड़ा सा तो एक कम रिस्क के साथ यहाँ पर एक बाइंग प्लान करते हैं, ठीक है। ज़्यादा रिस्क मत उठाना, कम ही रिस्क के साथ जाएंगे। ठीक है, एक बार इसको भी रिफ्रेश कर देता हूँ मैं, लेट्स सी इसमें और क्या लेवल रहेगा। प्राइस वैसे भी अब नीचे आता है तो 9000 मे बी फर्स्ट सपोर्ट जोन करंटली। अब उसके नीचे नहीं जाता बहुत ज़्यादा बेरिस नहीं होने वाला इंट्राडे में स्पेशली। एक बार रिफ्रेश कर देते हैं क्रूड ऑयल के लेवल भी फटाफट से। पूरा रेजिस्टेंस जोन ही है 9300 से 9600 के बीच में। राउंड नंबर लोगे तो 9400 हो गया। क्रूड ऑयल को देखो ऊपर निकलना है तो इट शुड गिव अ प्रॉपर ब्रेकआउट अबव 9650, तब हो सकता है मार्केट एक नया ऑल टाइम हाई क्रिएट कर दे। टिल देन इट इज़ अ स्मॉल रेजिस्टेंस, नीचे भी आता है तो अभी बहुत ज़्यादा बेरिश नहीं है, थोड़ा ठीक ठाक बेरिश होने के लिए प्राइस को एटलीस्ट 8350 के नीचे प्रॉपरली ब्रेक डाउन करना पड़ेगा, तभी जाके कहीं बेरिश होगा। अदरवाइज अब मान के चलो 8000, ये 400 टू 8800, ये पूरा जोन ही सपोर्ट की तरह काम करेगा फिलहाल के लिए। ठीक है, बाकी रेजिस्टेंस याद रखना है 9400 से स्टार्ट हो जाएगा पूरा। मैंने टॉप पे लगा रखा है बिकॉज एसएल छोटा हो, बट दिस होल एरिया इज रेजिस्टेंस एक्सपेक्टेड राउंड नंबर 9400 अप्रॉक्सीमेटली। चलो इसको भी देखोगे, अपर लेवल पे रेजिस्टेंस है, ये भी जब तक वापस अब 300 या 298 के ऊपर सस्टेन नहीं करता, इट इज़ काइंड ऑफ नेचुरल गैस थोड़ा बहुत रिबाउंड हुआ है डे लो से। ठीक है, फिलहाल के लिए मेजर सपोर्ट नीचे 270 के अराउंड ही है। देखना पड़ेगा प्राइस वहां पर वापस आता है नहीं आता है, थोड़ा सा बेरिश तो लग रहा है नेचुरल गैस। देखना पड़ेगा 300 के लेवल को सस्टेन कर पाता है या फिर नहीं। कोई नया सपोर्ट तो नहीं है तो वेट करना पड़ेगा। ऊपर आता है तो एक सेलिंग का प्लान देखेंगे, ठीक है, वापस से नेचुरल गैस में। तो मुझे नेचुरल गैस थोड़ा सा बेरिश लग रहा है। क्रूड ऑयल स्टिल लुक्स बुलिश इवन दो ऊपर एक रेजिस्टेंस है अभी भी। क्रूड ऑयल का ध्यान रखना, सेलिंग करेंगे रेजिस्टेंस से तो ज़्यादा रिस्क मत लेना, ओवरऑल बुलिश ही है प्राइस।
Yeah. Do you have confidence that Trump's plan to secure sort of a global coalition of allies to help safeguard the passage of vessels through the Straits is going to be successful?
I'm not sure there's an alternative, to be honest. I mean, what we've seen so far, our data, we've seen around 20 vessels across the Straits of Hormuz, mainly Iranian. We did see the first crude oil cargo that was a non-Iranian origin cross the Straits of Hormuz over the weekend. We can't give the locations and too much detail away yet because of safety concerns. Whether there is some negotiation taking place behind the scenes, we can only speculate there, but it certainly seems a coalition is going to be the main avenue in order to secure security through the Straits.
Yeah, and of course, you know, it's paramount that the transit actually does restart. The passage of these ships does restart through the Straits. One thing I do want to ask you, just looking at the numbers, the waiver that's been granted for Asian buyers to buy Russian oil, how much of an impact is that actually going to have on the market, especially given we know so much of that Iranian oil was in floating storage as opposed to on land or at Karg Island?
Yeah, look, this is a very important point, and it's something that we've been discussing internally at length. Obviously, what we've seen is that there's a finite timeline between when those barrels are available for purchase. It's mainly vessels and cargoes that are currently at sea that are non-committed. There's still a few cargoes of Russian oil that are committed, mainly from Indian and Chinese buyers. It buys time for sure. That's something the market has been yearning for. Is a bit of respite and a supply squeeze. It's only for cargoes that have loaded essentially between the 12th of March and I think the 11th of April. I can't remember the exact date. Excuse me on that. But it offers respite, but only for those who are able to process it if it works in the refineries. Which Urals, the main grade that Russia export does, especially for European refineries. But for the Indian buyers, it certainly frees up a lot, even if economically it isn't as attractive as it was prior this waiver.
Yeah, I saw the Urals premium to Brent has shot up significantly just in the last couple of weeks. Let me ask you about the IEA record announcement, the stockpile release. Interesting that also they're saying over the weekend that oil from the stockpile release will be made immediately available in Asia versus for Europe and America, it's going to be available from the end of March. Does this just also underscore the situation that many of these Asian buyers are in and that they desperately actually need these stockpiles to be released?
Yes, that's exactly right. And it's a good question, a good point. This is something the market is concentrating on. We think it buys up to about 45 days of leniency, supply cover in the market. Like you said, 400 million barrels, the biggest release ever. It is a cohesive agreement, and it is incredibly important, especially for buyers in Asia, which are the vast majority net importers of crude oil. The 45 days there is an important point of reference. What it does, the market right now is pricing in supply disruption, not supply destruction. And I think that's why prices are kind of hovering around that. The IEA, the US waiver for sanctioned Russian oil, they all go to appeasing the end user, the buyer, the Chinese, the Japanese, the Indians, anyone east of the Suez really. But yeah, it's all about stabilizing the market in the short term. That's what the real focus is right now.
Yeah, Matt, let me pick you up on something you just said, that the market is pricing in supply disruption, not supply destruction. In an event of supply destruction, where do you see Brent going to?
Look, this is unfortunate. You're not the first one to ask me that question, and it's a wry smile on my face. If the only sort of comparative I can put against it would be what happened during COVID. The opposite, though, we saw demand destruction there. And I remember falling off my chair when WTI went into negative territory. No one foresaw that situation ever happening. When you flip it now to a supply issue, where does flat price go? We hit $119.50 last Monday, and we kind of steadied off. We were down $20 a barrel at the end on Friday. Refining margins were down. Freight was down. Is that temporary? Look, no one wants to price in the situation, and I think those who are trying to price it are fearful of that situation. Right now, it's disruptive. It's not destructive.
Yeah, and you're still sitting on your chair, so that's good. Matt, thank you so much for joining us today on Horizons. Matt Stanley, Market Engagement Head at Kepler. Thank you so much. Well, coming up, Gulf economies could face their worst slump since the early 1990s if the Iran war drags on. We discuss what's at stake with Redmond Ramsdale, head of Middle East Bank Ratings and Islamic Banking at Fitch Ratings, next. This is Bloomberg.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Horizons Middle East and Africa. Our top stories this morning. President Trump is urging other countries to help secure the vital Strait of Hormuz, calling out China in particular. He throws the summit with Xi Jinping into question. Oil markets remain on edge as traders assess the flow of crude after the U.S. struck military sites on Iran's Karg Island. Plus, Iran remains defiant. Foreign Minister Abbas Araghchi says Tehran has not sought talks or a ceasefire after Trump told NBC he's willing to make a deal, but wants better terms. It's just gone 9:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai, still very much in the thick of the war. Day 17 now for the since the war started, and some big developments over the course of the weekend. We were just discussing the first half of the show, those U.S. strikes on Karg Island targeting military infrastructure, but of course raises the stakes. This as the Trump administration are doing what they can to try to force the reopening of the Strait of Hormuz by building up a coalition of partners. And Iran continues to retaliate on Israel and Gulf states' key infrastructure. Now, in terms of the market reaction today, Asia Pacific, slightly more cautious. We're going to get into that in just a moment, down 0.2%, but not a major drawback. I've got to say, drawdown there. And so we are seeing some upbeat news come out of China's economy. Again, something to unpack in the next 15-20 minutes. We'll get into that on our show. As for S&P futures, leaning towards positive, up 0.5%. Big week in terms of central bank. We've got the Fed on Wednesday. Let's see whether they change the tone and sound slightly more hawkish given the commodity price shock that we've had since this war began, especially in the price of oil. Brent, speaking of oil, just shy of $105 now, up 1.8% on the session, as we continue to talk about the physical supply hit that is taking place right now in this part of the world and the knock-on effect that it's having on buyers all over, particularly in Asia, where some key countries, including China, have been forced to make some adjustments in terms of their own export activities from refineries. And then the USD slipping a little bit today in trade, down 0.2%, but still up more than 2% since the war began, and actually one of the best defensive assets out there. If you look at the complete picture, say, versus how U.S. Treasuries have performed, they've moved higher in line with inflation. Gold and silver underperforming since the war started. And then switching over to the point about S&P, we are sitting on a key technical level here, around 200 days, a moving average. Let's see whether this key support level actually holds or whether it breaks to the downside. Magnificent 7, if you do a deeper dive specifically on that basket, is technically in correction territory. So from market insights, let's go across to Bloomberg executive editor for Asian markets, Paul Dobson. Let's start with the here and the now, Paul. Cautious price action and handover from Asia this morning, but nothing really that speaks of any, hysterical reaction to the developments over the weekend.
No, Jumana. Compare it with last Monday, where, of course, the market volatility was extreme. This one is remarkably calm on the flip side of that, with, as you've been describing, energy prices relatively stable, equity markets comfortable enough as well, and the dollar weakening a little bit. I think, investors are choosing to look on the positive parts of the news, the idea that, well, let's put it this way. Everything really depends on exactly how long this war goes on and how deep the interruptions in terms of the energy supplies to the rest of the world are. So anything that indicates that maybe we're getting closer to the end of the war is something that the market will take as a positive. So they will look through the data and see, there's some possibilities that Trump is getting closer to talks with Iran again. There's some possibilities that he might put together some kind of a coalition that will enable more ships to come out of the Straits of Hormuz. And there's some energy already flowing for that matter. So markets taking those things as a slight positive maybe, and nothing too much more alarming that's made them more negative, I guess you could say, on the flip side of that.
Even though Iran continued to retaliate and remain quite defiant. So let's see whether that optimism is justified. It is a big central banking week coming up. There are plenty of central banks to watch out for. Bank of Japan, ECB, Bank of England, and the Fed, also RBA too. What are you watching out for in terms of commentary and potentially even action out of some of these central banks this week, given this is the first chance we're really going to be hearing from them since this war began?
That's right, and it's going to be really fascinating to see how they respond. I think Australia is kind of an easy one because the market expectation is for them to get on with hiking interest rates sooner than later. They're already in that sort of a process. For the rest of them, it's a little bit more mixed. You know, the market had been pricing for the Federal Reserve, for example, to be cutting interest rates again this year. It's moved right away from that. So now, what will the Fed say? I was talking to my colleagues. They said, well, surely, you know, at the moment, at least, this war is just a short-term shock because once it's over, if it's over, then the energy flows could start again relatively quickly and bring those prices right back down again. And they said, well, you know, the Fed and all of the central banks, for that matter, are so cautious about using the word transitory or you know, sort of like short-term, given how much they were burned by the last price shock that we saw, an inflationary shock post-COVID. They're much more cautious, so they're much more likely to sort of sound the alarm a little bit on the possible inflation outlook. But for the Fed, there's even more complicated because the last jobs numbers that we saw were so awful that they need to think about the other side of their mandate, economic growth, and not just inflation. And if they think that actually the threat to growth is worse than the threat to inflation, then maybe they will start to lean, or the market starts to tip back towards the idea that they're going to be cutting interest rates this year. So it's going to be really fascinating to see what the policymakers have to say there.
Paul, thank you so much for joining our show. Always good to chat to you. Paul Dobson, our executive editor for Asian markets. Well, Gulf economies could face their worst slump since the early 1990s if the Iran war drags on, with some forecasts warning of sharp contractions should disruptions to the Strait of Hormuz persist. Despite the broader economic risks, rating agencies say the region's banking systems remain relatively resilient for now, supported by strong capital, liquidity buffers, and the expectation of sovereign support. Joining us now to discuss is Redmond Ramsdale, head of Middle East Bank Ratings and Islamic Banking at Fitch Ratings. Good to have you with us. Let's just start with a snapshot of how the GCC banks that you look at were doing before this war kicked off. Just paint a picture for us in terms of their capital position and liquidity.
Yeah, thanks, Jemana, and good morning. Yeah, I mean, coming into this conflict, the Gulf banking systems were in a very strong position, very strong non-oil growth, very strong loan growth, capital profitability, very strong positions. Again, asset quality, probably the best we've seen in a very long time. So coming into the conflict, very much in a position of strength.
What are the main avenues of risk to the banks the longer the war persists? What are you watching out for?
Yeah, no, very good question. I mean, look, our base case is still predicated on a relatively short regional conflict. And under that scenario, the banks face few immediate credit risks. The starting point for us, at least, is out of the nearly 60 GCC banks that we rate, over 85% of those are driven by sovereign support. And we believe that GCC sovereigns generally have sufficient headroom to withstand a short regional conflict. But, you know, we've got to see whether anything, you know, escalates significantly. Certainly a short regional conflict, the headroom is there. And for instance, Qatar was affirmed on Friday at AA stable.
Can I just ask you to define what you mean by short? I mean, it's been going on for 2 weeks now. If all in all, let's say the war ends in a month, so another 2 weeks, does that fit your time frame?
Our time frame, our base case was based on about 4 weeks to start, and obviously, as you said, we're now a couple in. It looks at lots of different things, you know, escalation, particular sort of damage to major infrastructure and things like that we've seen, you know, that we haven't seen so far. I mean, for banks, you know, we need to sort of drill in more into sort of their standalone creditworthiness to see how they're positioned. And you kind of mentioned it at the beginning that we're coming into this with sort of, you know, sound financial metrics. I saw you put one of the charts up. I mean, capital buffers for those four major markets range from 13 to 15.5. So again, very strong position that gives pretty good buffers.
Yeah. And when you talk about future operating conditions, what do you think is going to be more impactful to the trajectory of GCC banks? The extent of oil growth or non-oil growth, as we've been covering extensively over the last few years while these economies continue with their transformation plans?
Yeah, I mean, for us, what's really driving the Gulf banking systems is kind of the non-oil growth. That is what is really driving what we've seen as really strong loan growth over the last few years. So that is kind of the key to watch here, is what's going to happen to the non-oil growth. The other key sort of what to watch really is confidence in the region. I mean, it's been very, very strong, but you know, that can really change the trajectory if you start to see sort of expats, you know, leaving, or, you know, less resilience in terms of the retail market or in the real estate market. But going back to your question, it's kind of non-oil growth. What we're expecting now is lower loan growth, and obviously financial metrics of the banks will be slightly down. But again, that's still predicated on our relatively short-term base case.
Yeah, and one other question, still early days to your point. It's difficult to assess, but one of the booming sectors, especially here in Dubai, has been real estate. And I wonder whether at some point the market is going to have to account for a potential slowdown in real estate. I'm not saying that it's happening right now, but the longer this war persists, then you'll likely get knock-on effects there and potentially asset quality downgrades to follow as well.
Yeah, I would agree with you if this does become sort of a longer-term thing. As I mentioned, we're going into this crisis, this conflict, with asset quality for the banks, you know, in a very strong position. We've got asset quality ratios, so I'm talking about non-performing loan ratios of sort of between 1.5% and 3.5%. We've got coverage for the whole region over 100% and all the way up to 250% for Kuwait. So again, we are in a very strong position, and the buffers are really quite good to be able to withstand deterioration. But you're right, real estate is probably one of the key areas that could see some deterioration. And again, as you said, particularly, you know, Dubai, UAE in general. Again, we're too, you know, we're not close enough yet to know that. I mean, we've been predicting a real estate correction. That's still on the cards, and the correction that we're predicting was still absolutely manageable for the banks. I mean, if you look at the real estate exposure for the banks, it's been coming down, and as I mentioned, provisioning is very strong. So we're still not anywhere near that yet for the banks. We still think those liquidity buffers, those capital buffers, the place that the banks are in terms of asset quality, you know, gives them, you know, a reasonable amount of time.
Yeah.
And certainly we're not expecting at this stage any pressure on those viability ratings for the banks.
Redmond, thank you so much for getting up early to chat with us. Redmond Ramsdale, Head of Middle East Bank Ratings and Islamic Banking at Fitch Ratings. For more of these stories, looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. And coming up, China's economy shows signs of a rebound, even as global risks rise. We'll break down the latest data next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. China's economy is showing signs of resilience at the start of the year. Industrial production and retail sales both came in stronger than expected, and a sign that momentum was improving before the war in Iran roiled the outlook for global growth and inflation. For more, we're joined by Bloomberg's Jill Desus. Jill, let's start with the data. And of course, it is important to just remind everybody that this is the data that was snapshotted before the war started. But how significant is the rebound in industrial output and in retail sales?
Yes, that's right, Jumana. So again, before the war started, but ultimately you did see a pretty surprising uptick there. I think the retail sales figures being stronger than expected, certainly a welcome sign for this economy, given how much they've been under pressure on the consumption front over the past couple of years. I think those industrial production figures probably, sort of the sign of just how well they've been faring as an export machine. Again, I think that's really, sort of the question going forward when you try to consider how the war is ultimately going to impact this economy. One other number I want to highlight, we did see an uptick in fixed asset investment, which is pretty surprising given contracted for all of 2025. So seeing that improvement there does make you kind of wonder whether or not you're going to see any kind of stimulus rolling out in China, particularly over the next couple of months, maybe sort of delay some changes in rates there, just because those numbers are pretty strong. Now, all that being said, we'll have to look to see how exactly the conflict does weigh on the economy going forward. China is sort of more insulated to oil shocks than some other nations, particularly in Asia. But, at the end of the day, this is a global conflict that doesn't really seem to have, signs of an end here. So we'll have to see how that sort of plays into the figures going forward.
Yeah, and it's funny because the war, I mean, not that it's funny, but it's also overshadowed some of the talks that were taking place on trade. Really important discussions happening between U.S. and China in Paris right now. How important are those discussions, and what are some of the key issues that both sides are still trying to resolve ahead of the future anticipated summit between Trump and Xi?
Yes, that's right. I mean, look, I think, there's plenty of things that are at issue here, not the least of which are, things like rare earths materials and stuff like that. But, I mean, these talks in Paris do also come at, it's kind of a complicated time here when you consider that Trump has kind of threatened to call off the meeting with Xi because he's trying to get China on board with this plan to send warships into the Strait of Hormuz to protect output there. I mean, that's something that China really isn't, going to be particularly inclined to participate with. I think, at this point, there's really that question of whether that Trump-Xi meeting goes ahead at all, or if it's delayed maybe toward the end of April or such, just because the conflict in Iran is such a huge cloud kind of hanging over that U.S.-China relationship right now. Particularly when you've got Trump telling other news outlets that he'd be willing to call that off. So I do think that kind of has to enter the calculus for discussions between these trade representatives in Paris this week.
Bloomberg's Jill Desis, thank you so much for giving us the latest on China, both the economic data that was released and those negotiations with the U.S. in Paris. Now for a look at some of the other stories we're following today. Ghana has reduced the levy charged on gold mining to ease the financial burden on producers who face increased payments under the country's new royalty system. The so-called Growth and Sustainability Levy has been cut to 1% of gross production as Africa's leading gold producer moves to a new sliding scale royalty structure tied to global prices. Uganda's main opposition leader has left the country after spending 2 months in hiding following disputed elections in January. Bobby Wine, in a post on X, said he was making a brief trip abroad to handle what he called important work. The singer-turned-politician had rejected the election results, which gave longtime President Yoweri Museveni a landslide victory, alleging widespread fraud. And Rwanda has signaled it could withdraw troops from northern Mozambique, where they've played a central role in securing the Cabo Delgado region. With the EU funding for the deployment set to expire and new U.S. sanctions on Rwanda's defense forces, the future of that security presence is now in question. A withdrawal would pose major security risks for the region, where companies like Total and Exxon are planning major natural gas investments. The war in the Persian Gulf has caused an energy emergency in Asia, with billions of people dealing with gas outages and preparing for fuel rationing. The energy crisis is having a global impact, with prices spiking. The IEA believes it is creating the largest supply disruption in the history of the global oil market. Joining me now to talk more about today's big take is Bloomberg's Alicia Sachdev. Alicia, quite simply, what does this war mean for everyday consumers right now?
You know, what's most striking about this conflict is how quickly it's starting to show up in everyday life. For example, in India, a restaurant chain based in the south of India that I spoke to, and this is a chain that has been around for 60 years, said that it's already cutting menu items, and it's not something it's had to do ever in its history. It's telling diners that they have to return because the staples on its menu are simply not there because of the lack of cooking gas. Some diners are also literally walking out because they just don't find in restaurants what they've come looking for. And again, it's not just restaurants. Wedding guests who've booked wedding venues are not able to serve their guests the entire menu that their caterers promised them. Again, for the lack of supply of LPG. In Western India, a company that I spoke to, which is involved in the business of galvanizing steel for telecom towers, said that the zinc it uses in its factories will not be able to stay molten if it does not get at least the bare minimum LPG supply. And once that shuts off, the factory, which employs about 900 people, will also have to shut off for about a week. So that's really the extent of the impact we're looking at. It's hitting real people. It's impacting kitchens, farms, factories, what you will. And for many people and businesses, it's a crisis that they're seeing for the very first time in their careers and in their lifetimes.
Yeah, and also, I mean, you're just listing some of the knock-on effects to everyday consumers, but why specifically is Asia at the center of this energy crisis right now?
Well, that's because Asia depends heavily on fuel coming out of the Gulf, and most of that supply travels through the Strait of Hormuz, which is effectively shut currently in the aftermath of the conflict. Take India again, for example. 90% of the LPG supply that India relies on comes from the Middle East, and any alternative supplies that may come from the US, for instance, will take at least 40 days to arrive and will cost a lot more, which is why we're seeing impact spread across restaurants, across industrial use cases, for manufacturers of metal, steel, glass, ceramics, and even automotive paint shops, which rely on gas to power their furnaces or heat-fired ovens. And across the region, we're also seeing governments scramble to kind of contain the impact of the disruption. Bangladesh is resorting to fuel rationing. We know Thailand is spending millions every day to keep caps on prices of diesel. Businesses are scrambling to find alternative supplies of gas. So clearly, Asia is at the front line in receiving the impact of this energy disruption.
And just, looking ahead, what is the expectation for how much of an impact this is going to have on the prices that consumers end up paying in the coming months?
Well, as you know, energy prices feed into everything in the economy, and with oil topping $100 a barrel, already we can see that it will become more expensive to move goods, to fly planes, to keep factories going. And the impact is showing up in prices of cars. For instance, in India, I can tell you that European manufacturers, some of them have already raised prices by up to 2%. We're seeing that jet fuel in Europe, for example, has reached record highs. That is translating to high airfares and fuel surcharges that airlines are imposing. Currently, plastics have become more expensive to manufacture because of the petchem input that they use. So toy makers out of China and Vietnam are also flagging higher input costs, which will ripple through the end product and therefore to consumers. Economists say that if oil kind of stays at these prices and gets even more expensive, it could slow down global growth. So the real risk is in seeing how this may perhaps fuel global inflation and therefore impact consumers sort of globally, just when we were already grappling with the tariff-struck economy everywhere.
Yeah, Bloomberg's Alicia Sachev in New Delhi. Thank you so much. And you can read this story and all our previous big takes on Bloomberg.com and the terminal. Just type NI Big Take Go. And just to round up the show with some headlines that are coming through from Emirates Airlines now saying some flights on Monday's schedule have been canceled, but they do expect to operate a limited schedule after 10 a.m. And of course, this is after the Dubai Civil Aviation Authority announced the temporary suspension of flights at Dubai International Airport as a precautionary measure after a fuel depot was targeted. So we'll continue to monitor those developments as and when. That is it for our show. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question. I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. Brent crude trading above $100 a barrel as President Trump demands help reopening the Strait of Hormuz, reportedly threatening to postpone this month's China summit unless Beijing takes part. Military action continues as Donald Trump suggests there could be a deal to end the war, but Iran says there's no reason to talk. Plus, a bumper week of central bank decisions as the Fed, the ECB, the BOJ and the BOE all attempt to weigh the economic fallout of the war in the Middle East. With all that said, then, we have futures pointed higher. But look at Brent. We're trading not that far below $105 a barrel, and WTI is very close to $100 a barrel. This, of course, after the Cargo Island bombings. Now, not the infrastructure to do with oil, but the question is, will Iran retaliate? How will they retaliate? When will they retaliate for those bombings of the military installations? As you can see, the 2-year yield has been creeping higher. It's at 3.70. We'll see what the Fed says later this week, but traders have now priced out any kind of interest rate cut this year. Equity index futures, they're higher today. You wonder why going into week 3 with no end in sight. They might be higher, but it's potentially a holdover effect from the China data, which really put a glow on things in China and in Asia today, and just also this idea that there are some risk-on trades and some risk-off trades happening. If you look at Bitcoin, we're very close to $75,000 a coin, even as gold heads for another day of decline. So it's just really interesting to see this market trade. We also have a little bit of a weaker dollar index today to the benefit of many currencies. Perhaps that's about central banks this week and what they might do. Of course, not just all of those 5 central banks, but there are 22 central banks actually meeting today. But generally, the dollar is stronger. Bloomberg opinion John authors saying today that the window is now closed for Trump to do a taco turnaround, and game theory suggests more escalation from here. All right, your risk events today. We have EU foreign ministers meeting later this afternoon at 12:30 p.m. UK time. Canada's CPI is out for February. And of course, the NVIDIA Global AI Conference. The market often moves on the GTC. The U.S. ramping up pressure then on other countries to contribute to securing the Strait of Hormuz, which Iran has effectively closed to oil tankers. Speaking aboard Air Force One, Donald Trump says he's in talks with 7 countries to get involved.
Really, I'm demanding that these countries come in and protect their own territory, because it is their territory. It's the place from which they get their energy, and they should come and they should help us protect it.
The conflict showing no signs of slowing down. The Islamic Republic carried out retaliatory attacks on Israel and Arab states after the U.S. struck military sites on Cargo Island. Let's bring in Bloomberg's Anthony DePaula in Dubai. So, Anthony, Trump urging NATO allies and China to come and help, to do something in the Strait. I mean, obviously, each is its own sovereign nation and will make its own decisions. But what could they do even if they wanted to, quote unquote, help in some way?
Hi, Vani. Good morning.
That's right. He is asking some of those other nations. We're not sure what the behind the scenes is in terms of the discussions, but that was kind of a call on Air Force One there, as we saw, as well as through some Truth Social media posts, social media posts. So that seems to be how he's making the call most publicly right now. We have seen all these countries band together in terms of trying to keep navigation open through the Bab el-Mandab. That's the strait at the end of the Red Sea. And that had been blocked, as you remember, over the last couple of years by the Houthis from Yemen doing drone strikes, launching missiles, sometimes some attacks in vessels. And so that had really impeded traffic through the Red Sea and up through the Suez Canal, lengthening voyages, adding cost to shipping. And so that was a big issue. A lot of nations had come together with some naval forces there. They weren't fully successful in stopping the Houthis from attacking that shipping. And even at the start of his administration, Donald Trump had a campaign against the Houthis with lots of aerial bombing that, again, also didn't fully resolve the problem. It came to a more diplomatic solution. So we are hearing also some entreaties from some energy buyers who are asking the Iranians to let their ships pass through. We did see over the weekend 2 LPG tankers that were taking that vital cooking oil and chemical feedstock to India. So we have seen some of the countries trying to discuss letting their vessels through. The Iranians have let some of their own crude vessels through, those most likely going to China. So it's really up to the Iranians at the moment, because they are the ones that are putting the threat on the Strait of Hormuz. It would take a major military engagement really to ease that up and to make that really secure, because it's enough to have the threat, as we see from the moment. It's enough to have the threat. It's enough to bomb a few vessels and set an example to show that it can be done for that waterway to effectively be closed. And that's the situation that we're in right now, choking off so much of that oil flow, Bonnie.
So, Anthony, the U.S. strikes on Carg Island put a shiver through oil markets for sure on Friday after the U.S. market closed. It does mark some kind of an escalation, but President Trump was very quick to suggest that they didn't hit any oil infrastructure. It was just military infrastructure. Where should we expect oil prices to head next, given those particular strikes?
Yeah, that was really something on a vital infrastructure asset for Iran. As you mentioned, they hit the military facilities. Of course, that led to speculation that the U.S. was potentially looking at a ground assault of Carg, sending reports that they're sending some Marine expeditionary units over. That would be a difficult task, potentially, given that it's so close to the Iranian mainland. But we did see those main oil export facilities spared, and the Iranians themselves came out and said that ships were continuing to load and ship oil. Speaking with some of the vessel trackers that follow the industry, we saw that there were 2 vessels reportedly at Carg already on Saturday after those attacks. So the Iranians themselves saying they're continuing to use that island. They did strike back, hitting a vital Middle Eastern trading hub in Fujairah in the United Arab Emirates, setting some crude storage tanks on fire there, and that halted operations for the better part of Saturday before they could resume later Saturday, early Sunday. So we are seeing these kind of tit-for-tat attacks, and you know, we talk about red lines, but those red lines are kind of really shifting there. We thought that energy infrastructure was a red line. Carg for the Iranians was a red line, saying that if you destroy our ability to export, we will destroy your ability to export. So far, we haven't seen real material damage to facilities yet. We have seen some facilities knocked offline. The Ruwais refinery, for example, in Abu Dhabi, it's the biggest in the Middle East. A fire was put out there over the weekend after an attack on Tuesday. So that's a long time to contain that fire. Ras Tanura is still dealing with the effects of an attack. That's a Saudi refinery, still dealing with the effects of an attack last week. So we are seeing these facilities hit. However, those are facilities in the Gulf not exporting anyway because we have the Strait of Hormuz shut. So it's a compounding of problems, and the longer we see the Strait shut, the longer those problems will compound for the facilities within the Gulf, as well as the problems on the oil market as prices stay high, as supply is cut off to chemical makers. refiners in Asia, and that just is going to have knock-on effects for the supply chain and for the economy, really. So that's the situation where we are right now, Bonnie.
Anthony, thank you so much. That's Bloomberg's Anthony De Paula there in Dubai. The US and Iran have signalled no end in sight to the conflict, despite President Trump suggesting the possibility of negotiations with Tehran. However, we heard contradictory comments from the foreign minister, who claims Iran has no reason to speak to the Americans.
No, we never asked for a ceasefire, and we have never asked even for negotiation. We are ready to defend ourselves as long as it takes, and this is what we have done so far, and we continue to do that until President Trump comes to the point that this is an illegal war with no victory.
Joining me now is Bloomberg Horizon's Middle East and Africa anchor, Jumana Bercetchi. So, Jumana, mixed messaging between the US and Iran, it seems, still. Do we know what it might take for either side to actually get to some kind of a negotiating table eventually?
Well, over the weekend, President Trump conducted several interviews. One of them was with NBC, where he suggested that Iran were open to negotiations, but that they were not exactly where the U.S. wanted them to be, and therefore the U.S. would have no option but to continue with the war efforts. And then when he was pressed and asked for what the U.S. were looking for in terms of negotiating stance, he failed to provide further details. And it's interesting that we then heard from the Iranian foreign minister. He himself was in an interview with CBS last night, signaling that they have no intention to negotiate, that there are no signs yet of a ceasefire. And as we enter into the third week of this war, it's day 17 today, Vonnie, really no signs of things de-escalating. You were just speaking to Anthony there about the attacks that took place on Karg Island, the U.S. targeting key military infrastructure there, but certainly raises the threshold for engagement, with Iran also threatening to strike back at non-U.S. assets, specifically in the UAE, at ports, at docks, because they claim that the U.S. launched those attacks on Karg Island from the UAE, which is a claim that has been rebuffed completely by the United Arab Emirates. But that is to say that there's no real signs of things de-intensifying. And the Iranian calculus here is that so long as they can continue to inflict economic damage, a damage on oil infrastructure and on the global oil industry, for them, this becomes a war of attrition and one of deterrence, in which they would, in their eyes, deter the U.S. from ever getting involved militarily in a conflict in the region again.
Jumana, take us to some of the other countries that are seeing action here, specifically Lebanon, more sallies into Lebanon from Israel again.
Yes, so this is a front that has been operating in parallel since Hezbollah decided to join in with the IRGC, launching those attacks into northern Israel very early in the early days of the war. In retaliation to that, what the Israeli military did say is they warned residents of southern Lebanon to evacuate, which has led to the displacement of over 700,000 people within Lebanon, and the numbers continue to mount. They've also warned residents of Beirut to evacuate as well, and have begun with a series of aerial strikes over Beirut, different parts of the country too, in the Ba'a, also in southern Lebanon. And this morning, also saying that they have begun a limited ground operation. This is put out by the IDF too. So expanding on what they were saying before, they've started limited targeted ground operations in southern Lebanon. This is the part of the country where they have advised residents to leave. Of course, residents in Lebanon don't have that many options of places to go to. And there's a real risk of a growing humanitarian crisis there. This, as the death toll continues to climb, it's above 800 now per the latest figures released. But what we do know is that there have been several attempts from a diplomatic standpoint to try to bring down the temperature there. The French President Emmanuel Macron has been trying to organize direct discussions between Lebanon and Israel to avoid the scenario of this intensifying further, and to avoid the scenario which some Lebanese foresee could be the foundations for Israel setting up a buffer zone or even an occupation zone in the southern part of the country. And so the diplomatic channels are being worked here, but what we know the latest on that front is IDF are now saying that they have started limited ground operations in the southern part of the country.
Jumana, thank you so much. That is Bloomberg's Jumana Bersachi there. Stocks in Asia have been fluctuating after oil paired gains. Let's get an update from Winnie Su in Hong Kong. So what's the latest, Winnie?
Yeah, morning, Bonnie. We really are seeing a bit of a cautious mood in Asia today. As you just mentioned, MXAP here up just 0.2% after 2 weeks of decline. Now, a bit of a mixed picture when it comes to the stocks with the Kospi here, helped by the tech stocks, but you can see that Japanese stocks are still slightly under pressure ahead of that expected meeting between Prime Minister Takaichi and Trump. And also when it comes to the Japanese yen space, strengthening just a bit with some cautious comment from Finance Minister Katayama that she is urgently watching the moves in the FX space. But overall, it is quite weak ahead, around that 160 level against the dollar. Now, that is also coming ahead of that BOJ policy meeting expected later this week. Now, we also want to flip aboard and take a quick look at the latest number when it comes to China's data. Overall, pretty strong rebound, all beating expectations across the different numbers, specifically industrial production here up about 6.3% for January and February versus the 5% gain back in December. Retail sales also nearly 3% gains for the first 2 months versus just nearly 1% in December. So that really overall sets up China for a good foundation when it comes to hitting its 2026 growth target. But remember, this set of data came before the war, so really we have to assess the further impact when it comes to the impact of the war on the oil prices. Overall market reaction, you are seeing that the CSI 300 narrowing some losses, still some concerns around if the Trump and Xi meeting might be delayed, but we are seeing some bright spots when it comes to the developers and consumers helped by those set of numbers. Back to you, Vonnie.
Yeah, such a surprise this morning. Winnie, thank you so much. Winnie Su there in Hong Kong. One of the world's top central banks convene this week, facing a renewed inflation threat from the war in Iran and the possibility that they'll be forced to delay interest rate cuts and, in some cases, even consider hikes. Let's bring in Bloomberg MLive strategist Mark Cranfield. Mark, bond investors may be looking beyond the Fed even this week. Where exactly is the focus?
Yeah, it could well be that investors look at the Fed and say that their hands are relatively tied. We had recently some pretty weak employment numbers, and on the other side of the equation, the dollar is relatively strong, so it offsets some of the inflation problems for the United States. That is not the case for people like the European Central Bank, Bank of Japan, Reserve Bank of Australia. So starting with tomorrow, we're likely to get a rate hike from the RBA. That's back-to-back hikes if they go ahead. That would be a very strong signal to people around the world that Australia is taking the inflation threat very seriously, that is coming down the line. European Central Bank may sound more hawkish than expected. Again, they have the same kind of situation with oil prices rising dramatically. And the Bank of Japan could well set the scene for an interest rate hike in April. They're not expected to move this week, but certainly with the yen as weak as it is, as Winnie was saying earlier, a hike in April. So the combined picture may well be to investors that it's other central banks, not the Federal Reserve, who are really giving a much clearer picture on how dangerous they see the inflation situation and how quickly they would need to respond in terms of raising interest rates. Also, people are watching the Swiss National Bank very closely as well. Swiss franc is extremely strong, and the National Bank in the past has talked about intervention to weaken that currency, but they again may be in a tight spot here because they have to take into account the Swiss franc is the main haven currency against what's happening in the Middle East. So they're in a more difficult spot as well. Wherever you look, there are very interesting central bank meetings, but the Fed this time is way down the agenda.
It's amazing, Mark. Thank you so much. Bloomberg MLive strategist Mark Cranfield. Still ahead, as Mark was saying, packed week for central banks. We're going to set you up for all of the decisions we're expecting with MFS Investment Management's Pilar Gomez Bravo. That's later this hour. But first, why President Trump is reported to be threatening to postpone this month's planned summit with the Chinese president. That's next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back to Bloomberg Daybreak Europe. The Financial Times is reporting that President Trump is threatening to delay his summit with China's president if Beijing doesn't help secure the Strait of Hormuz. Chinese and U.S. trade negotiators are meeting in Paris ahead of that summit. Let's bring in Bloomberg's China correspondent Minmin Lo. So, Minmin, will China be threatened into helping secure the Strait of Hormuz, assuming that that can even be done, right?
Yeah, well, the U.S. has been asking countries like China to send warships to the region, and I'm sure China will be weighing the risks and opportunities very carefully, because if they do, it would set a very unusual precedent to this situation, because in the past, China has so far been quite unwilling to commit military backing to a conflict that is far away from its political backyard, and so far China's support of Iran has been rhetorical. And yes, about 45% of China's oil passed through the Strait of Hormuz, but bear in mind that China has been ramping up the renewable energy push, and that oil from the Strait of Hormuz only makes up just over 6.5% of China's overall energy consumption. So if Iran has already said that the Strait of Hormuz is only going to be closed to enemy ships, meaning that Chinese ships may be able to pass through safely, then why should China commit to sending warships to the region? So it's not clear whether China will accede to this request, but certainly we're a couple of weeks away from that Trump-Xi summit. A lot of things could change. We will be monitoring to see if there would be any face-saving gestures from both sides to keep that summit intact come April.
Right. And of course, you know, there's preparations ongoing already at the weekend, but also, you know, starting again today, prepping for the summit as if it is going to go ahead. What should we expect, assuming it does go ahead?
So yesterday, the trade envoys from both sides already met for about 6 hours. They did not speak to the media after that, but we are hearing from Reuters, and this is based on their sources, that the meetings were candid and constructive, and it seems like China has been showing some signs of goodwill, saying it is open to buy more agricultural products from the U.S. beyond the soybean purchases that they previously pledged. So that includes things like poultry, beef, non-soybean row crops, for example. The U.S. has been also pressuring China to buy more U.S. oil and gas. So in this case, this is where the U.S. perhaps emerges a winner in the Iran war. They are the largest exporter of LNG. So that's another issue on the table. We're hearing from Reuters as well that the two sides are looking at the creation of technical talks, a so-called Board of Investment and Board of Trade. And these two mechanisms will allow both sides to meet to identify specific sectors and products where both sides can increase trade to rebalance that trade relationship. And the Board of Investment would review and address discretionary investment issues. And this is coming as China has been keen to put more money into the U.S. But in the last few years, they have been facing a lot of restrictions on investment, a lot of scrutiny from the CFIUS committee. And perhaps this talk could maybe pave the way for both sides to mutually invest in each other's countries.
All right, Minmin, thank you so much. That is Minmin Lo there. Plenty more coming up. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and centre.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Some breaking earnings now out of Hon Hai, and the fourth quarter net income was a miss, in fact, although full-year net income did beat. Now, if we look at operating profit, that was quite the beat, reflecting demand from the latest iPhone and NVIDIA servers, of course. So once again, kind of a mixed set of results from Hon Hai. We were looking for profitability to surge, and indeed operating profit did beat estimates, coming in at 85.59 billion Taiwanese dollars. That was about a $6 billion beat. Net income, though, for the quarter missed, although for the full year, again, it did beat. Dubai says some flights are gradually resuming at its main international airport after a drone strike halted takeoffs. The earlier drone attack caused a fire at a nearby fuel tank. The fire was successfully contained and no injuries have been reported. The world's busiest international hub has faced a series of attacks since the war started, regularly disrupting flights. Aluminium Bahrain has started a phased production shutdown at the world's largest single-site smelter. The company, which is known as Alba, is trying to preserve its inventory of raw materials and keep other parts of the plant operating. Alba's move comes as the industry braces for widespread supply blockages. Coming up, has the war in Iran changed the path ahead for interest rates? We'll discuss that next with MSF Investment Management's Pilar Gomez Bravo. In terms of markets on the move, we do see futures pointed higher in Europe and in the United States. The dollar index is now back to flat as we get a little more trading online. Brent crude, though, still very close to $105 a barrel, followed by WTI. And gold has flipped now. It is positive to the tune of 0.2%. This is Bloomberg.
Up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gurray.
I'm Lisa Mateo. And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got
got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. Brent crude trades above $100 a barrel as President Trump demands help reopening the Strait of Hormuz, reportedly threatening to postpone this month's China summit unless Beijing takes part. Military action continues as Donald Trump suggests there could be a deal to end the war, but Iran says there's no reason to talk. Plus, a bumper week of central bank decisions as the Fed, the ECB, the BOJ and the BOE attempt to weigh the economic fallout of war in the Middle East. This market is going to attempt to weigh that again as we are now fully in week 3 of a war that many thought might be over by now. Brent crude trading just below $105 a barrel and WTI following behind very close to $100 a barrel. It was below $65 a barrel literally 3 weeks ago, so it is quite the stunning move. And the attacks on Carg Island not helping, even though apparently no oil infrastructure was hurt. But there is the question of whether Iran is going to retaliate, how and when it might retaliate as well. Brent crude up 70% year to date. John Authors of Bloomberg Opinion saying the window now for an easy taco exit for Trump is closed, and that for all that he wants a brief war, the game theory is actually pointing to an escalation. We also have central banks obviously meeting this week, and that 2-year yield has been rising. Obviously, we're down just a basis point there at 370 this morning. In terms of futures, we're higher into Europe and the United States. We'll see if that sticks. We also have Bitcoin higher as well, and the dollar index very slightly lower. Time now for your front page news. The Financial Times leading on President Trump warning NATO faces a, quote, very bad future if allies fail to help the U.S. in Iran. The U.S. president also tells the FT that the China summit could be delayed if Beijing doesn't help secure the Strait of Hormuz. The Wall Street Journal splashes on a top Apollo executive sounding off on, quote, the arrogance in private markets. Discussing the software sector, Apollo's John Zito reportedly saying, quote, I think private equity markets are wrong. And Les Echos leads on the latest on the French municipal election results, with the socialist candidate winning the first round of the Paris mayoral vote, while in Nice, Marine Le Pen's far-right candidate won the election's first round there. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to Go. President Trump has told the Financial Times that NATO would face a, quote, very bad future if member states fail to help shipping in the Strait of Hormuz. The paper says EU foreign ministers are considering plans to widen an existing naval operation to include the crucial shipping channel. Oliver Crook, Bloomberg's chief Europe correspondent, joins us from Brussels. Ollie, how serious is the issue of access to the Strait of Hormuz for NATO, given these comments by President Trump? And, I mean, what can it do?
Well, I think that's the big question, Vonnie. Yet again, another day, another week where President Trump threatens the NATO alliance in some sort of abstract but very sort of meaningful way. And now foreign ministers who are assembled here in Brussels a little bit later today to try to figure out what the impact is going to be of Iran domestically on Europe, and as a consequence, what their response should be. This will now top the agenda without a doubt. There is the sort of EU naval mission that already exists sort of in the area. It is meant to safeguard the Red Sea, the passages there due to the Houthi attacks that we had over the last couple of months. That is an EU mission that's currently active. That's one of the issues that they're going to discuss today, on whether or not to expand that mission and potentially divert some of those energies over to the Strait of Hormuz. But of course, now this quote from Donald Trump in the Financial Times saying it's only appropriate that people who are the beneficiaries of the straits help make sure that nothing bad happens there. If there is no response, or if it's a negative response, I think that will be very bad for the future of NATO. We know that President Trump is trying to enlist more aid from other countries like the UK, France, South Korea, Japan, China, and trying to get that waterway reopened. But it poses yet again all these sort of new questions for NATO. Is the conflict in Iran really a sort of NATO problem, a NATO question? On Friday, I think the answer to that question was no. On Monday, it is now going to be an active debate for the ministers that assemble here today. We should also say that, of course, NATO was not consulted before this all kicked off, and they're now potentially being dragged in some sort of way. So again, this is the sort of conversation we're going to have among ministers. The other thing that they're going to be very focused on, Vani, in addition to obviously the increase in energy prices, is the question of Ukraine. There is a lot of fear here in Europe that basically Ukraine is being left out in the cold, and that is a fear that has been reinforced by the Prime Minister of Belgium, who gave an interview over the weekend to Les Echos in French, saying that we must end the conflict in Europe's interests without being naive about Putin. That's a mistake that we must never repeat. We must rearm and remilitarize. And at the same time, we must normalize relations with Russia and regain access to cheap energy. Now, that is a position that has been held by some of the more fringe EU countries, like, say, Hungary, to now have the Belgians coming in, weighing in with that sort of what they will call a more pragmatic approach, with what some other European nations will call a sort of betrayal of the sort of main line on Ukraine, is going to be a big conversation as we lead to that European leaders meeting on Thursday and Friday here in Brussels.
Yeah, that series of meetings being held in Brussels this week, Ollie, the EU energy ministers are gathering today, as you said. What measures could they consider? I mean, has the calculus now changed now that Trump is sort of threatening even the EU countries?
Yeah, I think it's going to be a very active discussion for EU energy ministers. I mean, these are meetings that we don't usually closely watch unless there is a crisis, say the sort of invasion of Ukraine and the energy shock that sort of derived after that. There are now a lot of different conversations happening at the EU level about potentially subsidies to the energy sector, subsidies to the gas prices, a cap on gas prices, all of these sorts of things. Some of these measures were rolled out around the energy crisis around Russia, but were never actually implemented. These are going to be the active discussions that we have today. We'll try to get a couple of questions to the energy ministers as they walk in. One of the main things they're going to be discussing is this European trading system, the emissions trading system, which basically is an effective trading system on carbon output. For many countries within Europe, a number of them, including Italy and some others, that is effectively seen as a tax on the energy system. So there's going to be some debates on how to tweak that. And this all, Vani, in order to try to dampen some of the influence that we've been seeing on the energy prices that have been rising as a consequence of the Straits of Hormuz and the war with Iran. We should say that not much of the LNG that comes to the European side is from Qatar, but we should also say that the Europeans are much more dependent today on LNG than they were before the war with Russia. So any disruption to that market is going to have a major effect, and 2/3 of energy generation within Europe is still from fossil fuels. So again, it's going to be very active in the sort of discussions and ways to try to dampen that as we see inflation going to presumably tick up higher over the next coming months.
Well, Oliver Cook is going to be monitoring all that for us. He is Bloomberg's chief Europe correspondent. Thanks, Ollie. And next hour, Oliver will be speaking with Lithuania's foreign minister about NATO's response to the Iran war. That's at 7:30 a.m. London time. Spain's Conservative People's Party has won its third regional election in as many months, while Prime Minister Pedro Sanchez's Social Party also posted a strong showing. The People's Party won 33 seats in Castile and León's 82-strong legislature, with almost all votes counted, with the Socialists increasing their tally to 30 seats. The election was the first vote in Spain since the outbreak of the war in Iran. In France, socialist candidate Emmanuel Grégoire has topped the first round of the Paris mayoral election as the left seeks to extend its quarter-century rule over the French capital. Grégoire won about 38% of the vote, setting up a high-stakes runoff for next weekend. In Nice, France's fifth-largest city, Marine Le Pen's far-right candidate won the first round with 43% of the mayoral vote. Interest rate decisions by major central banks will take centre stage this week as policymakers assess the economic damage caused by the first 2 weeks of the conflict in the Middle East. With me now is Pilar Gomez Bravo. She is co-CIO for fixed income at MFS Investment Management. Pilar, have you started to make any kind of portfolio adjustments in the last 3 weeks, or were you and are you waiting to see?
What we did some of the adjustments actually before the war started in anticipation, knowing that the ships were underway. So we did things like buy some 2-year inflation swaps in the U.S. to protect us for potential moves higher in inflation expectations, in particular because of oil. We also bought credit protection through derivatives in our portfolio to protect for any hiccups that could actually, we started doing that, frankly, when the Greenland news emerged. So
wow.
For quite some time, just in anticipation of more risk. And more recently, post the war broke out, the things that we've been doing is using liquid markets. So, for example, reducing the underweight that we had in the U.S. dollar, shifting a little bit of our duration exposures across the countries, reducing exposures to, for example, European rates markets in general because of the moves that we were expecting.
Wow, so you really anticipated that something would come of all this, even as the market sort of dismissed some of it, frankly, as a potential taco trade.
I mean, I think that we've seen since Liberation Day some of the impacts that crowded trades can have. So the easiest thing is to adjust kind of expectations in your portfolio around these very consensus positions. So what were the most consensus trades, Vonnie? So underweight dollar, very big positioning in underweight dollar. So that's one of the first things that we did when the war broke out, is to cover the underweight. Credit curve steepeners. Everybody thought that the front end of the curve, central banks were going to cut rates, right? So we reduced a little bit of those credit steepeners, curve steepeners that we had in the portfolio.
So if you were, well, you weren't early as it turns out, but if you were earlier than some, when will you start unwinding some of those trades, or beginning to sort of say, okay, maybe we have enough profit here?
Yes, we've been looking at, for example, spread markets. So we don't feel that certainly enough of the growth impact that we're sort of seeing from higher oil prices is being recognized in credit markets yet. So we haven't rushed in to add any credit sectors into our portfolio. We're just kind of adjusting maybe some of the sectoral exposures in things that have become a bit more dislocated. With rates, for example, in terms of which markets we'd be looking at, we're waiting to sort of see kind of the U.S. price out any cuts at all this year in order to potentially add duration in the U.S. Again, in the U.K., it's the same thing. In Europe, we don't think that the central bank is going to hike rates. So if we continue to price in more hikes, then we might start getting tempted to buy back some of the duration we sold.
So when does the ECB hike? And, you know, on that line, at what point does the market price out completely any interest rate cuts from the Fed this year? I mean, it basically has at each next meeting, but, you know, just overall.
Yes, I mean, I think that the reality is that there were two large central banks were kind of late to the game in terms of cutting rates, so the US and the UK. And what we've seen is a dramatic shift, especially in the UK, to price out any sort of cuts. I think in the US, we still think that those cuts are delayed rather than suspended. But we're going to have to wait probably until the second half of the year to sort of see, you know, obviously how long this war lasts and the impact on oil markets, but more importantly, inflation expectations. Now, the ECB is going to meet. It's really difficult for the ECB to out-hawk the markets, given that almost 2 hikes have already been priced for this year. So I think that the word is going to be vigilance from most central banks that are coming in, rather than sort of hinting at very quick hikes, given kind of this is a supply shock.
Pilar, it seems to me that if we had some other kind of private equity headline, that might tip this market into disarray. I mean, at the moment, we're fairly orderly. I mean, there were times when we were looking like we might tip, but it has been pretty orderly. Are you looking for any kind of private equity headline, and how are you reflecting that in your day-to-day activities?
Yes, I mean, I think that the problem we have right now is that, and this is kind of why, you know, we finally realize again the value of active investing, is that you have 3 elements that are basically colliding at the same time. There's obviously the war, there's private credit concerns, and on top of that, there's the AI capex binge, basically. And these 3 things are coming head to head at the same time in terms of markets. So the private credit elements are really reflected in high yield markets and leveraged loan markets, and potentially in banks. The AI capex market is impacting supply in investment grade markets in the US in particular, posing concerns as to how much these markets can absorb. And, you know, second derivative would be impacting investment grade emerging markets, for example. And of course, the war is impacting commodity sectors, transportation, real estate, given the impact on higher potential rates expectations. So we are concerned that the markets maybe can handle one at each time, but the 3 of them at the same time, if this lasts, I think can continue to put pressure in sort of risky assets in general.
That could be a very, very nasty situation. Which do you prefer, the data center trade, which, you know, might pay you a little more, or the hyperscaler trade, which might pay you a little less, but if one goes down, maybe they all go down?
Yeah. We're actually more interested, funny enough, in sort of some of the structures that we're seeing in the high yield market in the US. These are double B structures that are directly linked to a data center build out, a little bit like a project finance. But these are like 5-year bonds guaranteed pretty much by the hyperscalers' leases. So in a way, you get better risk-adjusted returns, even though you're going down the quality spectrum than just buying unsecured debt at the hyperscalers. So in a way, I think there are opportunities, especially in markets that are new. So again, sort of data center financing is relatively new, both in high yield as well as in structured credit.
Amazing. Pilar, thank you so much. Come back soon. We want to know when this is all going to be over, and you guys seem to know. Pilar Gomez-Bravo, co-CIO for fixed income at MFS Investment Management. China surprises with an unexpectedly strong start to the year. Details next. This is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question. I mean,
I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Economic data out of China has surprised to the upside, with industrial production growing at its fastest rates in September. Retail sales also rose, while fixed asset investment expanded unexpectedly after contracting for the first time ever last year. Let's get more from Bloomberg's China Bureau Chief, Charlie Hsu. Charlie, quite a turnaround from 2025. Why was the performance so good?
Yeah, the numbers all look very strong. You know, as mentioned, industrial output, retail sales, and fixed asset investment all beat expectations. And the financial markets, you know, reacted quite positively to the data. This morning, stock market, you know, trimmed losses, currency strengthened against the dollar, and the bond yields rose a bit. So in general, the investors, you know, like to see the number. But the reality is, you know, we are just only, you know, like 2 to 3 months into the new year. It's probably too early to tell, you know, how the growth prospect, you know, will look like, you know, for the rest of the year. And the spokesman of the National Stats Bureau, you know, said the first 2 months, you know, economic performance will pave way, you know, lay a solid foundation for, you know, China to realize its economic target for this year. But you know, it remains to be seen, you know, whether the consumer recovery we saw in the first 2 months of data, you know, can sustain, especially given the country's property market, you know, is still not out of the woods yet. You know, as you can notice, you know, the price slump is still continuing, although you know it has eased a little bit, you know, from the previous quarter.
Now, China is quite sufficient, you know, when it comes to oil and so on, self-sufficient, I should say. But there are risks ahead given the war in Iran. What are you most looking out for, Charlie?
The Definitely. China, over the past few years, has done a lot to beef up its energy security, and the great expansion of the renewables, industry. That would mean China will be probably less vulnerable to any oil price shock from the current war in Iran and the Middle East. But the thing is, China remains exposed to global economy. If the war widens and cause damage to the global economy, there will be implications for its exports, which has been a growth engine for China over the past year. And also there's some geopolitical risk related to that. As you may have read the news this morning, Donald Trump, U.S. President Donald Trump, was saying he can consider delaying his summit with Xi Jinping in Beijing later this month if China doesn't help the U.S. secure the Strait of Hormuz.
All right, Charlie, thank you so much. Bloomberg's China Bureau Chief, Charlie Zhu. The Swiss government is set to decide in April on how much additional capital it wants UBS to hold. This as the administration finalizes new regulations following the collapse of Credit Suisse. According to a local newspaper, the Federal Council will determine new rules for the valuation of intangible capital and decide on a proposal for capital banking of the lender's foreign units. The new rules are due to come into effect from the start of 2027. According to a national poll, Swiss voters are in favour of squeezing wealthy residents with higher taxes to fund the military and pensions. More than two-thirds support the idea of levying a federal wealth tax of 0.33% on assets above 5 million francs. Lawmakers have already proposed a sales tax increase to fund extra spending. One battle after another won 6 Oscars, including Best Picture, delivering a long-awaited win for the veteran filmmaker Paul Thomas Anderson. There were also awards for Sinners and for Hamlet. Michael B. Jordan won the Best Actor award for his performance in the American horror film Sinners, while Jessie Buckley took Best Actress for portraying William Shakespeare's wife. Netflix's K-pop Demon Hunters won Best Animated Film. Plenty more coming up. This is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. The Fed decides.
Here we go again. Jay Powell only has 2 more of these meetings on the calendar.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
The potential risk scenario for the Federal Reserve is simply that they remain on hold for longer.
Certainly the Fed is no longer cutting.
Prices are going to go up. You might begin to see even more upside pressure on inflation from an already pretty bad starting point.
Is this too highbrow today?
Tune in to Bloomberg Surveillance. The Fed decides.
Well, certainly the cavalier, non-serious way in which President Trump, Secretary Hegseth, and others have talked about this war. We had Secretary Hegseth talking about no quarter, which is basically a military term for no survivors, kill everybody. I think that attitude has really undermined our ability to build support and move forward. It's far from the largest problem with this war.
President Trump is ensuring that Iran cannot have a nuclear weapon. That is paramount. And all of my Democratic colleagues, including Adam Smith, just said, oh, I hope it works out. I hope we get regime change. I hope. Well, hope is not a strategy. And you actually have to be willing to take action. And that is the fundamental problem and why Barack Obama's attempts at this and Joe Biden's attempts at this have failed so miserably, because hope is not a strategy.
U.S. Representatives Adam Smith and Mike Lawler speaking on Bloomberg this weekend. All right, let's take a look at some charts to set you up for what is now firmly the 3rd week of war. Dollar extending its sharp rally. We've seen that for the last number of weeks. The dollar has been the only risk on trade, really, that you can count on. Slightly lower today, of course, versus some of its trading partners, but it is a huge week for central banks. And I'm thinking you can continue to expect that dollar to go higher. A world of hurt, of course, for emerging market currencies. Really everybody from Japan to India to Indonesia, many of whom have already intervened in the currency markets, many of whom were thinking of intervening, and some of whom have verbally intervened, including China. Let's take a look at the Mag 7, because we have entered a technical correction now for the Mag 7. And as you can see, it's just been a bit of a bloodbath over the last couple of weeks. Now, that said, overall, the indices are not hugely off their peaks. So the Nasdaq, for example, it's around about 7% off its all-time high. But the Mag 7 is definitely not helping. And then let's take a look at some credit indices, because it looks like investment-grade credit is cracking just a little bit. So we have oil prices, we have a flood of new supply, and we have CDSs just driving ever higher. We were speaking earlier with MFS Investments, and they've been making adjustments since before the war, since Greenland, actually. A little bit of breaking news now. We have UniCredit offering to buy Commerzbank via an exchange offer. So that would be a fascinating deal. UniCredit offering to buy Commerzbank. Coming up, Bank of America's president of International, Bernie Mensa, will be on the pulse. That's at 9 a.m. London time. You don't want to miss that interview. The opening trade is coming up right here, right now, so stay tuned. This is Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have
significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. It's Monday, March the 16th. Here's what's on the agenda. President Trump wants help with the Straits of Hormuz. How will central banks characterize higher oil prices this week? And UniCredit offers to buy Commerzbank via an exchange offer.
Good morning, Anna. It's a brighter start to the week this week. We have futures pointing higher on both sides of the Atlantic following gains in the Asia session, modest gains. And as we look to oil, it's still above $100 a barrel. Traders reacting to the US attacks on Kharg Island, Iran's main export hub, but drawing some comfort, it seems, from Iran's foreign minister, saying that the Strait of Hormuz is only shut to ships from enemies. Also helping the mood this morning, a decline in the dollar. It had ended last week at its highest level this year, but the Bloomberg Dollar Spot Index now down more than 0.1%. The countdown to the opening trade starts right now.
Good morning. So for the oil markets, we are in that third week of conflict when it comes to the war in Iran. And the focus really is and continues to be on the Straits of Hormuz and the decision by President Trump to reach out to those allies and say, we need help. That suggests to some that this is an administration, this is a US military, that cannot on its own reopen the Straits of Hormuz. They are reaching out to those allies. And so far, the response from Japan, the response from Australia has been a no. We'll see what happens to other allies. The UK is considering the offer. But even if they say yes, it will take time. And for me, that is one of the clearest takeaways. The US cannot, it seems, on its own, with its own naval capacity, reopen the Straits of Hormuz. The second part of the oil focus is what's happening in terms of Kharg Island. And this is the export terminal for Iran. 90% of its exports ultimately go through this island. The military assets, Iranian military assets, it seems have been destroyed by the US, but not the oil infrastructure. How does Iran respond? And where does the US go from there?
Yeah, it's interesting because I'm not sure where the call on allies to participate fits into our understanding of risk on and risk off and the duration of this conflict. And that's the lens that every bit of news is being explored via, isn't it? But it does seem as if the markets are not greeting all of the weekend's developments around Iran in a kind of crazy risk off fashion. Certainly European futures are pointing higher. Oil prices are a little bit stronger, but only up by 1%, which in the context of recent moves, they've been up higher, but since faded a little. And I'll add into the mix of not signs of off-ramps, but things that the market is considering on the other side of all of the tension. India got some LNG cargoes through the Straits of Hormuz. So that speaks to Iran's point that it isn't shut for everybody. It is shut for most of the West, it would appear. Yeah,
one other piece of good news is that oil loading at Fujairah, this key port in the UAE, has resumed after a drone strike and fire there. We had seen Dubai's main airport halting flights after a drone strike caused a fire. Flights, it seems, are resuming gradually there as well. Coming back to what you said about Trump calling on allies to help reopen the Strait of Hormuz, Tom. In particular, he's calling on European allies to help there. And we've got EU foreign ministers discussing the idea of expanding the bloc's naval mission from the Red Sea to the Strait of Hormuz when they meet today. But really, no officials saying that a decision is going to be imminent.
And he's certainly calling on China to do more, isn't he? And giving a short interview to the FT where he talks about possibly pushing back that meeting with Xi if there isn't any assistance. And we're watching for the Foreign Affairs Ministry to see if we get any further commentary from China on that front.
Well, let's come back to China because we've had some data out from them overnight. But I do want to just briefly talk about the wider market reaction here because we've touched on oil. Gold has been down near $5,000 an ounce again. And as I say, futures higher on both sides of the Atlantic today. Maybe a bit of optimism. It feels like traders are latching on to anything that they can be optimistic about here. But it is a better start to the week. Treasury yields a touch lower across the curve. Last I checked, still there. But, you know, Treasuries are raising all their gains for the year because of the inflationary action. It's a massive week for central banks this week.
It's a huge week for central banks. Before we get to the central bank reaction to this, is this still a market that is pricing in oil disruption versus an oil shock? The IEA saying this is potentially the biggest oil supply shock in history, potentially the biggest oil supply shock in history. The betting markets, Polymarket and others, are betting that the odds on this conflict coming to an end are below 50% by the end of May. So the betting markets do not see this conflict coming to an end potentially far out into beyond the end of May. So how the markets react? Are we still seeing complacency in these markets?
And how are central banks going to react to that? Because where we have seen reaction in markets is pricing in either no cuts or more hikes coming through from all kinds of global central banks. And they will be in focus this week as we will be trying to understand from them, how is this like 2022? How does this threaten to push up prices for many Western economies? And how is it not like 2022? Should you look through this and say it's transitory and it won't have second-round effects? Certain economies, and I think about the Bank of England and the UK in this regard, certain economies, the underlying dynamics of the economy are a little bit weaker this time than in 2022, and perhaps that changes the reaction function.
Yeah, we spoke to Emma Moriarty on Friday saying that the BOE needs to look responsive. It needs to keep inflation expectations anchored, but there's a real risk that it makes the demand problem even worse. You could argue that Treasuries right now are focused on inflation, Tom, but maybe it is growth that they need to be focused on down the line, and this is where the difference between having a single mandate and a dual mandate really comes into play.
For some, this will be an opportunity. There's a lot of dislocation in markets right now. Could we see M&A put on hold as a result of all the market turmoil? Could we see more M&A happening in certain specific areas? And it's certainly the latter that catches our attention today as Italy's UniCredit makes a takeover bid for Germany's Commerzbank. So this is a late addition to our agenda this morning, breaking just 6 or 7 minutes ago. But UniCredit has made a takeover bid for Commerzbank, presumably triggering a protracted fight for the German lender, because we know that the politics in Germany has pushed back against this in the past. There's certainly been noises out of Berlin that have not been entirely favourable to this. But here's Orchel coming back once again with another attempt to take over this lender. And cross-border M&A, still such a difficult thing to get done in Europe.
And it comes to the question about banking union, and it comes, of course, to the domestic politics of Germany, to your point. The context is, of course, that UniCredit has already a 26% stake in Commerzbank. And to your point, the German government have made it pretty clear repeatedly that they oppose a takeover by UniCredit. So we'll see the response to that. But this is obviously a significant move once again from UniCredit and from Orchel in terms of building out that stake, taking a full takeover in terms of this potential bid, this bid for Commerzbank now. And the latest coming through from UniCredit. Yeah,
UniCredit indicated lower on TradeGate this morning. Interesting that the share price of Commerzbank has risen more strongly than UniCredit ever since that original possibility of a takeover bid. So we'll watch both at the open.
Yeah, and we'll certainly, absolutely. We'll look to see if Commerzbank jumps again on this. Let's tell you what else is coming up on the programme. Lots of really interesting conversations with our guests. Andy Briggs will be with us, the CEO of Standard Life. So we'll talk about the investment climate here in the UK. Private credit might get a mention. Insurance certainly finally in focus. Valerie Noel, C's trading head, will be with us. We'll also talk to the CEO of Statkraft, that's Birgitte Vartdal. That conversation a little bit later on renewable energy, gas. How are we evolving our understanding of the future energy mix for Europe as we go through yet another energy crisis? We'll also be hearing from Axel Igert, who is the European Steel Association Director General. That conversation coming to us a little bit later on in the programme.
Let's also take a look at what else we're watching throughout the week. Today we have US-China talks in Paris, continuing from yesterday. We also have the NVIDIA GTC. This is known as the Super Bowl of AI, the GPU technology conference. The CEO of NVIDIA, Jensen Huang, delivering a keynote speech. Then tomorrow we have the RBA rate decision, one of the few central banks expected to actually move this week, a back-to-back hike expected. We also have President Trump hosting a bilateral with the Irish Taoiseach, Michael Martin. And then on Wednesday, the Fed rate decision, before on Thursday, the BOE, the ECB and the BOJ making their own rate decisions. We also on Thursday have Japanese Prime Minister Sanae Takaichi visiting the White House. And then on Friday, it is the EU Leaders Summit. Full coverage from our European correspondent, Oliver Crook.
We're hearing from the EU's Kaja Kallas on that point, saying we have to discuss how to keep the Straits of Hormuz open. Again, how Europe responds to this. Will Europe be pressured by President Trump, who says that NATO could face an issue if European allies and NATO allies do not help the US in terms of trying to open the Straits of Hormuz. We continue, of course, we're seeing live pictures right now of the top foreign affairs official of the EU, Kaja Kallas, speaking there ahead of this summit.
Yeah, and the other thing that will be on the agenda is how Russia is being treated in the context of the Iran war. So Kaja Kallas also saying that the US move on Russia oil sanctions is a dangerous precedent. And so far, Europe has been very united in pushing back against any suggestion that it will follow the United States in taking the edge off or reviewing or reducing any of the sanctions against Russia.
Yeah, there's been pretty uniform objection to that across Europe, to the response by the US to relax some of those sanctions on some oil, Russian oil, on those cargo ships currently floating on the oceans, and the fact that that could end up supporting, of course, Moscow and increasing their revenues around oil. Here's what else you need to know this morning. Dubai's Civil Aviation Authority has announced the gradual resumption of some flights to and from the city's international airport. Earlier flights were halted after a drone struck the facility, causing a fire at a nearby fuel tank. The world's busiest international hub has faced a series of attacks since the war started, regularly disrupting flights. In France, socialist candidate Emmanuel Grégoire has topped the first round of the Paris mayoral election as the left seeks to extend its quarter-century rule over the French capital. Grégoire won about 38% of the vote, setting up a high-stakes runoff for next weekend. In Nice, France's fifth largest city, Marine Le Pen's far-right candidate won the first round with 43% of the mayoral vote. And one battle after another has won 6 Oscars, including Best Picture, delivering a long-awaited win for filmmaker Paul Thomas Anderson. Michael B. Jordan won Best Actor for his performance in horror film Sinners, while Jessie Buckley won Best Actress for portraying William Shakespeare's wife in Hamlet. Netflix's K-pop Demon Hunters won Best Animated Film.
Coming up on the programme, EU foreign and energy ministers are set to meet today to discuss the fallout from the Iran war. That coming ahead of that EU leaders summit that takes place later on this week. We will go live to Brussels and we'll be hearing from the Lithuanian foreign minister as President Trump warns NATO would face a very bad future, in words he gave to the FT, if member states fail to help shipping in the Strait of Hormuz. But up next, we'll be joined by Robert Dishner, head of trading for London at Neuberger Berman, as European governments turn to thoughts of what they can do to help their electorates. How much money do they have for that kind of activity? If you have questions, if you want to get involved in our conversations, IB plus BBTV Go. That is the function to use this morning.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. The Fed decides.
Here we go again. Jay Powell only has 2 more of these meetings on the calendar.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
The potential risk scenario for the Federal Reserve is simply that they remain on hold for longer.
Certainly the Fed is no longer cutting.
Prices are going to go up. We might begin to see even more upside pressure on inflation from an already pretty bad starting point.
Is this too highbrow today?
Tune in to Bloomberg Surveillance. The Fed decides.
I'm demanding that these countries come in and protect their own territory because it is their territory. It's the place from which they get their energy, and they should come and they should help us protect it.
President Trump speaking there, we could just about hear that, make it out, but talking about the need for others to come in and support the United States in his view. He was aboard, of course, Air Force One. Let's get to some breaking news. A red headline on the Bloomberg terminal tells us that the UAE's Fujairah port has been hit and there's been damage that is being assessed. This is according to people familiar talking to Bloomberg. So we'll look for further details on this. Let's go to our Bloomberg Horizons Middle East and Africa anchor, Jumana Basechi, who's in Dubai. Any thoughts on this, Jumana? Because, of course, the port of Fujairah had been taking on outsized importance of late, and there's a lot of focus on any kind of attacks on infrastructure that are for the energy markets.
Yeah, absolutely. It is one of the most important refueling hubs around the world. Very strategic port for the UAE as well. And I should say that it's on the eastern side of the Strait of Hormuz, so it's after the Strait of Hormuz on the Gulf of Oman. But if these reports are true, and indeed Bloomberg sources are indicating that the Fujairah port has been hit again, the damage is still being assessed, this would be the second such strike on this same port over the course of the weekend. Another strike took place on Saturday. It caused a significant amount of fire, limited damage because by the end of the weekend, the port had resumed operating. But this would be a second attempted strike if indeed confirmed. We don't have a formal notice yet from the Fujairah media office. But I think, taking it in light of the most recent developments in the region, you have to recall that on Saturday morning, the U.S. struck Karg Island, which is an extremely important strategic site for Iran. 90% of its oil gets processed through there. Now, even though the U.S. specifically struck military infrastructure, not oil infrastructure. The reaction from Iran came very swiftly. And they said that any non-US assets in the UAE could now be deemed targets because in their esteem, they believe that the US launched those strikes from the UAE. This is a claim that has been rebuffed by the UAE authorities over the course of the weekend, saying that it is not founded in logic. And yet, throughout the course of the last couple of days, we've seen Fujairah targeted. This morning, also an incident around Dubai International Airport. A fuel depot was hit as well. It briefly led to the suspension of flights. Air travel disrupted once again, though things have resumed now. But it just tells you that things are not de-intensifying or de-escalating. And even though President Trump signaled over the weekend that Iran are willing to negotiate, we actually had commentary from the Iranian foreign minister. He gave an interview to CBS last night saying that they are not ready at all for a ceasefire. They're not ready to come to the negotiating table. And at the same time, they recognize that they still have very strong leverage over the Strait of Hormuz, despite the Trump administration's efforts to do what they can to reopen the strait. So we're still very much in this standoff position between the US and Iran as the conflict continues to escalate and even strike non-US assets around the UAE.
OK, Bloomberg's Jumana Pasechi on the ground for us in Dubai with that update. Jumana, thank you. Let's get a broader take on these markets now and bring in Robert Dishner, Senior Portfolio Manager and Head of Trading for London at Neuberger Berman. Robert, good morning. Thank you for joining us.
Thank you.
Should investors start to price not for inflation, but for a growth hit?
Well, that's the exact right question. I mean, this is what we saw in 1990, in 2011, 2008, when we had these bigger increases in oil prices. And then you have the combination of higher commodity prices and potentially higher rates. We've seen rates increase dramatically over the course of the past 2 weeks, going from cuts to hikes in the UK, going from no cuts to hikes in Europe. So there are growth elements here that are quite different today than they were in 2022.
Where is your thinking in terms of pricing in 2 hikes for the ECB, pricing in 1 hike for the BOE, pricing in a single cut for the Fed? Does that seem like the right response, or are markets getting ahead of their skis?
Markets probably getting ahead of their skis a little bit. Just think about it. 4 weeks ago, we were talking about a paper how AI is going to destroy every job there is out there, and inflation and is going to be lower and these type of things. And since that time, we've gotten a jobs report that's negative in the U.S. We've gotten German factory orders that were quite negative, German industrial production that's been fairly negative. So are you sort of, increasing those growth headwinds by being aggressive if you actually go through with some of these hikes, as opposed to maybe just watching and seeing what happens? But you look at the commentary thus far from the ECB, it's almost a mirror image of what they were saying in July 2008. And we all know how that ended. And finally, this weekend, we're starting to get a few more stories comparing this, that this really isn't 2022.
OK, help us understand that a bit more, Robert. Good morning to you.
Thank you.
What is the mistake that you think the ECB might make?
Well, think about it. So in 2022, we still had mask mandates on airlines. I had to take a COVID test before I flew back to the U.S. Balance sheets
remember it well.
Balance sheets were, both at the corporate and at the household level, very strong, right? Spending really hadn't rebounded all that much yet from that period of time. At this point in time, we're through the cycle. This is late stage. And then on top of which, we have the impacts of AI, what that means for longer-term inflation expectations. And if you make... So
does that mean that weaker growth environment, then, you're suggesting now?
Correct.
Weaker backdrop in terms of growth. So does that mean that the risks of a spike up in inflation are lower? Sure, we get higher oil and energy prices, but we don't get necessarily the secondary inflation.
Well, that's exactly right. Will we see this services inflation continue to carry through, which, to be fair, has been somewhat sticky? We just saw the higher print due to the Milan Olympics, those type of things. But again, if growth does slow, inflation will move lower.
Robert, you touched on the UK. We've seen yields up since the start of the war, and the government talking about how it's going to support households through the energy crisis. How much would the bond vigilantes actually tolerate here? I'm thinking about the fuel duty unfreeze that was promised in the autumn. It seems highly unlikely that that'll be coming.
Yeah, the UK it's a bit of a tough thing. Now, the one thing that happened is borrowing in the UK has actually been less than what was forecast. So is there some room? There's not a lot of room, but is there some things on the margin the UK can do? The UK can't do big grand programs like they did in 2022. Otherwise, you may see it. The other thing is, where does this funding happen? Does this happen in bills, or does this happen in longer-term debt? If it happens more in bills, the impact probably a little less severe. In longer-term debt, maybe more severe.
The betting markets do not see an end to this conflict until potentially May, potentially the end of May, potentially pushing into June. What are the market implications of that? How would you position for that scenario? Where would you find hedges? Where would you unwind?
Sure. So what we're seeing is the longer this lasts, think about it, yes, inflation will be higher, but also the bigger hit on growth, right? This is both, we didn't talk about the impact on food prices. If we've looked at what's been going on with corn, soybeans, wheat, sugar, fertilizer prices, all these things are moving up. So these are already headwinds to growth, let alone healthcare costs that have been increasing in places like the U.S. And what we'll see is, and that's why this week is important, we have, 8 of the G20 report central banks this week. How are they seeing that, and what's their response going to be to those events? But again, sooner rather than later is what everyone's hoping for, and we're sort of hoping that the betting markets are wrong here.
So at what point do you see that inflection point, this demand destruction-induced reversal in treasuries?
Well, yeah, it's a great point. And I think we're seeing part of it already. Curves are flattening. So that means longer-end rates are selling off less than front-end rates. And what that's telling you is forward growth or forward inflation is going to be lower. And so the market's already telling you that you've got that demand destruction. And if central banks go through with some of these hikes, you may even see further flattening of the curve.
Yeah, we've seen European bond markets opening up this morning, Robert, and yields coming off a little bit. So speaking to your point that maybe markets are starting to think a little bit more about growth and maybe not quite so much about inflation, although oil prices still at 105, I note, on Brent up 2.5% now. So from central banks, do we just expect a lot of holding statements? And we were expecting a lot of them on hold when it comes to rates this week. But in terms of the commentary, a lot of holding statements to try and boost credibility.
Yeah, we think that there's probably going to be a lot of kick the can from most of the central banks. The exception really is the ECB potentially, right? Well, actually, 2 other exceptions, one of which is Bank of Canada, which also had a quite poor employment report on Friday. Markets pricing in close to 2 cuts there. And then the Bank of England as well. How does the Bank of England factor this when we had the softer than expected GDP print last week? But the ECB, we've heard from the hawks. We haven't necessarily heard from the doves yet. Do we hear from do we hear from the full committee on Thursday? Or does the full committee validate the hawkish commentary we've heard thus far from the ECB?
Could be confusing then if we hear if we're looking to them to talk tough on inflation, but at the same time acknowledge a weaker growth outlook.
Yeah, they're not in an easy position, right? And so, but the other thing too is we get forecasts from the Fed and we get forecasts from the ECB. So those are two very key points that are going to help us inform that decision making. And
you wonder to what extent they would be willing to diverge when these problems get more full down the line.
Exactly, and we've seen them diverge before in the past. 2011 is a great example. 2008 is another example. Frankly, 1990, the Fed was cutting despite an increase in oil prices.
Robert, great to see you. Thanks for coming in to see us. That's Robert Dishner, Senior Portfolio Manager and Head of Trading for London at Neuberger Berman. Thank you so much. Well, coming up, we'll be speaking to the Lithuanian Foreign Minister as President Trump warns NATO would face a very bad future if member states fail.
the most fascinating time for the global economy in years, and our conversations are front and centre.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time we went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. So a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan the fresh fish uses sashimi. But Peru use fresh fish, make the called the ceviche, cooked with the lemon juice. You know, never use the soy sauce. First time I eat this, kind of the, wow. So then after this one, my open eye more, my cooking style that change. Combine to Japanese style and another country food, then make novel style.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back. This is the opening trade, 7:30 here in London. Futures are pointing higher despite the geopolitics. President Trump has said that NATO would face a very bad future if member states fail to help shipping in the Strait of Hormuz. The FT is reporting that EU foreign ministers are considering plans to widen an existing naval cooperation to include the crucial shipping channel. Oliver Crook is in a good position to find out more for us. Bloomberg TV's chief Europe correspondent joins us now from Brussels with a guest. Ollie.
Yeah, that's right. There's that EU mission that's already there patrolling the Red Seas to try to deal with the Houthi threat. The question is whether to expand that mandate to basically potentially touch the Straits of Hormuz. And we'll be very pleased to join to somebody who's going to be in these conversations with foreign ministers, and that is the foreign minister of Lithuania, Kęstutis Budrys. Thank you so much for joining us this morning. I'd like to begin just broadly to get your perspective now entering the third week of the war in Iran, what Europe's role should be going forward.
We should put our pressure on Iran to stop escalating in the region, stop attacking Gulf countries, Cyprus, other countries, and return to the diplomatic efforts to stop it. And then what is in our hands, so in the European hands, of course, we can put the pressure, and we have to put the pressure on Iran in the form of the sanctions, sanctioning their shadow fleet that is operating right now in the world, and also coordinating these moves with the Gulf countries first, that we have the strong partnership, and also with United States.
Do you think you could leave the meeting today with additional sanctions on Iran?
We will have the discussion. I doubt that it will be immediately adopted. It's not there yet, but there should be consensus that that's the way forward, how we should and have to contribute. Because our fundamental interests, security interests, are also at stake here, because Iran's missile program, nuclear program, is also a threat to Europe. Of course, we have to be part of it.
And if you had asked members of NATO on Friday if this was a NATO problem, their answer would probably have been no. Today, after the weekend, President Trump has directly tied NATO potential involvement with NATO support from the United States. Do you think that NATO has a role to play here in the Straits of Hormuz?
If there is, or when there will be such a request, of course we have to look into it and consider it, and I would look for the in-depth debate with the NATO. No other organization has such strong operational planning capacity as NATO. So of course we should look into it, what we can provide. Well, that would be the question then for my country, what Lithuania can contribute to this sort of operation that affects the global oil prices and energy prices and the status of our economy.
And if you got a direct request from the President of the United States for NATO involvement, what would Lithuania's position be? Is that a yes?
Of course, we will look into it, what we can do. But politically, of course, we open to all the options.
And what about the European naval mission that's already there, Aspides? Should that remit be widened to basically involve the Straits of Hormuz? I know this is something that you'll be debating today. Is that something that you support?
It starts from capabilities, and it starts from interoperability with ongoing operations. It's not only political will to be part of it or not. It's also about the answers, how it will plug in, and what will be the contingencies and then planning. I would put it into the NATO realm for their operational capabilities.
And a question here on Ukraine, because obviously there's going to be a lot of discussion about the consequences of the war in Iran on Ukraine, whether it's sort of being able to provide Patriot missiles or the Americans being distracted and basically negotiations coming to a halt. We also had this interesting interview given by the Belgian Prime Minister over the weekend in which he said that we should not be naive about Putin, but also we must normalize relations with Russia and regain access to cheap energy. What is your comment on that?
I hear a lot about the potential talks with Russia, and each time my first question is what we are going to talk about, what will be the potential result, how Russians will exploit the situation. I am sure, I know, but how we will get anything better from the current position. We have to approach it from the position of strength, meaning that you have to have in your hands additional sanction package. 20th already passed, but then you have to have the 21st sanctions package, frozen assets. Then you have the list of the demands from Russia, what we want to achieve. We have to also declare very clearly what our red lines are, what concerns international law, and only then you can go to the talks and demand something and achieve something. But you cannot approach the diplomatic discussion with Russia from the position of loser. And this is the projection of weakness. We should stop talking publicly about it.
So these are comments that are not unfamiliar to hear from, say, the Hungarian Prime Minister, but it is a little bit different to hear it from the Belgian Prime Minister. Do you find that concerning, particularly going into UCO at the end of this week? Do you think that this is going to be a more active debate among European leaders of how to engage with Russia?
Of course, there will be the debate, and I really expect that the outcome of this debate will be conclusion that I just said. We cannot do this. So let's strengthen ourselves, and especially remembering the Belgian position on frozen assets. That's the stick. That's the leverage for the potential talks. We should use it. And what concerns Russian oil, believe me, we know it by experience on our skin. There is nothing more expensive in this world than the cheap Russian oil.
But then also the question on that, the people like the Belgian Prime Minister will be saying that basically we don't have any new ideas in Europe, that we need to basically have some new initiatives. Otherwise, the status quo is just going to bring us basically nothing, and the Americans are disengaging. So what are the sort of new approaches you think that the Europeans should be debating and should be pushing forward in order to sort of defy those arguments?
We don't need new ideas. We don't need creative thinking. We need political will to implement all the ideas and all suggestions. What concerns sanctions, that's all energy companies. Still, Americans sanction more energy companies of Russia than we did. Rosatom, all the financial sectors. These are the old ideas. Let's go and implement them and execute. Frozen assets, let's do it. Just also, not only promise, but let's open the accession process for Ukrainians to EU. These are the things that we still cannot implement because of lack of political will. And I resist this direction that, we cannot do this, let's think something more creative. It's not about creativity.
Well, Minister Budrys, thank you so much for your time as you head into this meeting of European foreign ministers, where we'll be debating not only the European role in reopening the Straits of Hormuz, but of course the future of Ukraine and these sort of rising voices about potentially re-engaging with the Russians.
Our Chief Europe correspondent Oliver Crook on the ground for us in Brussels there. Thank you so much, Ollie, for bringing us that conversation. Well, let's turn back to earnings now. Here in London, just a few minutes ago, we did have earnings from Standard Life reporting a full-year loss of £394 million, exceeding expectations of a £247 million loss. And joining us on set, I'm pleased to say, is Andy Briggs, CEO of the UK insurer Standard Life. Great to have you with us, Andy.
Good morning, Lizzie.
You've got a new look. Phoenix Group is now Standard Life. What's your message to shareholders this quarter?
So three key things we want to get across in our results today. The first is that in an uncertain world we're living in, the UK savings and retirement market, the market we play in, is really exciting. It's large and it's growing strongly. Secondly, that we're very well placed in that market, so we're delivering strong growth in profits, a strengthening balance sheet. Last year we had £1 billion of free cash flow, so the business is performing really strongly. And thirdly, as you say, really excited about the future. We've rebranded the Standard Life, bringing our strongest brand to the forefront, and very much focused on helping more and more customers on their journey to and through retirement.
I hope you're proud of me not making a rising from the ashes joke in that intro, Andy. But look, how exposed are you to the cockroaches in private credit? We've heard a lot about the worries from various guests on this show. Are you having to reduce your exposure there?
So we have a very balanced, diversified business mix. What's quite unique about Standard Life is we're the only player focused at scale across the whole spectrum of all the parts of the UK savings and retirement market. So the private credit part is a relatively small part for us. We're very judicious in how we approach that. Everything is investment grade. We have a 500-strong in-house team, including all the credit rating analysts, so not something we're concerned about ourselves at all.
And that part, is it very exposed to software or the US?
Within our total assets of 317 billion, 40 billion of annuity assets. Within that, private credit's about 3.7 billion. Less than 20% of that is the US, and no software within that at all, yeah, so very comfortable.
OK, so you're comfortable with the private credit exposure. Good morning to you, Andy. You said the three messages. The first of them was around the UK and it being an exciting environment at the moment. Just wanted to get your perspective on reserve powers, which the government has been talking about in terms of mandating investment of a certain percentage of certain funds in UK assets. I mean, either talk about the specifics or the big picture, what this means. It seems like a really interesting / dangerous precedent, depending on your view.
Yeah, so our strong view is that our customers will get a better income in retirement if they have a more diversified range of assets, including an allocation to private markets. So we're proactively doing this. We're one of the leaders in the Mention House Compact and the Mention House Accord, which was looking to get a higher proportion, up to 10%, into private assets. We set up a joint venture with Schroders called Future Growth Capital. We've already invested over $1 billion of customer money into that. We want to get 10 to 20 billion invested there over the next 10 years. So we think this is a good thing for customers. We also think it's important that customers have choice. It's up to customers to choose where they invest their money. So we're not supportive of mandation, but we do think the direction of travel is a good thing.
OK, so you don't think, on Lizzie's point, you don't think it's a difficult time to be putting more retail assets towards private markets, given the headlines?
So the way we think about investing our customers' money and indeed our shareholder assets is to have a view on strategic asset allocation over time, but then also to have a kind of tactical overlay to that. So what I describe is where we should go strategically over the long term. Of course, we will look at the timing of when we go into different markets. We'll spread that over time and do that in a careful and judicious way.
Andy, you've been in conversations with private capital managers about your kind of pension buyout business. Any progress, any updates on that front?
Yeah, so as I said a moment ago, we want to keep a very diversified business mix at Standard Life across workplace, retail and the annuities side. So the way we do that in practice is we basically focus on pension risk transfer business up to about $2 billion.
Remark just then about, I think he said the Mervyn crude being offered $167 a barrel. That is a straw in the wind as to where we might be heading soon, unless there is some kind of easing of the hostilities.
Yeah, Adi, but if you look further down the line and you look at some of the futures contracts for really 12 months or thereabouts, we're looking at $60, $70 a barrel. So they're pricing in a short conflict in essence here. But Adi, I just want to get to Kirill Dmitriev. He is a Kremlin aide. He said in a series of posts on X that the oil shock tsunami is just beginning. He was criticizing Europe's decision to wean itself away from Russian oil, saying it was a strategic mistake, was it?
This is a question for me. Well, just the December Brent is trading at $77 a barrel. It is creeping up. Only on Monday, when I spoke to one of your colleagues, we were below $70 a barrel. So it is creeping up. The problem is for the whole market at the moment, and I've spoken to my colleagues, traders, what traders are looking for is some sort of meaningful resolution to this conflict. And what they're not finding right now is light at the end of the tunnel, that we don't have objectives, clearly stated objectives, so we can't really compute what is happening and what will lead to those objectives to end the war. The objectives seem to be shifting all the time, and this, as a result, this war keeps being prolonged and prolonged and prolonged. So where we are going right now is very hard to tell.
Well, we look at this, and then you look at it from an Asian perspective, that maybe they're thinking now, many of the countries, that they need to wean themselves off Middle Eastern oil and gas. Now, is this likely to redraw the shape of the way that oil supply maps are actually drawn?
I think it's very difficult to do that because a lot of most of the Asian oil refining system, they are designed to process medium sour crude, mostly from the Middle East. And because of the close proximity and also the freight rates, it's natural choice for them to buy the Middle Eastern crude. And you also need to adjust your yield if you change your crude slate. And then, okay, some countries might want to expand their supply like a shopping list. But the problem is where to find those alternatives crude from the Atlantic basins. Then the next question would be, will the producer there have the capacity to boost the production at large scale? And then I think it's generally easy to lower the Middle Eastern crude portion, let's say from 50% to 45% or 40%, but in the case of Japan, Middle Eastern crude accounts for about 93% of its total imports. It's very difficult for them to lower it down to below 70, let's say. So I think in the short term, the Asian countries, they will continue to heavily rely on the Middle Eastern crude.
Yeah, absolutely. And Adi, you know, when you look at this and you see what's been going on, of course, with the Ukraine conflict, a lot of Moscow's energy infrastructure has been partially, or shall I say, been affected, let's put it that way, diplomatic terms here. It'll be tough for them to meet demand too.
Absolutely. You're absolutely right. I think the very important point here is that while Russia is benefiting very much in the short run, you have to understand the Russian oil industry is being under sanctions, lacking technology. Most of the investment has been focused on just trying to maintain the current production and the current very, very old refineries and pipeline systems. And it's just barely managing to keep that under the war conditions. So any benefit longer term by additional expansion of this production at higher prices is totally out of the question. So long term benefits to Russia are zero.
Well, please hold those thoughts, because the question everybody's asking, will the US benefit from the oil crisis sparked by the war on Iran? Before we go into this, let's have a look at who actually profits from an energy crisis. In the third quarter of 2022, ExxonMobil and Chevron reported more than $30 billion in profits between them. A new study based on Russia's invasion of Ukraine found that the wealthiest 1% of Americans reaped about half of the profits because they normally own most of the shares in any industry. But inflation also went up, driven in part by oil and gas prices, meaning everyone faced higher bills. Not everyone, though, saw an equal hit to their household. The UK, for one, imposed a windfall tax on the excess profits of fossil fuel companies and used that money to help households with rising energy costs. Had the US done the same, the move would have sent $1,715 to every American household. Oil prices would have to move higher and stay high for a similar dynamic to play out in 2026. So Neil, give us a sense of how much the oil companies can benefit here, because refining margins are likely to remain stable, or are they?
Well, for the refiners, crude oil is going to cost an awful lot more. If you're an integrated company, obviously you make more money if you're a producer, and then obviously you pass that down through the value chain, and then you will make money from the products that you sell. You know, this whole issue of winners and losers. Yes, the oil companies will make windfall profits. The producers will make windfall profits in the short term. There's no question of that. But ultimately, this is massively detrimental to their customers and you know, the retail customers. And this is not good.
And Moyo, so as Neil was mentioning there, I mean, we're talking about the integrated oil companies, the ones with a decent downstream and upstream and good interactions between that. That's the key here. That's the sweet spot, I suppose.
Yes, but then I guess it really depends on which countries you are focusing on. For instance, like Indian like refiners right now, they secure, I wouldn't say enough feedstock, but quite a chunky of Russian crude. So now they can maintain their run rates and continue to export and make the profit of the current high product prices. But then in a lot of Asian countries, like the Asian Pacific, Eastern Asian country, for instance, like China, Beijing already told the refiners to suspend product export. That means they are unable to pass the high crude prices to these overseas product buyers. They can only sell the fuel domestically, and under the current pricing mechanism, they obviously can't pass all the cost. So that means like their profit margins will likely to be narrowed. That will ultimately lead to some run rates cuts at some refineries. And I think a similar situation goes to, let's say, South Korea, Thailand, and Japan. All the countries, because they don't know how long this war will last, so they decided to prioritize their domestic fuel supplies. That means like the profitability might be a secondary thought.
Neil, I want to get back to you and just say we've got no swing producer right now, for the moment anyway. Could those companies which have big fracking arms to them be sort of taking up some of the slack, if it were?
Well, I think it's highly unlikely that frackers, particularly, of course, in the United States, where most of the fracking activity is, are going to change their 2026 business investment plans on the basis of disruption caused by a geopolitical event. We just do not know how long this will last. And if, for the sake of argument, peace were to be restored in the Middle East relatively quickly, then the underlying oil market fundamentals, after a relatively short time, would reassert themselves and oil prices would slide back. So I think it's highly unlikely we're going to see a sudden outburst of fresh activity amongst the fracking community.
Adi, how do you view it?
Yeah, I 100% agree with Neil. I would just add one more point, which is kind of interesting. What fracking community, they usually hedge their production, not all of it necessarily. So this must be a bonanza for them to hedge their forward production. So that might be another reason that you mentioned about back end of the curve being low and now in 70s, high 70s, because all these frackers are probably selling forward their production and making sure that they remain profitable for the rest of their investments cycle.
Yeah, and let's just move away and have a look at one other aspect of all this. And it's something which East Asia in particular, of course, is seeing this transformation of the move towards EVs, electric vehicles. Could this accelerate, be an accelerative here as well, and also the impetus for alternatives?
Right. I think the high EV penetration rates certainly give the Chinese consumer a slightly better position than compared to those countries still heavily rely on gasoline or gas oil. But again, really, I have to address, like, depends on how long this war continues, because right now the market, the prime focus remains on the crude oil, but maybe 2-3 weeks later, they started to feel the price hike on their retail gasoline and diesel prices. That might start to feel the tight supply of the transportation fuel. Maybe that's the time they started to realize, okay, maybe it's time to switch to EV.
Yeah, I mean, it's not so easy as just putting the taps back on. I mean, it's easy to turn them off, but it's highly more difficult to turn them back on. Isn't that the case, Neil?
Well, if you're talking about the Middle East production, well, if they have phased down and cut back, that's a lot easier to return to normal levels of production than if they just shut everything off. So, you know, again, it's a matter of timing. How long will the crisis persist? And, you know, if they do eventually have to reduce production to very, very low levels, then yes, it will take more time to come back. But as far as EV penetration is concerned, yes, of course, we've seen big sales growth of EVs. Obviously, China is the standout, but in the United States and in Europe and elsewhere, yes, the pace of growth has picked up, no question of that. But I think it's unlikely there'll be a massive spurt to EV sales in the short term, simply because mass market EVs, certainly in Europe and elsewhere, at the moment, they don't exist. It's still basically richer consumers. So yes, there may well be a pickup in EV sales, and perhaps longer term, people will look to energy security as a reason to switch to an EV. But well, again, everything comes back to the duration of the current war. If it ends relatively soon, then I think we go back to what passes for normal relatively quickly.
I'm going to put all this question to you. It's a bit of an unfair one, actually, but Adi, I'm going to throw it to you. What are the unintended consequences of this conflict?
Right, that is an interesting question. I think that the key problem with this war that is going to cause for the rest of the world, first of all, is going to be a massive impact on the oil industry producers and consumers. Let me just throw, to link up to my previous colleagues, what they said. I think a very important point that should be said, and I've been arguing this in my one of my books that came out 3 years ago. The EVs, totally agree with Neil, in terms of total volume of sales. I don't think it's going to be a major impact. What it does is psychological impact, that if you rely on gasoline or diesel prices, okay, and you drive every day as a taxi driver and so on, you now have an option. And psychologically, the impact is going to make the elasticities, price elasticity of demand higher. So I don't want to get too technical about it, but it's going to make definitely a big impact. The second thing is this uncertainty. And I was trading for 35 years. There's nothing worse in the market than uncertainty. People very often say that traders love volatility. They love volatility, but it has to have some logic, some predictability. Unpredictable volatility is bad for everyone. People don't invest. People reduce their buying, and all the energy is spent on trying to guess what Donald Trump is going to tweet next. And that whole impact on the economy is very, very negative. So as I said early on, this episode is going to certainly have a big impact on the world economy, one way or the other.
Very quickly to you, the same question, unintended consequences in Moye.
Well, I wouldn't call it unprecedented, but well, just standing from the Asian perspective, I think a lot of people were eyeing on China to do something to persuade Iran to reopen the Strait of Hormuz. But until now, nothing really happened, and the Chinese-related vessels still strangled within the Persian Gulf. So I'm not a geopolitical expert, but it was a thought, from geopolitically,
Neil, to you, the same one.
Well, the final point I'd make probably is that what appears to be the case is that Iran's resilience and its effectiveness has been underestimated by Israel and the United States. I think any thought that Iran might be a pushover, if anybody really did think that, I think they've been disillusioned. And Iran is turning out to be more resilient and capable of causing more damage than the protagonists originally thought. And the consequences for that arising from the closure of the Strait of Hormuz are very, very bad for the global economy.
Neil Atkinson, Mayuju, and Adi Imsirovic, thank you very much for joining us.
Thank you.
Thank you.
And that is our show for this week. Get in touch with us on X. I am at RichardTV, and do use the hashtag AJCTC when you do, or drop us an email. countingthecost@aljazeera.net is our address. Now, there's much more for you online at aljazeera.com/CTC. That'll take you straight to our page, which has individual reports, links, and entire episodes for you to catch up on. Well, that is it for this edition of Counting the Cost. I'm Rashad Salamat from the whole team in Doha. Thanks for joining us. The news continues on Al Jazeera Next.
The United States military began major combat operations in Iran.
This is the second time that we negotiated with Americans and they decided to attack us right in the middle of negotiation.
This operation will continue for as many days as it takes to remove this threat.
Iran will continue to exercise its rights of self-defense.
We acted out of necessity.
I deeply regret that this opportunity of diplomacy has been squandered.
With tensions escalating, stay with Al Jazeera for the latest developments.
Can you really bomb a political future into existence?
I don't think that's what we're trying to do. I think the objective here is to destroy the instruments of Iranian state power.
Let me ask you this directly. Is Israel effectively leading U.S. foreign policy?
They want to do a Gaza-like effort on the main power centers in Iran to kill thousands of people, not just the core.
Upfront tackles the big issues only on Al Jazeera.
We saw this exact same pattern happen in Gaza, the same lazy, flattened reporting that we saw in Gaza when it comes to the war on Iran.
The Listening Post decodes the media on Al Jazeera.
I'm Folie Batibo. I'm a presenter. I've been a journalist for 20 years and covered wars and their devastating impact, especially on the lives of women and children. But what inspires me to continue my work and make sure their voices are heard is their untold resilience in the face of such devastating hardship. And we, as journalists, have a collective responsibility to make sure their stories are told. And my work here at Al Jazeera allows me to do that. We make sure the stories of those most affected by wars and conflict are heard.
You're watching Al Jazeera's extensive coverage of the war between the US, Iran and Israel. I'm Sami Zaidan.
Unfortunately, we have had 101 healthcare workers wounded in these centers and 17 are killed.
Iran's health minister tells Al Jazeera medical facilities are being targeted in the US-Israeli attacks across his country. The US president warns NATO allies of a very bad future if they don't help reopen the critical Strait of Hormuz. At least one person is killed by an Iranian missile in Abu Dhabi, and some flights resume at Dubai's airport after a drone incident. Israel says it's begun what it's calling limited ground operations in southern Lebanon. Join us or face a very bad future. Well, that's the threat from US President Donald Trump to his NATO allies while demanding they help reopen the Strait of Hormuz. Trump said nations relying heavily on oil from the Gulf have a responsibility to protect the vital waterway. He said his administration is talking to 7 countries without identifying them. Iran's blockade of the Strait of Hormuz is sending energy markets into a tailspin. Trump also said Iran wants to make a deal, which Tehran promptly denied.
We're talking to them, but I don't think they're ready. But they get pretty close. I don't know that I want to make a deal, because you know what? First of all, nobody even knows who you're dealing with, because most of their leadership has been killed, as you know. So I don't even know that we're going to make a deal. Mr. President, you mentioned that Iran's military. They want to make a deal badly, yes.
We never asked for a ceasefire, and we have never asked even for negotiation. We are ready to defend ourselves as long as it takes.
Authorities in Abu Dhabi say one person has been killed in a missile attack in the city's Al Bahia area. Earlier, a drone incident near Dubai airport set a fuel tank on fire. Flights were suspended but are now resuming. We're live in Tehran, Doha and Ramallah. But first to Tawheed Asadi, who joins us from the Iranian capital. So Tawheed, the US president saying Iran wants to make a deal and wants to make it badly. Slightly different characterization, shall we say, coming from Iranian officials?
Yeah, we hear a quite different approach from the Iranian perspective, as echoed by the Iranian Foreign Minister Abbas Araghchi, who called it an American illusion that Iran is going to get engaged in talks or accept any offer for ceasefire. And the reasoning behind, as we hear not only from the Foreign Minister himself, but also from different Iranian officials over the past 2-3 weeks, is basically the very fact that as long as these strikes continue, Iran is not going to get engaged in any diplomatic engagement. And on that, we know that we heard from the vice president of the country the other day saying that retaliations are going to be continued as long as the security of the country is guaranteed. And this is just one side of that. The other side comes from the military rhetoric that we hear from Tehran, again echoing the same statement of retaliation and revenge, something that we also heard in the very first statement of the new supreme leader of the country, Ayatollah Mujtaba Khamenei. And all in all, the gist of the matter is that under a sort of imposed condition, Iran is not going to get engaged in negotiation or accept the offer for ceasefire. The reason, as I told you, is basically partly because of the continuation of the airstrikes. And then there is another reason, and that is the very historical background. The Iranians already tried this trajectory of diplomatic engagement not only once, but also twice, back in June, when we were expecting a next round of talks, the sixth round to be specific, to be held between Washington and Tehran. All of a sudden, Iran faced a campaign of airstrikes ending up in this 12-day war back in June. And then this time, again, we were expecting another negotiation, while all of a sudden, the country faced a serious campaign. I can say, compared to the previous one, the domain is extended much more, and now they are quite negative when it comes to possibility of negotiation, saying that they're going to continue their retaliatory actions.
Now, Zain Basrawi is live for us in Doha, and so as they talk about not talking, Zain, strikes on the Gulf claim lives today.
That is correct. We've had strikes across the broad spectrum of countries once again: Qatar, Kuwait, Saudi Arabia, Bahrain, air raid sirens, drones, missiles. But it is the UAE that continues to get pounded hardest, perhaps because of its soft stance politically towards Israel, normalizing, allowing people to come in from there, or perhaps because of what Iran says that the United States continues to have a heavy footprint there. But what we are seeing is continued bombardment of the Dubai airport since the early morning hours of today, setting a fuel tank there on fire, closing airspace for some time, stalling flights to and from the busiest commercial international airport in the world, causing disruptions. We saw attacks in Abu Dhabi that did claim a life. What we understand is that perhaps debris fall, perhaps a direct hit, but a missile that was launched at Abu Dhabi did hit a civilian vehicle, or debris hit it, and one person was killed there. And just in the last hour or so, we understand the Fujairah export terminal, the oil export terminal at Fujairah port, is once again under attack. We understand that a couple of days ago on Saturday, there was a massive attack there that resulted in a fire at the oil export terminal that burned for the better part of a day. Firefighters taking all day to just put that out. And once again, 2 days later, after facilities had reopened, and after they started doing the work of refueling and exporting crude, once again, it has come under attack. So we see these consistent targetings of airports and energy infrastructure. And the reason Iran says it is doing it is because attacks against Iran are emanating from the UAE, attacks on Mehrabad Airport in Tehran, attacks on its own energy infrastructure. They say this is tit-for-tat retaliation against U.S. assets or interests in the region.
Tawheed, what we're hearing as well in the midst of that is that while Donald Trump is calling for outside countries now to come and help opening up the Strait of Hormuz, the calls have escalated into calls not just for ships, but he's referencing troops. How is all of that going down in Iran?
Well, we have to keep in mind first the context in which escalation is name of the game, as we see the continuation of the airstrikes over the past few, I can say, hours from the midnight onward in the capital Tehran, in other cities, Arak, Isfahan, Qom, and more names. I can tell you more than 200 cities so far have been attacked by the American and Israeli airstrikes. We are dealing with a highly escalated situation, and in this complicated context, Iran tries to use all the leverages it has when it comes to actually retaliation and when it comes to formulation of its military response. The closure of the Strait of Hormuz was part of that. They're saying that they're not going to let the enemies, the adversaries, ships, vessels, and oil tankers to go through this passage, and they're trying to also use it. More rhetoric, more heated rhetoric is coming from Tehran, specifically after the attack on Khark Island, which is geostrategically significant when it comes to the oil exports of the country. But it's still getting back to the statement that we heard from President Donald Trump. In Iran, it is being interpreted as a sign of weakness by the U.S. They are asking for more help from other countries, but the clear response from the Iranian side is that in case of any third country getting engaged in this already delicate situation, there are going to be repercussions. Even prior to initiation of these strikes, Iran warned against regional countries about the possibility of escalation, and now it goes beyond the region.
Now, earlier I spoke with Iran's Deputy Health Minister, Ali Jafarian. Now, he told me about the extent of the damage U.S. and Israeli attacks have caused to the country's health sector.
Till now, we have 30 medical facilities, mostly hospitals, damaged according in the effect of the attacks from the Israeli and the United States attacks to my country. 11 of these centers are now inactive, and we have also to evacuate 6 centers because of the proximity to some military centers. You know, these are in the neighborhoods, these are in the suburb of the cities, so there are hospitals there, there are other facilities there. And unfortunately, we have had 101 healthcare workers wounded in these centers, and 17 are killed till now. Due to the attacks to these health centers.
So do you believe the US and Israel are deliberately targeting medical centers and health workers?
I cannot say it exactly, but for some instances there is. For example, we had a sea ambulance in the Hormuz Island. It is attacked directly and is destroyed completely. We had the helicopter ambulance. It is attacked directly and is destructed. And many of these facilities are in neighborhoods, maybe some military centers or police office or something like that, are, you know, in the proximity to our centers, and our centers, especially our primary healthcare system, which is, you know, is a very wide system in the country, are damaged. We have had 153 health centers, primary healthcare centers, damaged till now. Unfortunately, we have had replaced 120 of them till now. But these are attacked. Unfortunately, we had 7 people who were there for getting some, you know, services were killed. And 3 of our, you know, healthcare workers in these centers are killed. Unfortunately, one of those who were killed is a pregnant woman. So these are not, you know, when you look at a whole picture with more than 3,000 women wounded till now. And
let me present to you, Dr. Jafarian, what the U.S. Defense Secretary Pete Hegseth said on March the 10th. He accused Iran of moving rocket launchers into civilian neighborhoods, quote, near schools, near hospitals, he said. Is that the case?
No, as far as I know, most of our centers which are destroyed are inside the cities, and there is no launcher inside the city. because if there is a launcher there, everybody can see the missiles, going out of that launchers. So most of what I mentioned till now are inside the cities without any missile launchers in proximity.
And Zain, the suffering in the region, one of the things that's activating Arab efforts to try and find a way to end this conflict. Talk to us through the diplomacy that's going on.
Well, since day one of this war, we've seen Arab leaders in the GCC communicating with each other, reaching out to each other, publicly condemning turn by turn the attacks happening on their sovereign soil. And that diplomacy stretched back to even the day before the 28th of last month, the day before the war. For months, regional leaders had been calling for calm, telling the United States it couldn't use their countries to launch attacks, trying to tell Iran to make compromises, to try to see reason, not to retaliate in the way that it is doing now. But on both sides, these arguments have fallen on deaf ears, with Iranian allies, with American allies, and all at the behest of this war that the US and Israel started. So what we are seeing is a kind of recalibration. Arab leaders are reassessing their relationships, and not just with Iran, where political collateral has been squandered in the last two and a half weeks of Iran's retaliation to coming under attack by retaliating against its Arab neighbors, albeit, as it says, against U.S. assets, U.S. interests, U.S. targets, and Israeli interests in the region. And what we have seen is Arab leaders are certainly, as if experts were to be believed, are looking at the United States as perhaps not a stable, reliable, long-term partner. We're seeing the Egyptian foreign minister. He is in town. He arrived in Qatar yesterday, met with his counterpart, the foreign minister and prime minister of Qatar, met with the emir of Qatar. He's expected to go on a tour of the other GCC countries. And what the message is that he's carrying, and what is being discussed with his counterparts here in Qatar and likely elsewhere, is that there needs to be more coordination among the countries in the region to make sure that security is kept in the hands of the people who live here.
All right, thanks. Let's thank all of our correspondents across the region covering this story for us. Zain Basrawi in Doha, Tawheed Asadi in Iran. Let's go to Nida Ibrahim. She's live for us in Ramallah in the occupied West Bank. And Nida, first of all, we're hearing an Israeli defense chief has gone to the US after Iran said it used a new missile, Sijil, for the first time in this conflict. Just talk us through all of those developments.
Well, let me just point out the latest interceptions that we've heard here in Ramallah, seemingly coming from the interception of missiles that have been fired into Israel, mainly in the central area. Now, according to Channel 12, some of these sirens in certain areas did not give enough warning for people before they went off. These are some of the challenges that are facing the Israeli aerial defense systems. Now, when we talk about Sijil, the missile you mentioned there, Sami, it's a hypersonic missile that is launched at a very high speed, and its warhead can contain large kilograms of munition. That also, a specific type of missile, needs a certain type of interceptor. We are talking about the Arrow 3. How many of these does Israel have? That all is being weighed in Israel as to these Iranian missiles, these Hezbollah missiles are all being used to exhaust the Israeli aerial defense systems. And that could be seen as part of why we're seeing the Israeli defense chiefs heading to Washington to try and get more munition, more intercepting missiles from the US and from other allies in the region to try and boost Israel's capability of these missiles. According to the Israeli estimates, there are 360 Iranian-fired missiles during this war and more than 1,000 rockets fired by Hezbollah, although almost half of these have fell into southern Lebanon and not arrived into Israel. But all of that is posing pressure and putting strain on Israel's aerial defense systems.
Also, talk about causing pressure. Israeli officials now talking about launching a limited operation in Lebanon. What does that mean exactly?
Well, the Israeli army has just announced that its troops, mainly Division 91, had started a limited and targeted and focused ground operation in southern Lebanon. And we could sense from the Israeli military's sources telling Israeli media that they want to raise the level of Israeli reservists from 250,000 to 450,000, that Israel is already preparing for a major ground operation in Lebanon. They say that they want to occupy as many lands as possible, even if it goes up to the Litani River. We are talking about an area that is 1/10 of Lebanon's soil. They say they need this area as a security buffer zone. They want to minimize and destroy Hezbollah's abilities to threaten the communities in northern Israel, as well as this missile that we've been talking about in the past few days that has been targeting central Israel. Now, according to the Israeli forces, they say that they've intercepted this missile. But again, the Israeli narrative seems to be that this is a chance to weaken Hezbollah more, that they have been undermining its abilities to launch rockets and disrupt life in Israel, and they want to counter that, even if it means that they will go to places that they've last been in 2006. So that seems to be part of the rhetoric, and some of these Israeli remarks that we've been hearing from Israeli military officials that the war on Lebanon could even extend beyond the war on Iran.
All right, thanks so much. Nida Ibrahim there in Ramallah and the occupied West Bank. Well, as Nida was explaining there, some of that battle is engulfing towns like Khiam in southern Lebanon. Zaina Khodr explains the strategic importance of Khiam.
It lies on along an important junction, a road that links the eastern and western sectors of southern Lebanon, one of the roads as well leading to the Bekaa Valley in eastern Lebanon, another area where Hezbollah has influence. What Israel has been trying to do is really try to cut the supply lines, the logistical capabilities of Hezbollah, so it's unable to bring in more weapons and fighters to areas south of the Litani River. Khiam also located very close to the Litani River, just a few kilometers. The Litani River is 170 kilometers in length. It runs across southern Lebanon. If the Israeli army is able to reach this, it really can claim symbolic and strategic victory. The Litani River has long been a natural defensive line for the Israeli military. It believes that if it controls this, it will be able to defend its northern towns, push Hezbollah back, prevent cross-border raids, and prevent Hezbollah from using its short-range rockets. So a major battle is underway in 2024. During the last major confrontation, they fought for this town for weeks. Dozens of Hezbollah fighters were killed, really a testament on how important the area is for the group.
Now, Donald Trump has suggested a much-anticipated summit with Chinese President Xi Jinping could be delayed. He made the comments in an interview with British media. Trump said he thinks China should help reopen the Strait of Hormuz as it gets 90% of its oil from the region. Beijing is the world's largest crude importer and is Iran's main buyer. Let's cross over now to Katrina Yu. She joins us from Beijing. And so the lines just dropping. Katrina, say that the Chinese have been holding discussions about this issue of the upcoming meeting with Trump. What are the two sides saying?
Well, it certainly looks like China is expecting the summit to go ahead. We've got Chinese officials meeting with US officials now in Paris. They met for the first day yesterday on Sunday for 6 hours, and the goal of the meeting is precisely to talk about possible outcomes of Trump's visit to Beijing, which has been long awaited. It's been planned for months, the first visit by US President to China since 2017. And if that meeting were to be cancelled or delayed, it would be a blow to both sides, because the whole point of this meeting is to stabilize that relationship between the two superpowers in the world, to prevent this long list of disagreements that both sides have from spiraling out of control into a wider conflict. And it's also going to be bad news for many companies in both sides and for the economies of both countries, because being discussed are possible trade deals, including deals involving Boeing agriculture, energy deals, and also the exchange of US technology and Chinese rare earths. So a lot at stake here, and we know that it's clear that Beijing is hoping that that meeting still goes ahead.
And any sign, Katrina, that China would be interested in getting involved in the Strait of Hormuz to help Donald Trump out?
Well, we've just had a press conference from China's foreign ministry, and they didn't answer that question directly, although they basically answered it in a roundabout way. They said that China is in communication with the Trump administration and it's committed to the de-escalation of the current situation, and head of state diplomacy plays an irreplaceable role in guiding US-China ties. So I think translating that vague answer, I think Beijing does hope for this summit to still go ahead, and it's still planning for it. However, it is unlikely to intervene militarily, or at least in a way that Trump is hoping. And that is unsurprising given that China has been one of the biggest critics of this war so far. It's condemned the strikes that killed Iranian leaders while negotiations were still underway. And we've had Chinese officials repeatedly, day by day, call for a de-escalation and a return to negotiations. So I think this response is not surprising. I think China intervening in a way that Trump would hope is maybe unlikely. So we'll have to see how the Trump administration responds to that, and whether that would still be okay, and whether we still are going to have this long-awaited summit indeed take place at the beginning of next month.
And that's Katrina Yu for us from Beijing. Let's take a look at some of the other stories making headlines today. At least 12 Palestinians, including a pregnant woman and a child, have been killed in Israeli airstrikes in central Gaza. The attacks hit a home in the Nusayrat refugee camp and a vehicle carrying police officers. Israeli strikes continued across the Strip despite the US brokered ceasefire. Official figures say more than 600 Palestinians have been killed since the truce took effect in October. Russian forces have struck the Ukrainian city of Zaporizhia, damaging residential buildings and triggering a fire. The head of the regional military administration says more than 7,500 households have been left without electricity. This follows another drone strike on Sunday, which killed 4 people near the capital, Kyiv. President Volodymyr Zelensky says the military has prevented a large-scale Russian offensive that Moscow had planned to continue this spring. Cleanup operations underway in Kenya after widespread flooding. At least 66 people have now been confirmed dead, with 12,000 others displaced. Half of those who've died have been in Nairobi, where poor drainage has been a long-running issue. Waterways and floodplains are often obstructed by unregulated buildings. The Interior Ministry has also identified 37 neighborhoods at high risk of flooding across the country. At least 10 people are dead after a fire broke out at a hospital in the eastern Indian state of Odisha. Footage shows smoke billowing out of the windows of the trauma care department at a medical college. Officials say the fire was most likely caused by a short circuit in the trauma center. Myanmar's parliament is set to convene for the first time since a military coup 5 years ago. The military says it marks a return to civilian government after this year's elections. But many in Myanmar say those polls were deeply flawed and millions of people remain disenfranchised. Others are still committed to the armed struggle against the military, including a former monk who gave up his monastic robes for combat fatigues.
My name is Comrade Seado. I am a fighter from the Royal Peacock Column. I became a novice monk when I was 9 years old and was ordained as a fully fledged monk at the age of 20. During the military coup, I heard that the military junta violently cracked down on protesters using RPGs and machine guns. They buried and cremated people who were still alive and injured. I made the decision that I had to revolt against the military. If fighter jets or artillery are in the area, I want children to develop the habit of seeking shelter in underground bunkers, because underground bunkers are the safest place. I have no internal conflict in my mind. As a citizen, I must take responsibility for my country. I must do what is right for the nation. The military junta shows no mercy and acts inhumanely toward the people. So, I will not hesitate to fight them whenever necessary.
Now, this year's Academy Awards have been handed out in Hollywood. The offbeat thriller One Battle After Another was the night's big winner, taking home 6 Oscars, including Best Picture. But with the US war in the Middle East, security was tighter than ever. From Los Angeles, John Hendren reports.
The 98th Academy Awards ceremony took place under unprecedented security in the shadow of war.
Tonight is an international event. If I can be serious for just a moment, everyone watching right now around the world is all too aware that these are very chaotic, frightening times. We pay tribute tonight, not just to film, but to the ideals of global artistry, collaboration, patience, resilience, and that rarest of qualities today, optimism.
On the stage, Leonardo DiCaprio's latest film won 1 Oscar after another, though not for Best Actor.
One battle after another, Paul Thomas Anderson.
One battle after another, Paul Thomas Anderson.
One battle after another.
For a film where the on-screen battles were domestic. Outside, the celebration occurred in a 1.5-kilometer security buffer zone protected on the ground and in the air by hundreds of police and federal officers. The security concerns were highlighted by the war in Iran, heightened by a recent shooting at a university in Virginia and an attack on a synagogue in Michigan. Hollywood Boulevard is usually full of thousands of tourists, especially here in front of the Chinese Theater. But now it's full of fences and security officers. You can hear helicopters overhead, police helicopters. And police say they have no specific information about threats to the Oscars, but they're taking no chances with the war in Iran. Actor Javier Bardem wore a pin in Spanish that translates to no to war.
No to war and free Palestine.
In the name of our future, in the name of all our children, stop all these wars now.
In the end, the highest security Oscars in recent history concluded without international incident. John Hendren, Al Jazeera, Hollywood.
Mexico City's Central Square has been transformed into a giant football pitch. The goal? To try and set a new Guinness World Record. It's part of a campaign to build excitement ahead of this year's World Cup as security concerns mount ahead of kickoff in June. Julio Galeano reports from the Mexican capital.
Here in the heart of Mexico City, more than 9,000 people gathered in the main plaza, aiming to break the Guinness World Record for most people taking part in a football training at the same time. And in the process, to turn up the excitement about the upcoming World Cup. This is the first large-scale event ahead of the tournament, set to kick off here in the Mexican capital in just under 3 months.
It's very exciting to be part of a Guinness World Record. We love football, and this is a good opportunity to get together and have a nice time despite the not-so-great things that are happening.
Recent outbursts of violence in Mexico have led many to question whether this nation, which will co-host the tournament along with the US and Canada, can guarantee the safety of the hundreds of thousands of fans expected to come here for the competition. And now another controversy after President Trump said that it would be inappropriate for Iran to take part in the tournament as the war in that country continues to rattle the Middle East.
Commerzbank then gaining on the back of that Orchel move, up 4.3%. That is a potential 35 billion euro, $40 billion bid. HSBC, in the meantime, news on Friday that both HSBC and Standard Chartered are set to be among the first licensed stablecoin issues in Hong Kong. HSBC up just 0.5%. Let's flip the board and have a look at the laggards this Monday morning then. Amplifon This stock, as you can see, down 5.6%, falling after news that it agreed to buy the hearing aid business of GN Stornord for about $2.6 billion. UniCredit is the flip side, of course, of the Commerzbank story, with that takeover bid, or at least increased stake bid, currently down 1.6%. And Vistry Group falling 2.7%, dropping as UK home building pressure continues. Expectations that the BOE will not be able to cut rates as quickly as some had expected. The BOE decision, of course, later this week. Some of your individual stocks moving this Monday, Annie.
Let's get an update on some of the bigger picture stories we're covering this morning. Spain's Conservative People's Party has won its third regional election in as many months, while Prime Minister Pedro Sanchez's Socialist Party also posted a strong showing. The People's Party won 33 seats in Castile and Leon's 82-strong legislature, with almost all votes counted, with the Socialists increasing their tally to 30 seats. Economic data out of China this morning has surprised to the upside, with industrial production growing at its fastest rate since September. Retail sales also rose, while fixed asset investment unexpectedly expanded after contracting for the first time ever last year. And Iran is denying US President Donald Trump's assertion that it wants ceasefire talks, launching fresh attacks across the Persian Gulf and forcing a suspension of flights at Dubai's main airport. Trump called on world powers to help the US reopen the Strait of Hormuz by sending warships to provide escorts to commercial vessels, but none of the countries have so far said that they're yet willing to do that.
OK, let's get another view on the energy piece as we see that disruption in the Middle East as European oil and gas prices, of course, soar due to the war with Iran. Banks like Jefferies are betting that the conflict and reduced tanker traffic from the Strait of Hormuz will give clean tech another boost. Joining us now is Birgit Vartdal, CEO of Statkraft, Europe's largest generator of renewable energy. Birgit, good morning. Thank you for joining us in the studio. Let's just start broadly with how this conflict is impacting your business and how you would expect it to impact renewable energy in possibly the months and quarters ahead.
Yes, so in the short term, this of course leads to increased revenues and higher electricity prices, both for us and the electricity markets. This is not good, however, because it has a negative impact on our customers, on Europe consumers. Looking ahead, as you point to, this is an opportunity for us and for the industry, because Europe needs more renewable power to reduce cost, reduce emissions, and also increase energy security in homegrown produced electricity.
So just putting a pin on the here and now of higher prices, and you said that's not ultimately good. We know there are potential discussions in Europe about a price cap. Have you heard anything about developments on that front? Are we getting closer to some kind of price cap on energy prices?
Well, this is a discussion that we also saw back in 21-22 when we had the invasion on Ukraine, and the European Union concluded then to not introduce this. There were some countries that did do it. We are pushing for the same now. Marginal pricing is important in order to stimulate more renewable build-out. It's important to use the most cost-efficient electricity source. And it's really the long-term solution is to build out more renewable, not to do a short-term adjustments.
Yeah, Birgitte, good morning to you. Can I ask you more about marginal pricing then? Because some people here, gas prices have gone higher, oil prices have gone higher. Let's do more drilling and try and bring down those prices. And partly the reason they do that is because marginal pricing means that the gas price has more of an impact on just the gas price. It has an impact on what customers are paying for renewable energies. I mean, doesn't that sound as if it needs reforming in some way?
Well, marginal pricing is what almost all markets are doing, and this will drive the prices down over time so that we will build out more renewable power. Then I think I would turn the argument around. It's really because we have to import gas, because Europe has to use gas, that we see higher prices, while developing more renewable, building out more renewable will drive costs down. So we need to use these price signals to get more renewable into the system that will drive costs down over time.
So as a result of renewable build-out and other changes since 2022, how much more resilient is Europe in the face of these higher oil and gas prices?
Well, it's better now than it was back in 2022. We see since 2020, the marginal price where gas is setting the price has gone from 72% of the hours to 40% of the hours. So this is a positive trend. We also see that in 2025, wind and solar generated more electricity in Europe than all fossil sources together. So both the marginal pricing and the EU ETS is really supporting the long-term trend for renewable that we all need.
But Birgitta, solar build in Europe stagnated as expected to fall in 2026, I think. Do you think that the stationary batteries, the electric vehicles which can charge during the day, will help to reverse that trend?
Yes, so we still have a significant build-out of solar, but it's not increasing year over year, but it's still a massive build-out. What you point to is that we see in the electricity market hours with negative prices because we have abundance of solar. So we need to install more batteries, both at home, we can use cars, as you point to, but also commercial batteries, and we need to expand grid. So these are elements that we need to bring into the system at a higher pace in order to adjust for the negative hours.
And what can be done, you mentioned the grid, to kind of reduce that bottleneck?
Well, it's to have a stronger grid across Europe, even within a country. You will reduce price differences between areas, and then you will sort of average out the prices and the consumption between one area that maybe has a lot of solar production, another area that has a lot of wind production, and with a stronger grid in between, you can complement each other with those sources.
And we were just showing images there of all kinds of renewable energy sources, Birgitta, one of them onshore wind. Do you see the policy restrictions around onshore wind in certain parts of Europe changing as a result of what we're experiencing right now?
Well, we have seen over the last year a push for faster permitting and more build-out. Then, to be fair, there are local opposition against some of the build-outs that we are also facing challenges on. Having said that, the growth we are expected to be 4 times the growth of what is today in 2050. So we still think that because of the low cost, because of the clean energy, we will see more wind also coming into the system.
Do you think we look back in 2 years, 3 years' time and think this was a pivotal moment which catalysed an increased build-out and a shift into renewable energy? Because we could have made that same assumption about Ukraine, and it didn't happen. We opened up coal mines in Germany. We imported more gas from the United States. We talked about reopening nuclear power plants. How pivotal, how consequential potentially is this moment for that renewable shift that has faced that domestic political pushback?
Well, I actually think Ukraine was also a pivotal moment because we have, so the European Union came with the Repower EU. They reduced the permitting time. They really had a push for more renewables. And if you see the growth of renewable over the last few years and the speed that takes over for fossil fuel, I think that was supporting it. And now, as you point to, this is another opportunity because what we see and that we saw then is that it's when gas prices are high, it's when we get these demand shocks that prices are going up. So with more renewable into the system, we will bring costs down over time. And I think that's the understanding that we need to bring forward.
And that statistic you gave us earlier, I think, is really pivotal then to that point that Tom's getting at, that and that you made earlier, that in 70% of cases previously, the gas marginal price was setting the price, and now it's 40-something, you said. So, so we are a lot less affected by gas prices than we were back in 2022. So when you see European leaders gather and they all want to do something and say something, is your advice then, of course, do what you want to do for the most affected in society, but don't change the system? You think that the system is fine?
Yes, we believe that the system is what will bring us forward. But we, of course, understand that there is a need to look at compensation mechanism. But rather than changing the system, let's rather look at some compensation at the back for the society.
Are you facing supply chain constraints right now as a result of what's happening in Iran?
In the short term, not so much, but we expect to see that coming if this crisis extends, for sure. And also inflation will go up and our supply chain will...
So that's largely a cost impact that you expect across your business?
It's a cost impact, and it may lead to delays in our project, but it hasn't shown up yet. But if the crisis extends, then we expect to see
How
that
long
as well.
does it have to go on for it to be a difficult time for you?
Probably a few months, and then you will see delays sort of having a bigger impact on our projects. We are currently constructing 30 projects across Europe. We have a pipeline of 400 projects, and we need to move these projects forward all the time. And with longer sort of extension of the crisis, the more this will hurt our business.
Okay, Birgitta, thank you so much for coming to see us. That's Birgitta Vartdal, Statkraft CEO, with us in studio. Well, coming up, we'll be speaking to the Director General at the European Steel Association.
cidade estava sitiada.
Nisso, ao começo, eu não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla.
Do a lot of good. It can really transform people's lives, but it can also hurt them.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. We are 45 minutes into our session, and things have deteriorated in terms of risk appetite just a little bit over the last 45 minutes. So we're down by 0.2%. The FTSE still just above the flat line, but we do have the CAC 40 now down firmly in negative territory, down 0.3%. Basic resources and banks and autos are the worst performing sectors. Energy and real estate doing the best this morning. Let us put geopolitics front and centre once again. Aluminium Bahrain has started a phased production shutdown at the world's largest single-site smelter. The company, which is known as Alba, is trying to preserve its inventory of raw materials and keep other parts of the plant operating. Alba's move comes as the metals industry braces for widespread supply blockages. Let's get now to Bloomberg's chief Europe correspondent, Oliver Crook, who's in Brussels with the guest, Ollie.
Yeah, that's right, Anna. As sort of Europe is trying to get its arms around all the secondary impacts from this war in Iran and the sort of the disruption it has created to obviously supply chains, but also to energy prices, we're very pleased to be joined by Axel Egert, who is the Director General of the European Steel Association. Of course, steel being one of the most important commodities that is produced in Europe for everything from building, housing, naval ships, the full defense build-out, but also one of the most energy intensive and thus one of the most sensitive to the activity we've been seeing in the Gulf. And I'd like to begin, if we might, just by quoting one of your reports that came out back in December. You said that there was the negative conditions were unchanged. U.S. tariffs, trade disruptions, economic and geopolitical tensions, protracted weak demand, still high energy prices, all continue to weigh on European steel market. That is now, in almost every category, much worse. What is the situation as we stare down the barrel of this now conflict in Iran?
Yeah, we are actually in a perfect storm, if you want to say so. The impact of the Middle East crisis has again a quite significant rate on our industry. Gas prices have increased by 50% over the last 3 weeks. So that has, of course, a direct negative impact on our industry. It has an impact on the margins of the company. So we have already very slim margins, and that, of course, is a major setback, and the crisis should not take too long.
And so help us sort of understand kind of more concretely what the impact, what it's going to mean for steel producers. Does that mean that they're going to have to shut down capacity because it is no longer sort of economically viable? Does it mean more job cuts? For example, in the German economy, we saw 10,000 industrial jobs cut every single month last year.
Yes, indeed. If this crisis takes longer than expected, then of course it will have exactly the impact you just described. But we are hoping that this will over in a few weeks' time, so that we can come back on a basis where the EU has actually started to support our industry. We will have a new steel trade measure tackling global excess capacity. And if that comes into force on 1st of July, it could have a positive impact for our industry.
And I want to get to the European measures in just a moment, but in terms of that timeline that you're talking about, when is the sort of critical moment? At what point do you really grow worried when this war drags on for another, say, how many weeks?
Yeah, several weeks. I cannot predict how long this will actually take. But
when is the sort of flashing red for danger for the steel industry? When is it really a critical moment?
I would say 2 months is getting really critical. It also depends, of course, on our downstream industries. Demand. Yes. What will be the impact on demand in the EU steel market? And that is determining the fate of our industry.
Yeah. But of course the EU was founded as a steel sort of union back in the 1950s. Now in 2025, last year, you just told me that they produced the least amount of steel ever in their whole history. So in the year 2026, what does the EU need to do to support the steel industry?
We believe there are 4 or 5 issues to solve. First of all, bring down electricity prices to around about 50 euros per megawatt hour. Secondly, solve the global steel overcapacity spillover impact on the European steel market. There we hope the new steel measure will come into force 1st of July. Third, fix the carbon border adjustment measure, where we should have a level playing field on carbon costs, which only EU players are paying today, but not the imports. 4, we need to have made in the EU for greener steel made in Europe. Otherwise, we will have problems to really come back on track in steel production in Europe.
So you mentioned a few things. I'd like to get into the details of at least one of them. There's going to be an active debate this week as energy ministers convene as we speak right now to discuss, but also at the end of the week, European leaders, the question of the emissions trading system that exists within Europe, which is seen by some as just a massive tax on energy. Others are saying it's an effective climate target. Of course, a lot of the European steel companies have been adapting their business models to conform with the ETS. What is the view from the steel industry in terms of what should be done with the ETS?
The emissions trading system is definitely a tool that can work. The disadvantage we have here is that it's a unilateral tool. It's only applied to European industries, not to those who are importing products from outside the EU. So that's, of course, an issue. We have a crisis today. That does not mean that we should abandon the ETS, because a number of our companies are already transitioning to low-carbon steel making. Others have more difficulties. For example, in Central Eastern Europe, we have companies that do not have access to cheaper electricity, that do not have access to funding for capital investment in new technologies. So there the situation is much worse than, for example, in Scandinavia. From that perspective, we need a balanced approach. What we are asking as a European steel industry is not to abandon the ETS, but to slow down the CO2 free allocation phase out.
Okay. And then also talking about the other theme that is obviously is top of mind for the steel industry, trade, the tariffs with the United States now currently on 50% for steel and, of course, the sort of derivative products. What are you hoping to see in terms of those negotiations? And as a second part of that, the consequence that we've seen from U.S. tariffs on the Chinese side, how concerned are you from dumping from there, so both the U.S. and China?
Yeah, first of all, we lost 30% of our steel exports to the US in just 6 months after the 50% import tariff by the US last June. So this is, of course, a shock for our industry. On the other hand, there was agreement with the EU that there should be a discussion how to tackle global excess capacity together with the US. So we hope that we will come back to that discussion in the next few months. Secondly, impact from China is significant. We have quite a number of trade defense measures on Chinese steel, anti-dumping, anti-subsidy. But currently the Chinese are able to undercut this again and export again significant volumes to the US. So it's important to tackle this again.
And something we've talked about a little bit less are these trade deals that have been struck with Latin America, with India. They're not fully implemented, but I'd like to get your appraisal from the steel industry and what effect this could have on the European steel industry.
First of all, it could have a positive impact because our customers, the automotive industry, for example, is exporting to Latin America. So there are some opportunities there. The automotive industry has had less possibilities to export to India because of the protected market in India. The opening of the India FTA, of that market, for the automotive industry could also help us.
Well, Axel Lager, thank you so much for your time. Director General of the European Steel Association there, called Eurofair, on all the issues that are affecting the steel industry, a very long list of them, added only by the war in Iran. Lizzie.
Oliver, thank you so much. That's our Chief Europe correspondent, Oliver Crook, in Brussels. Thank you. Well, let's take a look at what else we're watching throughout the week. Today, we have US-China talks continuing in Paris. We also have the NVIDIA GTC, the CEO, Jensen Huang, delivering a keynote at that GPU technology conference. Then tomorrow, we have the RBA's rate decision, one of the few central banks actually expected to move, a back-to-back hike expected here. We also have President Trump hosting a bilateral with the Irish Taoiseach, Micheál Martin, before on Wednesday, we kick off with the rate decision from the Fed, before on Thursday, the BOE, ECB and BOJ rate decisions. We also have the Japanese Prime Minister Sanai Takaichi visiting the White House, and on Friday, the EU Leaders Summit, Tom.
OK, let's bring in Skylar Montgomery-Coding right now from our MLive team. Skylar, is this a market this week that remains captured by headlines versus fundamentals?
Yes, I mean, absolutely. We haven't really gotten anything new over the weekend. I think, if anything, markets are a little bit more worried about the conflict being protracted. If you look at betting markets, there's more worries now that'll go into kind of April and May, and that's quite negative. And I think what's also negative is just this idea that if you have an environment where you get continued uncertainty, that's a negative in itself, because you get pinged around by these headlines coming through. You have to react to them, because if you do get the move, it will be quite large. And so you have this heightened volatility, this choppiness, and that's negative for equities in itself, because it means that if your economic environment is more uncertain, that means cash flows are more uncertain, and you should demand a higher equity risk premium. It also means that financial conditions are automatically tightening, so you get wider spreads, higher equity risk premium. That means that there's less confidence, and you have, less buybacks and issuance, and you also get this mechanical de-rating, or de-risking rather, when volatility is elevated, because some strategies have to sell automatically when volatility is high of that high volatile asset into other things.
OK, and it's a big week for central banks. The RBA is up first. If we're going to get surprises this week, Skylar, where are they going to come from? Maybe that's an impossible question to answer.
Yeah, I mean, I can tell you where they're not going to come from, probably the ECB. I think the RBA is interesting from the perspective of back-to-back hikes. And it's also interesting because despite the Australian economy being relatively small, when we had a hike from them in February, there was a feed through to other markets. There's not a lot of comparisons that you can make between Europe and Australia in terms of one's an energy exporter, one's an energy importer, etc.
And they were already hiking, right?
Yes, and they were already hiking, but I think you'll still likely see spillovers, and the spillovers are most likely to be in those kind of fiscally vulnerable economies. So the ones that have a tendency to underperform during a sell-off like the UK, or the economies that were already at the end of the cutting cycle. Markets always look for hiking cycles as soon as the cutting cycle ends. And so there's kind of this bias to want to look for that, and that's Europe and Canada.
Do you know what's weird? Oil's up, but traders are trimming bets on ECB and BOE rate hikes. Weird one. Skylar, thank you for coming in. Skylar Montgomery-Coding from our MLive team there. Thank you very much. Well, we are looking at a pretty range-bound session here in Europe. The Stock 600 flat to the downside, and not a whole lot of movement elsewhere on the continent. That's it for the opening trade. The pulse
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Iran denies President Trump's claim that Tehran wants ceasefire talks, while Dubai's main airport and a key oil port in the UAE are both targeted in a fresh wave of attacks across the Persian Gulf. President Trump says he is, quote, demanding other countries contribute to the defense of Hormuz as it remains effectively closed to oil tankers. And UniCredit makes a €35 billion takeover bid for Commerzbank, but says it does not expect to take full ownership just yet. So there is quite a lot going on in the markets, not only in terms of M&A, but everything that's happening in the Middle East. So we look across assets to S&P futures. They're gaining some 0.4%. Look, I have to say the stocks futures are rising. The focus definitely on oil, and the focus is whether there are any signs that the Strait of Hormuz will reopen, as well as a slew of central bank meetings this week. Again, the U.S. president actually urging other countries to send warships to keep open the Strait of Hormuz. And you can see Brent at 105.25. This is a picture for the European markets map. Again, a little bit of concern out there, but nothing like we saw in the last couple of trading days. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So the U.S. president is ramping up pressure on other countries to contribute to securing the Strait of Hormuz, which Iran has effectively closed to oil tankers. Now, speaking to the FT, Donald Trump threatened to delay his summit with China's president and said that NATO would face a very bad future if they don't help secure the vital shipping channel. Well, speaking on board Air Force One, the president said he was in talks with 7 countries to get involved.
Really, I'm demanding that these countries come in and protect their own territory, because it is their territory. It's the place from which they get their energy, and they should come and they should help us protect it.
Well, reports this morning say a major port in the UAE has been hit and damage there is being assessed. It's one of the world's largest oil storage sites. Now, events in the Gulf are adding to inflationary pressure around the world. Central banks are about to make their first assessment of economic damage after more than 2 weeks of conflict between the U.S. and Iran. Now, ahead of its Global Investor Summit this week, Bernie Mensah, the president of International at Bank of America, is here with me. Bernie, thank you so much for joining me. As always, there's, of course, a lot going on. There's a lot of anxiety about inflation, about, of course, also what happens to people in the region. Like, how do you view this as a first and second round impact?
I think that, thanks for having me here, Francine. Good to see you. I think this week is a lot of central bank meetings coming up, and I think that's exactly what they're thinking about. Is it a tightening because you think there's an inflation shock coming through, given the supply shock? Or is it actually a hold or a weakening because the second-term impact might be a weakening in growth? So I think that's the question that the markets are trying to think through right now.
Do you worry about some kind of policy mistake? Because, again, things move pretty quickly, and we actually don't know what happens to the price of oil or the Strait of Hormuz.
Yeah, I don't worry too much about that, but I think they'll make decisions. We'll have to adjust to them. I think they're trying to make the right decision, given the information that they have, as are all of the markets. So the key question is it temporary? And actually, when you replay some of the conversations we had during COVID, that's really the debate that they will have. I mean, my sense is that there will be a bit of a supply shock. How that feeds into different inflationary bits, we'll have to see. But there's an element of physical constraints as well as the price constraints as well.
How are your clients behaving?
I think that everybody is back to some of the playbooks of thinking, okay, what does this mean? Really trying to look through the fog and figure out where things land. It depends where you are. If you're close to the epicenter of the power markets, and in fact, some of those are sovereigns and countries that are thinking through what their supply chains might look like, not just in the headline crude, but in all of the products, even all the way through to things like sulfur that might drive copper production. So everybody's just going back and figuring out what resiliency they have, where else they might go.
So this is like shifting supply chains. Is there also less spending in general, or are chief executives not buying anything at the moment because they're a little bit in a wait-and-see situation?
Well, I think in the M&A space, we saw a transaction announced in Europe, but actually there might be more spending in the capex space because you're actually rushing to secure other production. It's interesting because we are looking at a lot of the constraints that might come through, but I suspect if you're in the energy industry, there might be some other supply that might be coming online that might be seen as more viable. Even if it doesn't come in on time, I suspect that there'll be more resiliency. There might be other gas, provinces that might, now be more incentivized to be online.
Bernie, do you have any clients actually saying, I just want to get out of the markets right now and wait and see what happens in the next couple of weeks?
It's really interesting. Last week, my sense was not, when I was talking to a lot of our traders and trying to figure it out, you could see that people didn't want to miss the bounce, as it were. So people were not leaving the market, but maybe they were not leaning in. I think that the longer this goes, I haven't seen yet a sense of, okay, where's my safe haven? Where do I go and park myself? Which feels like it might just be at the very, very short end. I think a lot of people are still trading in the market and sort of saying, look, at some point there will be an end to this. And when that happens, I need to keep an eye on where the fundamentals are.
And have you gotten more calls from your Asian clients than European clients? Or, again, depending on where you sit, actually, you live this very differently.
Yeah, absolutely. It's such a global thing. I think out of Asia, there's been, there's a big rally in Korea earlier on. In Japan, the new Prime Minister Teki came on, so you can have a whole dialogue around that. There's a China-Hong Kong piece in terms of how the Hong Kong markets have been and what China's reaction function might be. In Europe, there's still an eye on Ukraine, you might say, and there's a sense that maybe the energy markets are a little bit more, face slightly more challenges than perhaps the U.S. But then if you look at TTF and other crude reactions, it's much less this time than it was during Ukraine. So I think it's spread all across, really.
Bernie, what are you doing for your staff on the ground?
Oh, we, at the moment, we're really work from home. We're giving them as much support as we can. I have a call with some of the team later today. We are in constant dialogue with our teams in the region. Really terrific leadership there in MENA, run by our regional country executives. So we're giving them all the support that we can get.
Are you expecting to move people to Europe or elsewhere?
No, we're not expecting to do that. People privately can do whatever they want to do, and then the firm is really helping to support our clients, make sure that we're there to provide the liquidity, to provide the analysis. We've got a terrific research team, some in region, some outside, that are, to the question you asked earlier. So all of that is going on. The resiliency is so important. And then, critically for our clients, just interacting with them and providing the liquidity. But for each individual person and their circumstances, we've got a terrific HR team that are there to support.
Bernie, I mean, the other big question is, of course, private markets or private credits. And Bank of America was, just starting to get quite serious about it. What does it mean for your plans there?
I think our plans are the same, which is that we didn't rush into it. We're massive participants in the credit markets and the public markets and the DCM markets, all of that. We've been watching the private market very well. We've had debates with the private market participants, with the regulators for years as to where the boundaries should be, how that business should be. So we feel very good about our credit positioning and how we support our clients in that space.
Do you worry that, again, I mean, going back to the markets, that something happens that's accelerated in the next couple of months because of inflation going up, because of interest rates needing to go up, because of what's happening in the Middle East?
Well, I think if I can answer your question in one way, as an old trader, one of the things that has bemused me always in the markets is what causes sentiment to change. You can go through the same fact pattern and the market reacts one way. You can go through the same fact pattern and the market reacts another way. Perhaps a preponderance of things, as you're suggesting. So do I suggest a fundamental sort of break in confidence? No, I don't think so. I think that a lot of interesting things are going on in the underlying economy, in the technology space, in private assets, in different economies that are doing well, India, places like that. But I think we have to be careful at all times that, if there is that sentiment shift that happens where everybody says, actually, I'm going to look at the glass half empty. I do think in the meantime, the dialogue that we're having about private markets, I think it's terrific, actually, because as you debate it and you shine a line on it, it's a bit like commercial real estate in the U.S. a year and a half ago. Christine, we were talking, oh my gosh, what's going to happen there? All the regional banks in the U.S. are going to stop lending. There's going to be this sort of, desert of abandon. And I think that debate around credit is a good thing, because I think it'll shine a light on it. It'll force people to look at their positions, raise, if those underwriting standards had slipped, raise them. And if we can manage through that and there's some price hits, that's okay.
So, I mean, is it like a reckoning? How would you describe it? Is it, if there is, I guess, pockets of private credit that get taken down?
Yeah. Exactly.
Was it the right thing?
Yeah, if pockets get adjusted, then that's a very good, healthy cleanup, as it were. And I think it is a resilience. People might sort of say, well, because I'm part of the market, but I think it is a resilience of the marketplace where regulators are looking. By the way, journalists and media are asking the right questions. We get our credit book analyzed by 20, 30 regulators around the world all the time. So if that happens and there's a real light shines and it gets shaken up and all the stress tests happen, the US CCARs, all of those things, and other stress tests around the ECB and the Bank of England, then I think we end up in a better place if we don't break the egg at the same time, which I don't think we will.
Bernie, you also have always talked about AI very comfortably. Does it change, again, given the uncertainty, does it change the game for AI or some of the valuations out there?
I think that for AI, the credit market and the energy markets will have an impact on the technology space, and I think they'll have to be so much tougher about the energy they use, how efficient they are, their ability to fund mega-scale data centers that can do anything. So some of that free money, some of that cheaper money at the margin may not be there. But again, that's not a bad thing. I mean, I think the amount of power and energy that we're using to drive that next 5-10% of inference capability or efficiency in the AI models will always be questioned. Because, by the way, a few months ago, there was a question of the return on those investments anyway. So this will force, more returns on that. But overall, I think there's huge opportunities in that space.
I mean, it was only 4 or 5 weeks ago. Like, you tend to forget that there was a massive, maybe not a massive, but a big daily market correction because of some of the industries that AI was going after. Does it change anything what does it change, actually, for financial services, asset management, or anything else?
Well, for financial services, I wouldn't say we're at the forefront of this. I mean, I think the debate that was happening is AI going to undermine, software as a service type companies? Yeah. What does that mean? So I think there was a debate there. Interestingly, you might say we got a little bit further to the front because we're the end users of those services. Yeah. So actually, the debate between the AI companies and us got shortened a little bit because if there was a debate as to the fact that this new tool could provide a service, then they needed to understand what we need from those software service providers. So in that sense, maybe there's certainly coming through from the sort of an uptake in that dialogue.
But at some point, is there a worry of how you deliver alpha if everybody has the same access to the same tools?
From what they asked for, yes, I have no doubt that there'll still be opportunities to deliver alpha. I don't think history is as Fukuyama said, I don't think history is dead in that regard. I think there'll be better tools, there'll be faster tools. I mean, we've seen that if you look at the foreign exchange markets. When I started this business, by the way, there were a lot of European countries, the lira, the Dutch guilder that were traded. All of that went away. Those traders went down by 70–80%, but those desks remained the same. So machines are talking to machines trading a lot of flow FX, but we can provide structured solutions. When you go on holiday, you can decide at the point of payment if you want to pay in one currency versus the other. So I think what it'll do is it'll crowd in a level of sophistication around different asset classes and still make room for alpha generation.
Bernie, how much do you worry actually about, again, oil prices or inflation if this is protracted? So if this lasts, let's say, 1–2 months, even longer?
Yeah. I worry about I am starting to worry, and I'm getting myself educated on the physical impact, slightly less the price action. I think the price action, there's still a lot of flexibility in the marketplace to absorb that, and not enough players to sort of tease that out in large oil companies and trading companies. But I worry about a supply, the Middle East being part of a supply chain that if you're not in the market, you don't fully understand. So where is jet fuel? Where is sulfur? Where are some of the gasolines and the products? Where are they actually refined as opposed to pure crude, and making sure that ends up, natural gas is not stored for long periods of time. It's a little bit of a just-in-time supply chain. So I think that those supply chains need to keep moving. So if those were impacted in a meaningful way, I think the markets are incredibly resilient, companies, our corporates are, but I worry a little bit about the physical aspect of where the actual molecules or products are.
Bernie, thank you so much for joining us. Bernie Mensa, their president of International at Bank of America, and this, of course, is ahead of their big global conference in Europe this week. Now, coming up, the U.S. president demands other countries step up as the Strait of Hormuz remains effectively closed. We'll have plenty more on that next, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg.
Pressure on other countries to contribute to securing the Strait of Hormuz, which Iran has effectively closed to oil tankers. Meanwhile, a key port in the UAE has been struck for the second time in 3 days, which lies just outside the strait. Well, let's bring in Bloomberg Horizon's Middle East and Africa anchor, Jumana Bersecci. Jumana, thank you for joining us. President Trump is urging NATO allies and China to reopen the strait. What do we actually know?
Yeah, that's right, Francine. So a couple of lines here. The first is what the U.S. is conducting in terms of military operations in the region, and the second is their attempts to forcefully reopen the Strait of Hormuz. The latest being that he is calling upon 7 countries around the world to participate in this coalition of sorts to help reopen the strait and ensure the safe passage of vessels, including the likes of UK, France, of course, key NATO allies, South Korea, Japan. The defense minister of Japan has already dismissed the idea or said that the bar for them to get involved is very, very high. And then, of course, China, and China being a key player here because the lion's share of the seaborne oil that goes through the strait does end up in China's hands. We haven't had an official comment yet from China, but the state-run Global Times, which is a weekend tabloid, dismissed the idea and said this is Trump's attempt to spread the risk of a war that Washington started and cannot finish. So it's unclear at this point whether any of those countries that he's called on are going to willingly participate. At the same time, from a military perspective, as I started off saying, one of the big escalations has been that the U.S. struck Karg Island, that is the key island for Iran to export its oil. They hit military infrastructure, but in retaliation, Iran has said that they will strike back at even non-U.S. assets in the region. They are attesting that the U.S. launched those strikes from the UAE. The UAE have rebuffed those claims. That being said, we've seen several attempts, strikes at Fujairah. This is one of the key ports, strategic ports in the region, and an intercepted drone attack on a fuel depot around the Dubai International Airport this morning. So really no letting up here, Francine, and it is day 17 of this war.
Elsewhere in the region, flights are gradually resuming out of Dubai's main airport after drone incidents. What can you tell us, Drew?
Exactly that, Francine. So in the early hours of this morning, there were reports that a fuel depot very near to Dubai International Airport had been struck. It caused a fire. Shortly afterwards, the Dubai media office released a statement saying that the fire had been contained. There were no injuries. And remember, there was a similar incident to this about a week ago where there were actually 4 injuries on back of an intercepted drone. But on the back of that, the Civil Aviation Authority briefly suspended flights. And in fact, flights were temporarily halted for 7 hours. Emirates Airlines, the state-owned airlines, has resumed operations now, but with limited capacity. And of course, this is part and parcel of them looking to return back to normal, but activity levels are still way below where they were before the war started.
Jumana, thank you so much. Jumana Bersachi there from Dubai. Now, the Fed, the ECB and the Bank of England are all expected to hold rates this week on the new inflationary headwinds from the conflict. Let's discuss what it means for supply chains and, of course, portfolios with Johanna Kirkland, Chief Investment Officer at Schroders. Johanna, thank you so much for joining us. I mean, the world is on tenterhooks to see what happens with oil and the Strait of Hormuz. This must be very complicated for central banks.
Yes, I mean, there's a number of cross-currents here, although we would argue that to some extent some of the rate cuts that have been priced in, particularly for the Fed, were a bit too aggressive. So we're already biased towards expecting inflation to be more of a risk than growth. So let's see. I mean, I think for now they'll stay put. We'll have to see how long this continues. I think there's still upside for bond yields.
Johanna, I mean, if this stays, as it is for a long time and you see dollar, actually oil staying at like 105 and going even higher, what choice do central banks have to do?
Well, I think my expectation is initially you'll see a sell-off in bond yields as they price. We still have a rate cut priced in the United States, right? So I think that probably needs to be taken out. I think while we remain at this level of oil price, I think it's unlikely. Having said that, I think ultimately, a rise in the oil price is a growth shock, I think, more than an inflation shock. So we will get to a point, the more this is protracted, the more there will be concerns about growth, the more likely it is that central banks look through this. And I think people have been drawing parallels with 2022, but it's a very different situation back then. Inflation was already surging. Rates were practically at zero as we came into that year, right? We're in a very different level of yields now. So I think initially it's being viewed as an inflation shock. Eventually, if it continues, I think it will be more of a growth shock. And I think that ultimately the central banks will look through it.
So it's actually quite tough. I mean, you could see a situation where the central banks don't do anything, right?
For now,
because they can't cut,
yeah,
or they can't hike, and so they're stuck. Does that lead to a policy mistake?
I think the policy mistake would be to react too strongly to the spike we've seen. Right. But I think that's unlikely because I think they understand the risks to growth as well. So for now they stay put, and I think that's probably the right way to be. And to some extent what has already been priced by markets. So I think it's the easiest path for them.
So what's your ideal portfolio right now?
Well, as I said, we came into the conflict already positioned for inflation. So we were overweight commodities, underweight bonds, and we were positive on equities. I think at this point, I think it's too late to be buying commodities. I think you buy commodities going into a shock. You don't buy them in the midst of a shock. We've just had a price spike. The risks are more balanced here. I think you still need to be underweight duration, though. As I said, we still need to price out some rate cuts. I think people still have to digest this shock from a price perspective. And also, we're underweight credit as well, because, again, there's very little reward in current credit spreads to take account of the risks that we see, not only from an inflation perspective, but also potentially increase in default rates. So stay underweight fixed income for now. With equities, I think volatility is likely to persist. I think that the current environment does favour exposure to the United States because it does weather these kinds of things better. But we also need to look to the medium term. The challenge here is we've got multiple time horizons going on at the same time. And we still see fairly resilient corporate earnings and a low risk of recession.
I mean, are you favourable in UK stocks compared to European stocks, or actually do you look further afield?
I think that obviously the UK has a very defensive sectoral composition, which helps it in this kind of environment. So I think people should own UK from a diversification standpoint. But generally, we would favour the US over Europe at this point because it is less vulnerable to the oil price and also benefits from some of the trends we're still seeing in technology.
John, I mean, is there something actually that you look at dollar and you say, if dollar, you know, what does dollar do from here? And that could change everything. It could change also what the ECB does because of the connection with euro.
We have actually moved positive on the dollar. And the reason is because it does help us to hedge the portfolio a little bit. Again, this is all about trying to get through the volatility without overtrading. I think it's a very bad idea to try and day trade geopolitical risk. We don't have an edge in understanding it. We do like the dollar versus the euro because, again, the US is better positioned for this kind of energy spike. I think the divergence in central bank expectations between Europe and the US is excessive now. I mean, they are still on the same planet. And yes, they have different mandates and different philosophies. But I think the divergence is excessive. So I think the dollar is a helpful position. It's positive carry and it hedges the portfolio.
I mean, emerging markets had a great year last year. What do you do with emerging market debt in 2026?
We still like emerging market debt. Our biggest concern for a number of years has been the level of fiscal spending, which puts, again, upward pressure on bond yields. But the dynamics are much better in many emerging economies. So we actually think that they offer still an interesting opportunity.
And does it depend on the reliance to petrodollars or also to oil? Or how do you, I mean, I imagine the map for emerging markets where you want to be invested in has changed quite a lot in the last 3 weeks.
In the short term, yes. So that creates, again, a need to position across different countries. Yeah. But over the medium term, what we're really focused on is better debt dynamics, which is a structural trend in emerging markets relative to developed markets where we've effectively thrown out the rule book a while ago.
Short term, but you don't know how long this lasts for, right? So are there alarm bells after like 5-6 weeks of oil at this level, or how do you look at this in terms of timeline?
Everything that's priced into the market assumes a fairly short conflict. So obviously anything more than that would cause concerns. And I think in particular, the more protracted it is, the more it poses a major risk to growth. Mm-hmm. So far, we've been positioned for very low recession risk, and we've been biased towards inflation risk. Our portfolio is designed to withstand that. If we see a more persistent rise in the oil price, and if we see this conflict continuing for much more than expected, then we'd have to start reconsidering our growth view, and that will lead to very different portfolio construction.
Yeah, overall, I mean, there's been a lot of talk about South Korea, where we saw record stocks. There's been also a lot of talk of Japan. How do you play Asia?
Well, we like China because, again, we have to remember there's a number of things going on.
You don't think the court was hurt by the perception that it was political decision?
The courts always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London, and these are your top stories. Iran denies President Trump's claim that Tehran wants ceasefire talks, while Dubai's main airport and key oil port in the UAE are both targeted in a fresh wave of attacks across the Persian Gulf. President Trump says he is, quote, demanding other countries contribute to the defense of Hormuz as it remains effectively closed to oil tankers. And UniCredit makes a €35 billion takeover bid for Commerzbank, but says it doesn't expect to take full ownership just yet. So on to our big corporate story, and as we were just saying, UniCredit has made a €35 billion takeover bid for Germany's Commerzbank. Now, the Italian bank says it doesn't expect to move to give it full control. The offer may rankle the German government, which holds a stake in Commerzbank and has repeatedly made clear it opposes a takeover. Our Tom Metcalf joins us with the very latest. Tom, so this is quite nuanced, okay, as you were saying. This is not like, when they say we're making this offer, but we're not going to take full control, what happens now?
Yeah, there's a lot of nuance here. There's a bit of technicality as well. So UniCredit had around about just under 30% of the stake in Commerzbank. In German law, if it goes over 30%, it basically needs to make a mandatory bid. And what it was finding with Commerzbank buying back shares is it was budging up against that 30%. And so effectively, and what I find most interesting is, what this says about long-term ambitions from UniCredit. They've gone, you know what? Let's go across this thing. Let's see if we can get, a few more percentages. And then very clearly what they're really saying is, look, this can be a moment for us to engage with Commerzbank. We want to talk with you. We're interested in doing a bid. But, of course, what this doesn't change is what the German side are saying. And really, so far, it's all very much we're not interested, and basically go away.
Okay, so I want to ask you about the German government and what role, if they could at some point be behind a deal. And also, you told me that they can only make a deal once a year, or an offer once a year. So after this, then they have to wait a year.
Yeah, my understanding of the time frame from now is basically this is a formal bid from UniCredit. So what they have is in May, they will go out to it. Shareholders can participate or not. The smart money is they get a few percentage points because the premium is pretty small, it's 4 or 5% from when I last checked, and then basically that kind of closes off a formal bid at least from UniCredit, at least under the rules, right? But what can happen is talks can continue, and of course, stranger things have happened than if both sides can reach an agreement. Maybe there is some kind of agreement to lift these restrictions. So it will be interesting to see how it comes across, but certainly so far we're seeing all the messaging from Berlin is this doesn't really change anything for us.
Okay, Tom, thank you so much. As always, Tom Metcalf, they're in charge of our EMEA finance. Now, oil has fluctuated on escalating supply risks in the Middle East after a second attack on the port of Fujairah in the United Arab Emirates. The Islamic Republic has been carrying out retaliatory strikes on Israel and Arab states after the U.S. struck military sites on Karg Island. Let's bring in Bloomberg's Anthony Di Paola in Dubai. Anthony, thank you for joining us. So what do we know about this latest attack?
Yes, good morning. Well, we had another attack against Fujairah, which is one of the key oil ports for the UAE. That is a second attack in 3 days because they were attacked already on Saturday as well. In both cases, that they had to suspend crude and oil product loadings. Of course, Fujairah has become increasingly important because it's a port outside the Strait of Hormuz. It's the one remaining viable exit point for UAE crude because Hormuz is blocked. We've got about a fifth of global daily consumption of oil that's blocked inside Hormuz, can't get out, can't get to global markets, and that's why we were seeing oil hitting $100 a barrel. That puts a place like Fujairah more at risk because it is that viable export point, and if that gets cut off again, that's yet another bit of oil that we have halted going to market. So at the moment, we're seeing loadings there suspended as they evaluate what the damage is from that attack this morning, and then we will have to see if that remains a safe area for exporting crude oil. Again, we've had these comments by the U.S. administration about trying to open Hormuz, about trying to get other countries' navies to come in and escort vessels and potentially open that. That's, of course, going to be a tall order. So we'll have to see if that effort gets to become more concrete, Francine.
Anthony, I mean, oil price is currently at 104.8 for Brent. Where do they go next?
Well, I mean, potentially they could go even higher. It depends on whether the market is going to react to things like the attack on Karg, things like the attack at Fujairah, or whether they're going to take positive signals out of something like the flotilla that Trump is trying to put together to open the Strait of Hormuz. It looks like traders are very risk-focused at the moment, so it looks like they're really focusing on the issues around that oil flow being blocked off. If we see the oil flow being blocked off, if we see additional attacks that further restrict the limited exports that we're having now, or if we see any actual damage to infrastructure, we will see oil going even higher than we are now. But right now we're at 100, kind of on that risk, but also not higher because potentially traders are waiting to see how quickly things reopen. But here we are at the point where further damage, further hits to exports risks us going much higher.
Anthony, thank you so much. Anthony Di Paola there with the very latest, of course, on oil and the Middle East. Now, my next guest says the 250th anniversary of the Declaration of Independence comes at a worrying moment in American history, with fundamental liberal principles under attack from illiberal forces on both the right and the left. His new book, Centrists of the World Unite, argues that America should renew its faith in its founding liberal principles to tackle the challenges ahead. Well, Bloomberg opinion columnist Adrian Woolridge joins us now. Adrian, I'm so happy to speak to you because this is a fantastic book. I know a lot of people have been waiting for this book to, come out. And basically, you argue that liberalism needs to rediscover its lost genius. Like, what specific ideas from maybe earlier liberal thinkers do you think we could do with now?
We could do with the notion that power needs to be restrained, constrained by constitutions. We could do with the notion that truth can only be achieved through vigorous debate. And we could do with the idea that individualism should be the test of everything. But that doesn't mean just the individualism, doesn't just mean the freedom to go shopping. It means self-development, the ability to make good, sensible decisions.
I guess, Adrian, the problem is that many voters feel that, the centrists represent the status quo.
Absolutely.
And a lot of people want change.
Absolutely. I think there is a huge problem there. Liberals have become the establishment, and they've become the establishment that has made certain really important mistakes. So you might be inclined to go to the left, to left-wing populism, Greens and things like that, or to the right, to right-wing populism. I think the answer is that that's wrong. Those people will betray you. But we need a new and better liberalism.
But is the rise of populism because of the failure of liberalism?
Absolutely. Absolutely. Partly because they've become the establishment and they've got all the deformations of establishment, self-dealing, being cut off from ordinary people. But also they have made certain big mistakes. The Iraq war was a mistake. The financial crisis was a mistake. I think the pace of immigration has upset people. So liberalism has got out of it's got out of sync with itself, with its best instincts.
But is it an idea problem or is it a communication problem because it's just not that appetizing on social media?
It's an idea problem, fundamentally. I think liberalism is always a mixture of freedom and control, and that mixture has got out of sync. We need to recalibrate the mixture. The mixture was always about doing your own thing morally and doing your own thing economically, and we did a bit more emphasis on social solidarity. And the communication problems and the political problems all stem from the fact that that message has failed to deal with the problems that we have now. You go to the streets of San Francisco. This is a belief that's failing to deal with terrible problems.
I mean, when you look at, again, one of the things you suggest is that liberals should be more critical of big business. Does that help, again, with the psyche of voters?
I think we've always been, as liberals, since about the 1980s, our assumption has been that big business is a good thing, that the state needs to be rowed back. And I think that that's got out of control in some ways. Certain forms of big business, the gambling industry, the big food industry, and the tech industry have become dissolving of good social habits. And self-discipline, self-control. The boom in sports betting in the United States at the moment is completely out of control. It's quite extraordinary, let alone the X and all these other social platforms that thrive on deceiving their audience or on selling hot emotions to people who are already a bit troubled.
But is there space then for less hot emotion? Because actually it does feel like, a lot of countries are divided here, especially in the UK. Is there really space for the liberals to come back?
Absolutely. After the Second World War, we put all sorts of deliberate constraints on the expression of hot emotions in the political sphere, because we'd seen what happened in the 1930s. Yeah. And those constraints have been eroded, and we have the rise of a new sort of politician, Trump being the leading member of that group, who specialise in stirring up antagonism.
So, Adrian, what I struggle with is that there are real concerns that people have, which is either cultural tensions or divisions or immigration. So you need to tackle those.
Yes.
And so how do you do that as a liberal if you don't want to become a populist or make sense? Actually, it's not a worry that we should have.
One of the things that liberals tend to do now over the immigration problem, which is at the heart of a lot of things, is either to say it doesn't exist, there's no problem there, and anybody who says there is a problem is a racist, or use exactly the same arguments and language as reform, as the populists. And what we need is a liberal solution to what is a real problem. And the problem is about the pace of immigration. It's about the education level of the immigrants we're bringing in. Education is a proxy for social adaptability. And it's about an emphasis on assimilation. And in the worst cases, we haven't assimilated large numbers of people who just create parallel societies.
Who in the real world is a liberal and has a chance of getting in?
Well, that is an extremely vexing question. I can't really answer that question because I think what's happened is that we have a liberal establishment which is discredited and a bit confused. So we need to have a revolution within liberalism from younger liberals. I would say that the new mayor of San Francisco is an interesting example of somebody who says, look, things have got a bit out of control. We must have more attention to social solidarity, the state of the streets and things like that. So you are getting people coming up, mostly not politicians, when it comes to the issue of phones in classrooms. The campaign has generally been led by ordinary, engaged, worried parents rather than particular politicians, and the politicians have followed on.
So
we wait for Bill Clinton to come along, the new Bill Clinton.
Thank you so much, Bloomberg Opinions. Adrian Woolridge, of course, author of Centrists of the World Unite. It's a good book. It's an easy read. It's written with clarity and also a lot of historical reference. Now, Melinda French Gates is my first guest on the new series of Leaders with Francine Lacqua, the podcast, which launches today. Having navigated some of the most defining transitions in life, she spoke to me about leadership, resilience, and why people sometimes stay in top executive jobs for too long.
I think sometimes people stay too long because their ego's attached to the job or because they're too afraid to make the transition. And they may not even realize they are afraid, but it does take courage to make a transition. And so I try to say to them, look, there's something beautiful on the other side. You may not know what it is next. You may be afraid, but when you make the transition, you're also making way, making room for what might come next for both you and whomever's to come behind you, right? And so I think as leaders, it's our job to understand, when is it time to go? When do we need another leader in this role?
How would you advise is it up to the people that surround them
100%.
To say, like, look, hold on, think about what you're doing, or is there something that they need to think about from day one?
I think it's both. I think they need to lay out for day one, what are they trying to accomplish? What happens if they don't get there? What is their exit ramp for themselves? Do they have a time limit? Like, if I get X done by year 5, but if I don't, will I leave? So having a plan going in, and then they have to surround themselves with people who are truth tellers and who they will truly listen to, right? Because once you get into a position of power, people are always going to tell you, you're doing well, you're doing great at this, aren't you fantastic? You have to have truth tellers around you, and you have to be willing to listen.
I feel like that's the hardest thing. It's making sure that you're not in an ivory tower where people say you're wonderful and actually you're doing things that are wrong.
Absolutely. I worry about that for myself. I worried about that at the foundation, like, who's not telling me the truth? And I knew there were a lot of people who weren't, but you know what? I could find the 2 or 3 that would tell me the truth about my leadership or something they didn't think was right about the organization. And so I had to make that safe for them. I also, outside of that, I'm very close to my family. And so my 2 younger brothers, my older sister, they will tell me the truth. And they never, ever let me think that I'm all that, especially my brothers.
And you can catch more of that interview with Melinda French Gates in the first episode of Leaders with Francine Lacqua, the podcast, which launches across Bloomberg TV at 10 p.m. this evening, London time. Coming up, we'll talk to the Irish finance minister as the EU discusses expanding a naval mission to the Strait of Hormuz. Our interview with Simon Harris is next, and this is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. we go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
And I think, Francine, the scale of the economic impact will obviously depend on the duration and the depth of the conflict. So, of course, from an economic point of view, let alone a humanitarian point of view, the most important thing we need to see here is de-escalation. The longer this conflict goes on, the more concerning the economic impact becomes. And, of course, there is a degree of, from an economic point of view, here we are again in terms of the uncertainty channel. There's already been so much uncertainty in the world. This heaps further uncertainty on the European economy.
Do you see any signs of de-escalation?
Being very honest, I know there's a lot of effort going on from many countries, including positive efforts from the European Union. But I think the jury is out in terms of where that's going to go. But we really do need to see that de-escalation, both from a humanitarian point of view and from a global economic point of view, too.
Are you expecting the Irish government to have to intervene to do something on energy prices if they either stay at these levels or go up even further?
So we're preparing a range of measures that we could deploy in a variety of scenarios. Of course, we're trying to get the best macroeconomic analysis to make sure we make the right interventions, because what could seem right today, as you know, could indeed be the wrong medicine tomorrow. But we are prepared to take action should that be required, and we'll bottom out our analysis in the next few days.
Yes. How do you think about that? Because, again, this is a timeline. You don't want to make a rash decision too soon and then have to reverse it. But at the same time, you need to give assurance to the people.
That's exactly right. And if you look at the last 10 days alone, I mean, what we've seen in terms of the price of a barrel of oil, we've seen it at $85, 120, down to 87, back to 100. And that's just a reminder of the volatility. But there is a point at which we'll have to call it. And I think all European governments, and indeed the UK government, I'm seeing the Chancellor of the Exchequer later, are trying to get that intervention correct. So we are prepared in Ireland to act, but we're trying to make sure that the course of action we take is the correct one. Because while we're talking about energy today, should this conflict go on for a prolonged period of time, of course the economic impact is beyond energy. Inflationary impact on growth, impact on the Eurozone. So we do need to try and make sure we get the best possible data across the Eurozone in the days ahead.
So what's the right way of thinking this for the EU to actually be more energy independent?
This is the key point. I mean, the key point is the European Union still finds itself too reliant on what happens in other parts of the world, and still finds itself too impacted by decisions made by others. And this has to be a sharp wake-up call in terms of the acceleration of energy independence in the European Union.
Ireland's president has condemned the violation of international law in the current conflict with Iran. Does the government back the same view?
Our president has every right to speak on behalf of the people of Ireland, and indeed has a mandate to do so. And she's right to remind us of the horrors of war, and that we should never become numb to those horrors of war, and the importance of international law and the UN Charter. Ireland always supports international law, and we want to see a de-escalation as quickly as possible.
But the Spanish Prime Minister has been very vocal vocal and actually going against what's happening from the U.S. and the Israeli side. Again, would you support that view? Are you closer to the way the Spaniards are looking at this, or other countries in the European Union?
I think we've been very clear right across government that we want to see a de-escalation, that we want to see the conflict come to an end as quickly as is possible, that we very much believe in international law, and indeed that this conflict is the intervention is not mandated by the UN, and Ireland has always been a very strong supporter of the United Nations. So we're deeply concerned about what we're seeing, and we can never become numb to the horrors of war and the impact on civilians.
I mean, Ireland is a very close trading partner to the U.S. What does this mean for trade? If the U.S. asks for full support of its war in Iran, what's Ireland's position on that?
I don't think that will arise. I think Ireland's position on international matters is well known by all. I think our relationship with the US is deep, it's meaningful, it matters on both sides of the Atlantic, economically, but culturally, person to person. There's about 30 million people in the US who claim Irish heritage. But it's also okay to disagree with friends on occasion too, and to have different viewpoints. And Ireland has very clear views around international law, around the UN, and indeed we work with European partners in relation to that. But it's important to show up and to keep talking and to keep engaging with the US.
But what should the EU's position be, for example, in trying to secure the Strait of Hormuz, something that seems very dangerous, but also unclear how that happens?
Yeah, I think that is a fair point, and I know EU foreign ministers will give further consideration to this today, to what practical measures can we take. Because while there's lots of discussion, understandably, around cost alleviation measures that can be taken to help people across Europe, fundamentally this is a supply-side issue. And we need to ensure that there can be a supply of oil and certainty of that globally too. So we need to see what practically can be done at a European level, and I know foreign ministers will be considering that today.
Deputy Prime Minister, how do you see this trade deal actually between Europe and the US? Because it's unclear if the old one holds. I mean, everything's been shifted to the Middle East, so we're not really talking about this deal anymore.
I think that's true. The opportunity cost, and I say that purely in an economic sense, to this latest level of uncertainty and conflict is absolutely huge. It's in many ways taken attention off Ukraine. Putin has in many ways been a beneficiary of rising oil prices, and it is really important that we don't lose sight of very important issues around our trade agreement too. We worked very hard at a European level to try and agree a trade agreement with the US. It's imperfect, but it is very important that both sides now honour that agreement. We stand ready to honour it on an EU side. The relationship matters to both the European economy and the US economy, but it is important that they'll be in a position to bring clarity from the US side as quickly as possible.
How are you looking at defence spending, and actually how much more can you increase given the neutrality of Ireland?
So Ireland is militarily neutral. In other words, we're militarily unaligned. We're not politically so. We stand fully with the people of Ukraine. We're not immune from security risks. We have undersea cables. We're not immune from cyber attack and the likes too. So we take very seriously our national security, and we're investing more now in defence and security than ever before. And we stand willing to do more, because just because of our geographic location or our military neutrality, that doesn't provide a magic shield in terms of protection.
And do you think that will be the case for all EU countries, given the uncertainty, actually, and the spectres of war?
I think so. I think absolutely. I mean, and defence and security is such an important issue for the European Union, and we've seen many member states respond in different ways. From an Irish perspective, conscious of being militarily unaligned, our focus will be on increasing our own capabilities around radar, sonar, monitoring of undersea cables across off the coast of Ireland as well. But defence and security is a really important issue of our time.
So Ireland also takes the EU presidency a little bit later this year. What will your three main priorities be?
Competitiveness, security and values. And when it comes to competitiveness, we have to remind ourselves that the European Union needs to build up economic resilience. And one very practical way we can do that is by getting savings and investment union done for once and for all. It's been talked about for decades. I really believe it's within our grasp now, if people are pragmatic, if people are willing to approach these conversations in a can-do way, that we could get this over the line. And during the Irish presidency, I want to try and see agreement on savings and investment union. That will be a personal priority for me. Also trying to steer agreement on the EU's multi-annual budget, the MFF. Again, a very important moment for Europe at a time of huge uncertainty. And continuing to stand by Ukraine, of course, will be a fundamental part of our presidency and all EU presidencies in the time ahead.
I mean, what does that look like? So trying to get people to invest more? Is it incentives?
I think it looks like a number of things. It looks like continuing our practical support for Ukraine, finding ways of unblocking the very, very unfortunate and unconscionable Hungarian block on the loan to Ukraine. But it also looks at how we can help prepare for the day after, if there can be a just, enduring peace. How we help Ukraine rebuild, how we bring Ukraine into the European family, because the people of Ukraine have chosen their future. They want to be European, and I think that in and of itself is a security guarantee.
Yeah. Deputy Prime Minister, I mean, on a very light note, there was also, like, the greatest actress at the Oscars is Irish.
Oh, we are so proud.
She must be a source of, being proud.
Jessie Buckley has lifted the mood of our nation at a time of such challenge in the world.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Investors are giving this bull market the benefit of the doubt.
This is starting to weigh on the market, but we have not quite seen that typical pullback.
Markets have essentially got an assumption that this could be a quick war.
We don't have a lens on when this is going to end. Nobody does.
The market right now is overly complacent in my mind.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, the war enters week 3.
We expect that the global economy is going to have a big positive shock as soon as this is over, and we're still being briefed that it would be 4 to 6 weeks from the beginning and that we're ahead of schedule.
One White House advisor indicating the war could take 4 to 6 weeks following another weekend of escalating strikes across the Middle East. The president is scrambling to put together a coalition to reopen the strait. That story is where we begin this hour. President Trump demanding other nations help to get energy moving once again.
Talking to countries about policing the straits.
I am demanding that these countries come
Speaking to the Financial Times, the president saying if NATO allies don't help soon, the group will face what he calls a, quote, very bad future. The pressure keeps building.
Look, I can't get into President Trump's head and I can't get to the heads of the NATO leaders, but it does seem like there is a signal in all of this, which is there's not an easy off-ramp and it's not clear exactly how we're going to get an end game at this point. The fact that President Trump is reaching out to other people after, already saying some pretty mean things to them and saying, please get on board, gives you a signal that's potentially could go on for a while. Has the market truly priced this in?
The Journal over the weekend reporting the US could announce a coalition as soon as this week. No idea when that would actually become operational, and that piece of it is key.
Oh, it was interesting. It came Sunday night, of course, before the oil futures started trading and equity futures started trading. What was so interesting about the Journal report was this line. They are still discussing it, however, whether those operations would begin before or after hostilities end. Well, if they begin after hostilities end, when are we talking about potentially this coalition coming through and naval escort when it comes to the Strait of Hormuz? When they say potentially the end of the week, next week, 2 weeks' time, it really is unclear. There's a lot of lack of clarity in terms of what countries will be willing to sign up. Japan or Australia already said no. The European Union maybe are going to move their naval escorts they have in the Red Sea to the Strait of Hormuz. But others, it's a big question mark.
This is going to take time, and that's the bottom line. That's why we're repricing crude further out along the curve. And strategists are starting to adjust as well. Morgan Stanley with this. Brent in the second quarter now seen at $110 a barrel. That's up from $80. For the third quarter, they now see it at $90 a barrel. That's up from $70. That story getting pushed out along the curve.
And I keep thinking about what Steve Auth over at Federated Hermes told us, which is that he is still constructive on risk assets up to $90 a barrel. But should there be an average price of crude at $90 a barrel for the average remainder of this year, that starts to curtail growth and materially changes his outlook to the U.S. equity market.
WTI this morning, 99. Brent crude just short of 105. Coming up this hour, Chris Ferrone of Strategas with stocks looking to snap a four-day slide. Norman Rule of CSIS as the U.S. ramps up the pressure on allies. And Kevin Book of Clearview Energy Partners as crude continues to climb. We begin this hour with our top story. Fresh attacks on a major oil port in the UAE, sending crude prices another leg higher. Our team coverage starts right now with Bloomberg's Jumana Basechi in Dubai. Jumana, welcome to the programme. Escalating strikes over the weekend, including that strike that we just outlined. What's the significance of what we've seen over the past few days?
Yeah, so there are two strands you need to think about. One is the U.S. administration's attempts to reopen the Strait of Hormuz, as you were just discussing, looking to build together a coalition of multiple countries to help provide some escorts or naval escorts for ships to traverse the strait in a safe manner. But already it seems as though there's skepticism around this plan. The Defense Ministry of Japan, for example, saying that the hurdle, the bar is very, very high for them to get involved. And of course, the main appeal would be to China, given the lion's share of the oil, the seaborne oil that passes through the strait does end up in China's hands. But still, they have not officially commented. So that is one strand of thinking coming through from the Trump administration. But then, of course, the other strand is the ongoing military operations. And what we saw on Saturday was a massive escalation with the U.S. striking Karg Island. Now, they did hit military infrastructure there. They were not targeting the oil infrastructure, but this is essentially the lifeline of the Iranian economy. About 90% of the Iranian oil that does get processed passes through the island. The fact that the U.S. are now signaling that they could go one step further on Karg Island marks a very deep escalation from their standpoint. And the Iranians have not taken it lightly. They have vowed to retaliate. They have re-emphasized that they are not open to a ceasefire, but also gone one step further this weekend, threatening to strike back at non-U.S. assets in the region and specifically in the UAE. They allege, this is what they're alleging, that the strikes on Karg Islands were launched from the United Arab Emirates. This is something that the UAE have rebuffed. They said it is based on senseless claims, and of course they continue to act in self-defense. But over the course of the last few days, we have seen a meaningful escalation. Earlier this morning, Iranian drones struck a fuel depot near Dubai International Airport. It caused operations to be suspended temporarily. And then in the last 24 hours, we have seen another strike, once again, on that Fujairah key port, very strategic port in the UAE for two reasons. Number one, it is outside the Strait of Hormuz, so it's not actually on the strait. It is one of the largest refueling ports in the world, but then also it's been playing a significant role for that oil land pipeline to get Abu Dhabi oil outside the Persian Gulf by not passing through the Strait of Hormuz. The fact that they have attempted to strike at it twice tells you that from Iran's perspective, they really are beginning to go after key energy infrastructure sites and not necessarily just U.S. assets in the region as well.
Jumana, stay close. Jumana Basechi out of Dubai this morning. The central bankers might have to edit some of those statements. The Federal Reserve meeting on Wednesday. On Thursday, the Bank of England, the ECB, the BOJ. This is a major week for central bank speak.
And I'm going to argue that the ECB is going to be a more interesting meeting than even the Federal Reserve, because what you're seeing is a bigger impact on assets in the region. And frankly, they're between a rock and a hard place, and an even harder place, given the fact that they're facing an inflation shock and a growth shock at the same time.
That meeting taking place this coming Thursday. The view on Wall Street this morning looks like this. Chris Verona, strategist of Baird Company, writing, "We think we still defer to the uptrend in equities. Keep an open mind and stay committed to price first, narrative second approach." Chris joins us now for more. Chris, good morning.
Thank you.
Price first, narrative second. What is price saying right now?
Yeah, well, listen, I think when you look at the broader picture here, most global equity markets are still in uptrends. At the same time, I'm not convinced we've really seen a deep flush here yet. And you kind of look to not necessarily levels, but what do the internal characteristics of this market look like? You know, we're sitting here with about 40% of the S&P above the 50-day. We really haven't seen the big surge in new lows yet. The put-call ratio remains pretty benign here. So things I would want to see to really mark some capitulative flush, I don't think have necessarily been checked yet. Now, that can change quickly. That can happen very quickly. I want to be open to that happening over the next week or two, but we haven't checked those boxes yet.
We've repriced energy. Yeah. We've repriced rates. Where have we started to reprice growth?
Well, I think that's the big question from here forward, and particularly when you put it in context of the Fed, you know, it's crazy to me that you see all these narratives being written that central banks are going to tighten into this. I think central banks have learned along the way you don't tighten into energy shocks. I think, if anything, you know, if this gets worse than people anticipate, we should be talking about more cuts, not less cuts down the line. And kind of our barometer to really economic growth, or how the market perceives growth, is what is consumer discretionary doing relative to consumer staples. Now, we've seen a modest correction in that pair over the last, 5-6 weeks, as you might expect. It's really essential to us. Things like that, or banks or industrials, can respond out of this. I think if there's a bigger problem developing, we probably still rally first. We learn about it in the summer as the real cyclical stuff starts to roll back over. That's the timeline for, I think, how this plays out.
Do you think that it's the same in all different regions? We were talking about all the central bank decisions and how it's crazy to think that anyone would be hiking into this, and yet people are expecting the ECB and the Bank of England to hike into this. Do you think that that's plausible, even as the United States maybe faces less of that kind of pressure?
Yeah, listen, I think one of the things that maybe was revealed again to us during the last couple weeks is markets are ruthlessly efficient at exposing what the weak links are. So you think about the last 2-3 weeks as this event has played out. U.S. 10-year yields, yeah, they're up, but they're kind of still in the same range they've been in all year. What's making new highs? German yields, French yields. What's making new lows? The euro. What's making new highs? Aussie, CAD. So the market is so ruthlessly efficient at really exposing where the vulnerabilities or the weak links lie. And I think the European bond markets are in a much more fragile spot here than the U.S. ones. I think the European currency is in a much more fragile spot. At the same time, look at how the commodity exporting FX pairs have all really asserted themselves here, whether it's CAD or Aussie or ZAR or Real. So this is a ruthlessly efficient market in exposing kind of where the fault lines are.
If that's the case, going back to what you guys are talking about, what's the signal in terms of what they're exposing in financials, given the fact that financials are down and down hard, regional banks down and down hard? Is that exposing some kind of weakness there? It's
funny, of all the things you just mentioned, and we can talk about, insurance and private credit and banks, the regionals are actually what I'm least worried about right now. The regional banks are still in uptrends. They're oversold here. I know they're down 10 to 15% across the board over the last couple of weeks, but they're not bad charts or broken charts. And even when you look at stuff like European banks or Japanese banks, they're correcting here, but really haven't corrected from big top formations. I think the bigger question is, when you look at the traditional money center banks in the U.S., which entered the year kind of among the favorite of the consensus, right, because of deregulation and all the like. Can these respond here? You have oversold conditions in Goldman and Morgan Stanley and Bank of America and Citigroup. Can these actually respond here? That, to me, is probably the big question over the next 4, 5, 6 weeks. When you look at kind of the landscape of both geopolitical events and financial events, what you learn historically is underemphasize geopolitics, overemphasize financial events. I'd be much more worried if this is manifesting into the latter.
Chris, why is gold, though, under $5,000 an ounce?
Yeah, this has been something we wrote on the kind of the weekend that war broke out 2 weeks ago. We said, be very alert to what is behaving differently than your own intuition might suggest. And I think gold is, number one on that list. If you had just read me the headlines 2 or 3 weeks ago, you would have got, okay, gold's going to 6,000. The fact that it hasn't, I think, really reflects what was blow-off-like conditions from October through January. In gold, frankly, silver acts a lot worse here. Platinum acts bad. Palladium acts bad. I think these are all going lower. Come up with whatever narrative you want. I think the story will reveal itself in time. But I like precious metals lower here. And, in a lot of respects, I think this commodity bull market's diversifying, right? For much of the last 2 or 3 years, it was precious metals exclusively. I think that's less the story going forward. I mean, these grains have all broken out. I think the industrial metals are still in better condition than the precious. So something there is evolving. I like precious lower.
Chris, it's good to see you. It always is. Thanks for being here, sir. Equity futures right now in the S&P positive by 0.4%. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. President Donald Trump is demanding other countries join U.S. efforts to defend the Strait of Hormuz. The president says the United States is in talks with about 7 countries to help ships pass safely through the waterway. The European Union's foreign policy chief encouraging member states to redirect the bloc's Red Sea naval mission to kickstart that transit through Hormuz. Meanwhile, President Trump says he could delay his planned summit with Chinese President Xi Jinping later this month if Beijing does not help unblock the strait. The president stressing China's dependence on oil from the Middle East in an interview with the Financial Times. Trump also telling the FT that NATO faces a, quote, very bad future if U.S. allies fail to assist. And the key port of Fujairah in the UAE was hit by a drone this morning, halting oil exports. It's the latest in a series of strikes threatening the country's only export route. Fujairah is a major hub for both crude and fuels and has taken on increased importance for global markets because of its position outside the Strait of Hormuz, which, of course, has been all but closed since the start of the war 3 weeks ago. That's your Bloomberg Brief. John.
Yahara, thank you. Appreciate the update. Up next on the program, President Trump demanding a coalition.
We're talking to countries about policing the straits. I'm demanding that these countries come in and protect their own territory because it is their territory.
Up next, we'll catch up with Norman Rule of CSIS, live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The war in the Middle East stretching into a 3rd consecutive week, and right now, crude up again for a 4th consecutive day. Brent crude 104 on Brent this morning, up by 0.9% on the month so far, up by more than 40%. In the equity market, 5% away from all-time highs. That's the correction so far, 5% on the S&P 500. Futures this morning positive by 0.5%. This from Mislav Matejka this morning over at JP Morgan. Have we seen capitulation? We've seen capitulation in sentiment, in our view. That suggests that if one is selling now, the risk of being whipsawed is increasing. The sense of things from JP Morgan this morning.
Yeah, and this is the reason why it hasn't been a deeper correction. The fact that everyone's waiting for some sort of statement saying, okay, we found an off-ramp, and then the rip-roaring rally that has come every single time we've ever gotten a downturn going back since the pandemic. Key question, if there is an off-ramp, will the rally be sustainable, or is there already a hit to growth, to your point earlier?
Nasdaq futures this morning up by 0.6. The Russell of small caps up by 0.5. Under surveillance this morning, President Trump demanding a coalition.
Talking to countries about policing the straits. I'm demanding that these countries come in and protect their own territory because it is their territory. It's the place from which they get their energy, and they should come and they should help us protect it.
So here's the latest this morning. The president ramping up pressure on other countries, demanding support for escorting vessels through the Strait of Hormuz. Trump threatening NATO with a, quote, very bad future and to delay his summit with China President Xi Jinping. Bloomberg's Tyler Kendall joins us now from Washington for more. Good morning, Tyler.
Hey, John, good morning. Well, the White House intensified calls this weekend to reopen the Strait of Hormuz as President Trump now calls on other countries to send naval escorts. Data analyzed by Bloomberg Economics finds that nearly 89% of total oil flows through the critical waterway do go to countries in Asia, and that includes 38% of total flows going to China. This, says President Trump in a post on Truth Social, directly appealed to China as well as some other countries, including Japan, South Korea, France, and the UK, to all send ships. As the Wall Street Journal reported over the weekend that the Trump administration could announce as soon as this week a coalition has been formed to help secure Strait passage, even as publicly many countries are non-committal about sending ships until the conflict resolves. New this morning, though, we did hear from the EU's foreign minister, who is urging member states to redirect a coalition of ships currently tasked with securing passage through the Red Sea to the Strait of Hormuz, though that plan at this point is far from certain. President Trump also ramped up threats in other ways, saying that the U.S. will strike energy infrastructure inside Iran if disruptions continue. This comes after the U.S. on Friday confirmed it had hit military targets on Karg Island, Iran's main export port for oil. Now, John, as these disruptions continue and we wait for the strait to reopen, the Trump administration has said that it is mulling multiple options to help with supply disruptions in terms of prices here for consumers in the U.S. I spoke with the Interior Secretary Doug Burgum on Friday, who told me there are a lot of tools in the toolkit, including potentially intervening in the oil futures market.
Tyler Kendall with the latest outside of the White House this morning. Tyler, thank you. To build on this conversation, Norman Raw, the former senior U.S. intelligence official and senior advisor at CSIS. Norm, welcome back to the program. We've seen reports over the past few days of moving additional assets into the region. In your mind, what does the next phase of this conflict look like?
Good morning. The United States is not preparing for a greater involvement that would lead to boots on the ground, but the commitment to the United States does remain focused on a coercive approach to this. There's no sign of a diplomatic engagement in the near term. So you basically have a situation where the United States approach is to beat down Iran's missile and drone capacity, to hit the regime on its police, its interior forces, in the hopes that this might provoke some sort of unrest, to open the Strait of Hormuz. And at the same time, the regime is trying to outlast this by striking economic targets that echo into the world economy to put pressure on the United States. Each side is trying to outlast the other.
Norm, when it comes to Karg Island, how significant was that hit over the weekend from the president?
Well, the United States certainly destroyed every military site on the island, and the island is indeed the primary artery for Iran's outlet of oil. It has no secondary outlet of any consequence. The port of Jask, which Iran has attempted to open in the Gulf of Oman, has a very modest output, but the Karg Island appears to be operational for all of its oil output capacity. I think there are a couple of ships that burst very quickly after the U.S. military operation. And I think that's consistent with what the president was trying to do. He was trying to message the Iranians, look, we can touch you here if we wish. We're going to touch the military elements, but we could take this farther. Why don't you end the conflict? I don't think it changed the Iranian position, but it certainly sent a message.
In terms of the military strike on Karg Island, what does this mean for the operational capacity of the IRGC?
Well, it doesn't really touch the IRGC's capacity per se. The IRGC's capacity is derived from its missiles, it's derived from its drones, and it's derived from its internal military placements that suppress the people. So it's got plenty of capacity that doesn't rely upon the economy, doesn't rely upon the banking capacity. It's accessible reserve. So it's not a money issue that keeps the IRGC going at present.
What role do you think that ground troops would play? You mentioned that it does seem like there could be a preparation to send a special unit of Marines over, potentially even to Karg Island. Do you understand or have an understanding of what that would look like?
I think that's very unlikely at present. The U.S. commander's first option at this point would not be to create a force protection problem for himself. His goal is to create a force protection problem for the Iranians. This unit, although capable certainly of ground operations, probably would have its first goal to improve counter-drone operations and improve protection capacity for units, although some ground operations could conceivably be part of its mission. It's a relatively small force for such an activity.
Norm, are you seeing an off-ramp evolving here?
Not at present. The conflict will likely continue for some weeks on each side. But this said, the United States and Israel have absolutely eroded Iran's missile and drone capacity to a far, far greater degree than Iran ever anticipated. And the Gulf partners, particularly the United Arab Emirates and Saudi Arabia, have done an absolutely spectacular job of defense, as well as Bahrain, Kuwait, and the Qataris. And I think you're seeing that years of investment of training, equipment, and the leadership of these programs has done spectacular work. And indeed, Fujairah's ability to put itself back online demonstrates just the redundancy of the systems and the leadership of the Emirati oil program under individuals such as Dr. Sultana Jaber, where it's really coming to the forefront of keeping the world's economic programs going.
But Norm, at what point do the Gulf allies have to go to the White House and say enough is enough? There's a lot of reporting over the week about Mohammed bin Salman urging harsh action against Iran. But at one point do they say this is just too harsh right now on our economies?
I don't see that happening yet. Now, certainly there's going to be an economic blow. Remember, these countries derive their economic gains from tourism, from transit. Dubai Airport was hit today by a drone. That's a single drone attack. That's obviously a messaging attack by the Iranians. It's meant to disrupt. It's not meant to cause massive damage. So that economic blow is there. But these countries at the same time have shown tremendous resilience. So you're looking again at going to Abu Dhabi and Dubai and Saudi Arabia. They've shown tremendous capacity to keep their economies going during all of this. Expatriates are generally quite comfortable in these environments by many, many reports.
Hey, Norm, it's good to see you. Thanks for making time for us this morning. A busy morning. Norman Rule there of CSIS. As we're conducting their conversation, just getting some headlines from the Iranian foreign minister conducting a news conference, a press conference just moments ago. The war must end in a way that it doesn't repeat. That headline crossing just moments ago, the war must end in a way so that it doesn't repeat.
Right, which is deterrence, which is the reason why there is this escalating level of attacks, not just on U.S. bases, but also on infrastructure in the region.
We'll talk about crude and energy infrastructure in just a moment. We'll catch up with Kevin Book of Clearview Energy Partners with crude pushing higher. Plus, Yahira back with your morning movers. Meta, this is one to watch in the pre-market. The stock is higher by almost 3%. Reports over the weekend of widespread layoffs. More still to come on that story in just a moment. From New York City, you're watching Bloomberg TV.
कोई गाइस ट्रेल कर लेना क्रूड ऑयल में सेलिंग। ठीक है, एक और पुल बैक एक्सपेक्टेड है, आना चाहिए मार्केट में। सपोर्ट तो काफ़ी दूर है, मुझे लगता नहीं वहाँ तक डायरेक्टली गिरेगा प्राइस। 8400 के आसपास इज़ द मेजर सपोर्ट राइट नाउ ओवर हियर। पॉसिबिलिटी है थोड़ा यहाँ से एक पुल बैक जरूर आएगा, आ सकता है, तो ट्रेल कर लेना, या फिर चाहो तो बुक भी कर सकते हो। पूरे टारगेट के लिए मत जाना मेरे अकॉर्डिंग अभी। नेचुरल गैस कंटिन्यूसली साइडवेज राइट नाउ। पहले ईरान के जो प्रेसिडेंट है शायद उनकी ओर से स्टेटमेंट आया था कि जो नॉन वॉर पार्टीज़ हैं, जो वॉर में पार्टिसिपेट नहीं कर रही हैं या डायरेक्टली कोई उनका कनेक्शन नहीं है, उनके ऑयल टैंकर या फिर एलएनजी सप्लाई को वो स्ट्रेट ऑफ हॉर्मुज से जाने देंगे, ऐसा उन्होंने कहा है। अगर ऐसा होता है तो इट इज़ अ पॉजिटिव न्यूज़ फॉर ओवरऑल ग्लोबल इकोनॉमी एंड बेयरिश न्यूज़ फॉर क्रूड ऑयल। देखोगे ऑलमोस्ट 300 पॉइंट फॉल कर चुका है क्रूड ऑयल ऑलरेडी। यहाँ पर रुक सकता है थोड़ा बहुत क्रूड ऑयल सेलिंग में, अगर कोई है तो या तो निकल जाना, सेकंड टारगेट के लिए मत जाना। फिर रिपीट कर रहा हूँ, पॉसिबिलिटी है यहाँ पर एक छोटा सा पॉइंट ऑफ इंटरेस्ट प्राइस को थोड़ा सा रोक सकता है पर्टिकुलर जोन पे। जैसे देखोगे एक ट्रेंड लाइन भी आ रही है एक्चुअली में, अभी देखना पड़ेगा थोड़ा सा नीचे ट्रेंड लाइन तक भी जाता है क्या सपोर्ट लेने, बिकॉज ओवरऑल देयर इज नो मेजर सपोर्ट ओवर है, ऐसा कोई सपोर्ट मेजर सपोर्ट तो नहीं है। पॉसिबिलिटी इस ट्रेंड लाइन को हिट करके जाने की है, टच करके जाने की। यहाँ पर कोई बाइंग नहीं है, ध्यान रखना, इट इज अ ट्रेंड लाइन। ठीक है, ठीक है, तो लगभग 8850 को भी जा सकता है इस ट्रेंड लाइन को टच करने, 8850, that level will be interesting. लाइन के नीचे अगर कहीं सस्टेन होता है 8850 के नीचे प्रॉपरली, तब एक पॉसिबिलिटी बनेगी वापस यहाँ तक गिरने की, ओवर हेयर 8400 के अप्रॉक्सीमेटली। अगर ये ट्रेंड लाइन के नीचे कहीं निकलता है क्लोजिंग बेसिस पे 8850 मान लो, या 8000, 8850 860, इसके नीचे क्लोजिंग आ गई तो 21 सेकेंड टारगेट मिल सकता है। बाकी अगर ये नहीं करता है क्लोज इस ट्रेंड लाइन के नीचे, तो थोड़ी सी पॉसिबिलिटी कम है कि प्राइस फिर और नीचे जाएगा। ठीक है, यहाँ पर एक पॉइंट ऑफ इंटरेस्ट जरूर है, बट वहाँ से बाइंग नहीं है एक्सपेक्टेड। मेनली मैं इसी को देख रहा हूँ अभी, पॉइंट ऑफ इंटरेस्ट को भी रिमूव कर दो, मेनली मुझे ट्रेंड लाइन नज़र आ रही है जो एक सपोर्ट की तरह काम कर सकती है फिलहाल के लिए। के नीचे सस्टेन करता है तब एक पॉसिबिलिटी जरूर बनेगी, तो देखते हैं क्लोजिंग आती है या फिर नहीं। बाकी नेचुरल गैस भी साइडवेज ही चल रहा है, मॉर्निंग से बहुत स्मॉल सी रेंज के अंदर है, एग्जैक्टली ऊपर भी नहीं आया, सिर्फ 5 पॉइंट की रेंज के अंदर ही ट्रेड कर रहा है। परसों थोड़ा सा बेरिश जरूर हुआ है, बट अभी भी ऊपर एक बार पुल बैक मुझे लगता है आना चाहिए मार्केट को जाने के लिए, या तो परसों से ऑलरेडी सेलिंग चल रही है इसमें, बट शुड हिट वंस अगेन 295 to 298 लेवल। भी देखोगे सपोर्ट काफ़ी दूर है नेचुरल गैस का, वापस से 270 चला जाएगा परसों जहां लो बनाया था। लास्ट ट्रेडिंग सेशन में रेजिस्टेंस लेके गिरा है ये नेचुरल गैस, वापस आने के लिए 295, मतलब यहाँ से वापस ऑलमोस्ट 11 पॉइंट और ऊपर जाना पड़ेगा, 11-12 पॉइंट। बीच में नेचुरल गैस देखो वैसे रुकने को रुक सकता है, सपोर्ट तो नीचे ही है फिलहाल के लिए 270 तक। क्या बीच में रुक सकता है, उसके लिए फिबोनाची लगा सकते हो, वही एक बेस्ट सपोर्ट दिख रहा है मुझे, या फिर नीचे एक ट्रेंड लाइन आ रही है, दोनों सेम ही है लग रहा है। देख लेते हैं एक बार, सेम ही लग रहा है मुझे तो। वैसे कोई लॉजिकल सपोर्ट मुझे नज़र नहीं आता। ट्रेंड लाइन है और आई थिंक इस ट्रेंड लाइन को आगे मार्क कर लेते हैं 285। ठीक है, नीचे एक ट्रेंड लाइन है, इसमें भी नेचुरल गैस में वही लग रही है मुझे तो, और तो कुछ है नहीं। दैट ट्रेंड लाइन में एक्ट लाइक एज अ सपोर्ट। तीन बार तो सपोर्ट ले चुका है इस ट्रेंड लाइन पे, फोर्थ टाइम आएगा। पहली बार में एक हाई बना है ट्रेंड लाइन से, दूसरी बार में हाई बना है, तीसरी बार में ये लोअर हाई बना है लास्ट ट्रेडिंग सेशन का जो हाई है। तो ये फोर्थ टाइम है शायद इस लेवल पे, इस ट्रेंड लाइन पे लगा देता हूँ मैं एक बार। हाई, हायर हाई, लोअर हाई। ठीक है, यहाँ पर एक ट्रेंड लाइन है ये। दिस इज अ ट्रेंड लाइन ओवर हियर, हो सकता है रुके यहाँ पर, बट याद रखना इस ट्रेंड लाइन पे प्राइस पहली बार नहीं आ रहा है यहाँ पे। ध्यान से देखोगे तो ये ऑलरेडी एक बार यहाँ पर सपोर्ट ले चुका है, दूसरी बार यहाँ सपोर्ट लेके एक हाई बनाया है, थर्ड टाइम एक लोअर हाई बनाया, तो फोर्थ टाइम है। अगर ये ब्रेक हुई ट्रेंड लाइन तो बड़ा इजीली गिर जाएगा प्राइस। सो इस ट्रेंड लाइन का ही लास्ट सपोर्ट है यहाँ पर अभी, यहाँ पर प्राइस थोड़ा बहुत रुक सकता है इंट्राडे में। वैसे यहाँ पर एक बार आना तो है प्राइस को, एक बार पेंडिंग है अभी भी मुझे लगता है। देखना पड़ेगा कोई नया रेजिस्टेंस या सपोर्ट ना क्रिएट हो जाए। सो दिस ट्रेंड लाइन इज अ सपोर्ट currently in natural gas in 15-minute MCX chart. ठीक है, सेम कहानी क्रूड ऑयल की भी है, बट क्रूड ऑयल में इस ट्रेंड लाइन पे प्राइस दूसरी बार ही आ रहा है, और यहाँ पर एक बार में मार्केट ने हाई बनाया है, दूसरी बार में हायर हाई बनाया है, तो ये थर्ड टाइम आ रहा है, तो चांसेस है यहाँ पर सपोर्ट ले लेना चाहिए क्रूड ऑयल को। नेचुरल गैस का थोड़ा सा कंफर्म नहीं कह सकते जब तक प्रॉपर्ली ब्रेकडाउन नहीं। लास्ट टाइम भी यहाँ पर वैसे आया था तो मार्केट ने ब्रेकडाउन जरूर कर दिया था ट्रेंड लाइन का, रिकवर कर गया नेक्स्ट कैंडल पे क्लोजिंग होते होते। नीचे सपोर्ट था एक्चुअली, वहां पर जाने की कोशिश करी थी इसने। क्रूड ऑयल की ट्रेंड लाइन देखोगे थोड़ा सा सपोर्टिव है एज कम्पेयर टू नेचुरल गैस ट्रेंड लाइन। क्रूड ऑयल में मार्केट ने इस ट्रेंड लाइन से जब भी आया है हायर हाई ही बनाया है। अभी फोर्थ टाइम ही आ रहा है वैसे क्रूड ऑयल में इस ट्रेंड लाइन पे, बट इसने लास्ट 3 टाइम्स में हायर हाई ही फॉर्म किया है। क्रूड ऑयल गिरा भी तो ज़्यादा नहीं गिरेगा नीचे, नेक्स्ट सपोर्ट के पास में ही है। अगर ट्रेंड लाइन ब्रेक भी हो गई तब भी 8400 तक सपोर्ट है नेक्स्ट। नेचुरल गैस गिरा तो थोड़ी प्रॉब्लम हो जाएगी क्योंकि फिर 280 से ज़्यादा सीधा 270 तक ही जाएगा, विच इज़ अप्रॉक्सीमेटली 5% मोर फ्रॉम दिस पर्टिकुलर ब्रेकडाउन पॉइंट। ऑलरेडी 2% डाउन है, 1% और जाएगा तो लेवल पे आएगा तो 3% प्लस 8% डाउन हो जाएगा उस केस में। कि एक कंसर्निंग थिंग नेचुरल गैस में ये हो सकती है कि इस लेवल पे अगर मार्केट ने नया रेजिस्टेंस क्रिएट कर दिया फिर ऊपर तो नहीं जाएगा वो, ठीक है, उस केस में प्राइस कंसोलिडेशन करके नीचे ही जाएगा। वो ना हो, अगर वो हुआ तो फिर ऊपर के रास्ते सारे बंद, बायर ऑलमोस्ट सर्टेनली ऑन ट्रबल आफ्टर दैट, इफ दैट हैपन। अभी ऐसा दिखता नहीं है चार्ट पे। डीपीआई बैंक को क्या हुआ पता नहीं आज। प्रेशर काफ़ी ज़्यादा आ रहा है इस सेलिंग की कैंडल पे नेचुरल गैस। 5 मिनट और है क्लोजिंग। वो सिल्वर भी आ गया $78 पे, ब्रेक करेगा क्या। दोनों जगह पे ही ठीक है। $78 पे जब भी आता है ना स्पाइक मार लेता है ऊपर की ओर। कुछ ज़्यादा स्ट्रॉन्ग सपोर्ट बना हुआ है $78। मॉर्निंग पे $80 के आसपास कंसोलिडेशन करने की कोशिश कर रहा था, आ गया फाइनल सपोर्ट पे $78 के अराउंड 77 78। सस्टेन हो गया ना 4 आवर टाइम फ्रेम पे बड़ी प्रॉब्लम कर जाएगा। थोड़ी देर पहले जो हम डिस्कस कर रहे थे सिल्वर फॉरेक्स में, याद होगा मॉर्निंग सेशन पे, अगर ये सस्टेन नहीं करता है तो फिर चांसेस हैं वापस से एक बार $62 को टच कर जाए प्राइस। तो $76 $78 निकलता है तो वापस पॉसिबिलिटी है 62। इवन दो ओवरऑल देखोगे मार्केट सिल्वर का भी कंसोलिडेशन में ही फंसा हुआ है दोनों साइड से, बाइंग भी और सेलिंग भी। यहाँ से ऊपर भी जाता है तो कोई बहुत ज़्यादा नहीं है। ट्रेंड लाइन का एक सपोर्ट है जहाँ पर रुक रहा है अभी, वही $78 के अराउंड। भी गया तो मॉर्निंग पे जो बताया था फॉरेक्स में $86 के आसपास से वापस रिजेक्शन लेने के चांसेस हैं। पहले मुझे लग रहा है अगर ऊपर जाता है तो $86 तक वापस एक मोमेंटम आ सकता है रिजेक्शन लेने के लिए। यहाँ पर क्लोजिंग में तो काफ़ी टाइम है 4 आवर की। सपोर्ट ले लिया इसने वापस 77 $78 से। यहाँ देखना पड़ेगा $78 के नीचे प्रॉपरली ब्रेकडाउन जरूरी है। अगर हो जाता है तो लग रहा था हो जाएगा, अब गई भी कैंडल वापस रिकवर कर गई। 2 घंटे अभी क्लोज होने में है, नहीं आती है क्लोजिंग तो फिर दो ही ऑप्शन है, मार्केट रिकवर कर सकता है वापस 86 $87 तक अप साइड पे, वहाँ पर रिजेक्शन मिल सकता है। फिर देखना पड़ेगा, बहुत ही कंसोलिडेशन रेंज बनती जा रही है विच इज़ वेरी हाई, क्योंकि जब भी ये बस्ट होगा रेंज का मोमेंटम बड़ा होगा। फिर अभी के लिए तो बहुत रेंज है, ऊपर फिर से रिजेक्शन मिलने के हाई चांसेस अगर आएगा तो 86 87। और नीचे बता ही दिया मैंने 77 $78। इसके नीचे दो चीज़ होंगी, देखो एक तो हो सकता है ब्रेकडाउन हो जाए तो फिर मज़ा ही आ जाएगा। दूसरा हो सकता है लेवल रिमूव हो जाए, बिकॉज एक्सटेंडेड सपोर्ट जोन है फ्रॉम 82 टू 76 77। तो एक्सटेंडेड सपोर्ट को ब्रेक या तो ब्रेक किया जा सकता है, फिर लेवल रिमूव किया जा सकता है। ब्रेकडाउन प्रॉपरली होगा तो रीटेस्ट के काम आ जाएगा 82 भी। ऐसा नहीं होता है तो फिर नॉर्मल ब्रेकडाउन हो, एक के नीचे एक दो कैंडल क्लोज हो जाए $78 के नीचे, तो फिर स्पेस काफ़ी बच जाएगा हमारे पास। ऊपर 86 87 मेजर रेजिस्टेंस, नीचे 62 मेजर सपोर्ट। अभी के लिए स्टिल 77 78 स्ट्रॉन्ग सपोर्ट बना हुआ है जब तक ब्रेकडाउन नहीं होता। दो कैंडल क्लोज 4 आवर की बिलो 77 $78 ब्रेकडाउन हैपन। लास्ट टाइम भी यहीं से देखोगे मार्केट ने काफ़ी अच्छा लिया था, 81 से 78 की रेंज है पूरी। फर्स्ट टाइम 3rd ऑफ मार्च को सपोर्ट लिया था, फिर 5th ऑफ मार्च को, फिर 9th ऑफ मार्च को। आज भी उसी जोन पर कंसोलिडेशन कर रहा है, बिल्कुल बॉटम पे आके। थर्ड टाइम सपोर्ट है इसका 77 78 से 82 डॉलर के बीच, $82 है ना, 78 से $82 के बीच में। पहली बार में एक हाई बनाया है, दूसरी बार में एक हायर हाई बनाया है, थर्ड टाइम देखते हैं लोअर हाई बनाता है तो एक इन्वर्टेड एक हेड एंड शोल्डर पैटर्न के थ्रू ब्रेकडाउन होने के चांसेस बढ़ेंगे। तो सिल्वर नॉट लुक्स बुलिश अनटिल अनलेस इट इज नॉट सस्टेन्ड अबव $86-87। $86-87 के ऊपर सस्टेन हुआ तो ऊपर कोई और रेजिस्टेंस दिखता नहीं है 4 आवर में, बट अगर वहाँ से रिजेक्शन मिला तो फिर, और $78 के नीचे सस्टेन किया तो यस $62 विल बी इमिनेंट आफ्टर दैट। तो इट इज़ करेंटली कंसोलिडेटिंग बिटवीन 86-87 एज अ रेजिस्टेंस, 77, 78, 78, 79 as a resistance, as a support. क्रूड में निकल जाना, वैसे यहाँ पर क्रूड की तो मैं स्पेसिफिकली बात करूंगा, निकल जाना, कोई नया ट्रेड सेलिंग का बनेगा इसी लेवल से तो वापस री एंट्री कर लेना ज़्यादा सेफ है, क्योंकि यहाँ से रिकवरी आई तो वापस डे हाई चला जाएगा इजीली, क्योंकि ब्रेकडाउन अगर प्रॉपरली हुआ तो मुझे लगता है एक पॉसिबिलिटी वापस से एक फ्रेश सेलिंग की भी बन सकती है, डिपेंड अपॉन द कैंडल कैसी क्लोज हो रही है 15 मिनट में, कहाँ पर क्लोज हो रही है। एक घंटा और है, 5:30 न्यूयॉर्क सेशन, मोस्टली उसके बाद मोमेंटम होना शुरू हो जाएगा।
Energy prices are to recover and be back around $80 in the not too distant future. And in that sort of world, then we can get back to the fundamental story around U.S. equity markets and double-digit earnings growth, which is what we expect. The challenge is if we end up in a situation where we're looking at triple-digit oil, not just for the next month or two, but for the next 3 to 6 months, then you have to start asking yourself about the outlook for growth and the outlook for inflation.
Are people more accurately pricing in that perspective internationally? You talked about the hit to international markets.
Well, I think you're seeing two things. One, places like Europe and Asia are more exposed to higher prices in the near term, and the risks of those prices remaining higher are there for a longer time period. The U.S. is buffered by a greater sense of energy independence. I think you're also seeing a bit of a flight to safety, a flight to quality. You're seeing it in the rally in the dollar. You're also seeing it in the recent outperformance of tech. Not too long ago, we were talking about tech being under pressure, the rotation into more cyclical parts of the market. I think investors are looking at this environment and saying the long-term structural fundamentals, the earnings growth, the upgrades that we're seeing in the tech sector, and that's bringing money back into the U.S. and supporting U.S. equity markets.
Do you think this has materially shifted the narrative that took hold in the first 2 months of the year, which is diversify outside of the United States, diversify outside of tech? Has that pulled it full circle and actually caused the leadership to come from the United States and from big tech?
I I think perhaps in the near term, but I do think that longer term there is still that diversification story. In particular, we think there are interesting opportunities in emerging markets who have been hit the hardest in this recent move higher in oil prices. But still, there's a really interesting story, particularly in Asia, around the tech story there, the hardware sector. We've seen massive earnings upgrades in places like Taiwan, Korea, India. We think that story continues, and we're looking to build a shopping list with our clients to say, if this volatility continues, what are we thinking about adding? Emerging markets would be squarely in that bucket.
At the top of the shopping list over at Neuberger Berman, just on the programme moments ago, the bond market. They believe all roads lead to lower bond yields here. Even if you fix this crisis over in the Middle East, lower bond yields. If you don't, lower bond yields. Because if you don't, ultimately, it's going to hit growth and yields at the long end of the curve are going to roll over. Is there an opening here in the bond market?
You know, our view around rates is that we're probably more range-bound. We came into this year a little bit more conservative than the market. We thought we would see one cut from the Fed. That's still our base case view. The challenge is going to be this push and pull between potential for lower growth and potential for higher inflation. That's why it's going to be interesting to listen to what we hear from the Fed this week as they try to set the narrative, as they try to guide markets in terms of which one they're going to prioritize. I still think that there's room potentially for another cut, but we don't think necessarily that rates are going to move meaningfully lower from here.
How do they guide the market in this moment when, in the past, when we saw energy price spikes, they just called it transitory and they were wrong?
Yeah. Well, I think what's going to be interesting is to listen to their comments on not just energy markets, because I think those are more difficult to prognosticate, not just for us, but also for the Fed. I think it's going to be interesting to listen to what they say about labor markets. Obviously, recent data has been a bit weaker than what we would like to see. The question is going to be about not just sort of the demand for labor, but the supply of labor. And if they indicate that that is front and foremost, you know, the top of their mind, that could indicate that they're willing to let inflation run a little bit hotter at the expense of supporting labor markets.
You mentioned semiconductors, some of these companies you like. Have you thought about other issues with the Strait of Hormuz besides oil? Helium. A third of global helium goes to the Strait of Hormuz. That is needed when you make semiconductors.
Yeah, I mean, what we're seeing, you know, everyone is looking at the first order effects, which is higher energy prices, higher gasoline prices. But as you pointed out, Anne-Marie, there are long-term meaningful impacts around supply chains, broadly speaking, in different industries around the world. And the challenge is, if these things get turned off, they don't just get turned on with a flip of the switch. One of the themes that we've been talking about a lot with clients is this idea of the shift from globalization to global fragmentation, and the idea that countries and companies are going to be more concerned about supply chain resiliency rather than supply chain efficiency. And so one of the areas of focus has been on this idea of national champions in strategic industries as the U.S., as Europe, as Asia look to develop, you know, these national champion companies in places like power and infrastructure, security and defense, and technology.
I'm going to ask you a really unfair question, so brace yourself and forgive me. Forgive me for doing this. But as I sit here and listen to this and you bring up chips and we're talking about geopolitics, a lot of this is scenario analysis, but I think it's a scenario that we need to explore. How would you react if China used this as an opportunity to go after Taiwan?
I think that question is coming up more and more in our conversations.
What do you say back to clients?
I think we have to acknowledge that it is a significant risk, and I think that markets would react more aggressively to that type of news, even than what we're seeing as it relates to energy prices. I do think at the end of the day, there is still, you know, an economic agreement amongst the world, and the impact that that might have on the economy probably reduces some of the risks there, but it's a risk that we need to acknowledge. And at the end of the day, when it comes to geopolitics, we don't manage portfolios around tail risk scenarios. Of course. In the long run, that's a losing strategy. It's why we lean into diversification. It's why we think about global investing, stocks and bonds, but also diversifiers in a portfolio related to higher inflation, which has been top of mind for our clients.
And that's the risk. It's because those supply chains aren't diversified enough right now. Stephen, it's good to see you. Thanks for being here. Stephen Parker there of JP Morgan Private Bank. It's a conversation coming up with clients. It's a conversation I'm hearing as well over the weekend.
Yeah, especially because there were Chinese ships that were getting close and doing some war exercises near Taiwan, according to a number of reports. There was a question of whether this was actually going to come to pass. As I listen to this, I do wonder how you can get the confidence to lend longer term to companies. If you're dealing with this number of variables and this number of potential tail risks, wouldn't you charge a higher premium? This sort of speaks to the question of at what point do you have to start seeing a risk premium baked into credit markets, not only commodities markets, to reflect some of these potential scenarios?
It's a great point, and for a lot of people, it feels very existential because while the U.S. is focused and their Navy is focused on the Middle East, China right now potentially could make a move with the U.S. unable to respond. Now, Xi Jinping has to weigh other things the president could do, and some of them could be, the nuclear option, literally a nuclear option. But this is something that continues to come up, and our stock market is 90% tethered to Taiwan because of how important hyperscalers and these tech companies are to our S&P 500.
Probably not the conversation you wanted to hear this morning, so again, forgive me. Equity futures on the S&P positive by 0.7% with an update on stories worldwide this morning. With your Bloomberg brief, Yahara has more. Hey, Yahara.
Hi, John. The key port of Fujairah in the UAE was hit by a drone this morning, halting oil exports. It's the latest in a series of strikes threatening the country's only export route. Fujairah is a major hub for both crude and fuels. It has taken on increased importance for global markets because of its position outside the Strait of Hormuz. U.S. allies responding to President Trump's calls to form a coalition to support safe passage through the Strait of Hormuz. UK Prime Minister Keir Starmer saying efforts to reopen the strait won't come as a NATO mission, but the UK will work with partners on a plan. A spokesperson for the German government also saying Germany won't provide military support in Iran, calling the war unrelated to NATO. And Meta will pay as much as $27 billion over the next 5 years for access to AI infrastructure from the cloud provider Nebius. Nebius is set to give Meta $12 billion of dedicated capacity starting early next year. Meta is building a portfolio of massive AI partnerships, including with NVIDIA and AMD. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for the update. Appreciate it. Look, when I say this, I understand people on Wall Street are blessed. They just have to price risk. They just have to price war risk. They don't have to fight it. It's a very, very different story. So take this comment with a pinch of salt. This from Peter Bookvar, publishing just moments ago. Is it Friday yet? That's the sense of things on Wall Street, right? It's like no weekends anymore. Is it Friday yet?
Try keeping up. And not only is it not weekends anymore, but I keep saying it feels like 52 pickup, where someone's throwing up all the cards and then saying, try to find them all and put them in order. And you're just sort of in this role of, trying to put this all in some sort of incomprehensible order.
Monday morning on Wall Street. Is it Friday yet? Up next on the program, securing the strait.
The whole world will be united on the need to open Hormuz, and clearly we will have the support of other nations to achieve that objective.
Up next, Henrietta Trays of Veda Partners, live from New York City this morning. Good morning.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The Middle
Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Three-week losing streak on the S&P 500. Haven't had one of those in 12 months. Responsible for 2 weeks of that, this right here. Brent crude, 102.83, just about holding on to triple digits and pulling back by a third of 1%. WTI breaking 97. We're down by 1.8% on the session. In the equity market, near session highs. On the S&P, the Nasdaq and the Russell. The S&P up by 0.7. The Nasdaq higher by 0.8. Likewise on small caps this morning. Under surveillance this morning, securing the Strait.
The world depends on the flows through Hormuz, and most importantly, the Asian nations, Japan, Korea, China, Thailand, India. A meaningful part of their total energy supplies come from the Straits of Hormuz. So, of course, the whole world will be united on the need to open Hormuz, and clearly we will have the support of other nations to achieve that objective.
So here's the latest this morning. The president demanding other nations help open the Strait of Hormuz, with crude holding above $100 a barrel. Bloomberg's Tyler Kendall joins us now for more. Good morning, Tyler.
Hey, John. Good morning. Well, as disruptions continue, the White House intensified its calls over the weekend to reopen the Strait of Hormuz. And new within the last hour, a NATO official in an emailed statement to Bloomberg News does confirm that individual allies are speaking directly with the U.S. about what more they can do, including in the context of securing the strait, though it appears that allies still remain wary. We heard from the U.K. Prime Minister Keir Starmer just moments ago, a headline crossing, where he said that the effort to reopen the strait will not be a NATO mission. President Trump told the FT in an interview over the weekend that the NATO alliance would have a, quote, very bad future if allies did not help out. And that's not the only threat that we've seen lobbied from the president in recent days. He also threatened to delay his planned visit to Beijing, set for the start of April, if China does not come and send ships. According to data analyzed by Bloomberg Economics, nearly 38% of total oil flows through the strait do go to Beijing, but our own analysts say that it is unlikely that we would see China send ships, due in part to the fact that some of the vessels that are getting through the waterway right now are headed towards Beijing, and the country also has a vast stockpile from the past few years. The Wall Street Journal did report over the weekend that we could see a coalition announced as soon as this week, but at this point, it's unclear what that would actually look like and when it would take place, either before or after the conflict resolves. John, in terms of other threats, President Trump is now saying that the U.S. could target energy infrastructure if disruptions through the Strait of Hormuz continue. As you well know, the U.S. confirmed that it had hit military targets on Karg Island on Friday, the country's top oil export hub.
Tyler, appreciate the update. Tyler Kendall there from outside of the White House. Tyler, thank you. Henrietta Trace of Vader Partners has this to say. Permanently securing the Strait of Hormuz will likely require a sustained presence to override Iranian weaponization on the economic front. Henrietta, welcome back to the program. The financial asymmetry is pretty obvious here. It's costing America a lot to fight this war. Just how much is this costing?
Over $1 billion a day, over $200 million a day for Americans buying gas at the pump. And I think there's just this uncertainty overhang, this cloud that markets hate so much, as the president gets sort of increasingly hysterical with regards to our NATO allies, whether it's the UK or Germany or France, Spain, just going after them in ways that remind me a lot of 2025, except now he doesn't have tariffs. And I think it's striking that just 8 days before they started bombing Iran, the Supreme Court took away the president's tariffs. And it seems obvious to me that he misses those IEEPA tariffs quite a bit. I think it'd be a different situation if he still had them. So, his Twitter posts going after it, as extreme and dramatic as they are, really underscore how much he misses that cudgel that he just doesn't have anymore.
Henrietta, An energy shock in the United States is never good for U.S. president. It's even worse in election season. Right now, you have the national average $3.72 for a gallon of gasoline. In California, already above $5 a gallon, potentially going to $6 sooner rather than later. What could the administration and Congress do when it comes to protecting Americans at the pump?
There's not a lot. There's actually, that's the wrong way to say it. There are a lot of little things. So they can change the ethanol blending rate to an annual blend instead of exceptions for certain times of the year. They can release some of the SPR. They can change the Jones Act. They can continue jawboning the way that the president is trying to do about victories in Iran and how everything is going swimmingly. But the reality is you need the Strait of Hormuz to be reopened. And we need, for example, military ships from France that have anti-mine capabilities. We need the divers in France that have the anti-mine capabilities. And the president is just not getting those allies on board with this war of choice that he has decided to engage in. And the extremes that he is trying to push on them are just not working. As I mentioned, you can feel the absence of the tariffs.
Some of the other tools the president also has is maybe an export ban when it comes to U.S. crude and crude products, as well as gasoline price caps. What would Congress say to that?
Yeah, I think the export ban is really interesting. I get that question a lot from clients. I think it's counterproductive, though, because obviously the problem is not domestic. We have a lot of energy production. We have a lot of supply. We have shale revolutions. We have alternative energy sources. It's getting the oil around the globe to places that are extremely exposed to Iran. That's the problem. So I think restricting exports would, while it sounds good, be counterproductive in the long run. And I think that would frustrate the White House. So I'm not expecting to see that. Congress, for its part, I just spent a week up on Capitol Hill. I don't think they're ready to address the war in any kind of material capacity. I think we're going to have to get past the spring recess, which basically puts us into mid-April, before they start to act on actual legislation around another government stimulus package. The farmers are going to need a second bailout. It's not just oil. It's all the fertilizer, as y'all well know. They're going to need another $15 billion, and the USDA is working on that. So I think we are probably at a situation where it will be at least 3 weeks of the continued war before we see any action from Congress. They're much happier to not focus on this, and they're going to be happy to go on recess.
Henrietta, I don't mean to be snarky, but are they prepared to do anything on anything in the next couple of months?
No, definitely not. And I don't think it's snarky at all. I mean, the president and the Republican conference are at very different loggerheads when it comes to the Road to Housing Act, when it comes to the crypto legislation. And the president stressing at the Republican retreat last week that he wants to focus on the SAVE Act, which is associated with mail-in balloting and transgender sports. We do not have a package that is moving through the Senate that can also pass the House, that can also get the president's signature, and they don't have an agenda list either. So the entire thing really, I think, rests on a DHS reopening package. We're on day 30 or whatever of a DHS shutdown. They're going to need to address that, but I don't think it's going to be until after the spring recess. So the whole agenda, I think, is suspended and will be for the rest of the year.
So you don't think that DHS and that sort of partial shutdown that's getting people in lines and waiting forever when they go to the airport is going to get resolved? I just wonder if in some ways Congress has absolved its role as an equal power with the executive branch. But if we've seen a fundamental shift that will not go back to where it was before.
Absolutely, Lisa. I mean, I think that we saw that all through 2025. And everybody's just waiting to get through the midterms. The popularity of President Trump with his voters is so overwhelming that Republicans do not have an opportunity to step outside the lines. With a couple lone exceptions, I would say Senator Tillis, who we had the opportunity to sit with for an hour. He is seriously going against the president's agenda. The social media post the president put out about the Federal Reserve Chairman is not going to land well with Senator Tillis. And he is absolutely living his best life right now, having a great time standing up for the Fed and saying, we want Fed independence. I want this entire case thrown out. I want it, completely eliminated. And I will stay in this seat until January 3rd of 2027, making sure that that ends up happening. And I think he's raising the odds that Jay Powell stays on after his replacement is confirmed, just to make sure that sticks.
Yeah, just to echo that, based on our conversations with the senator from North Carolina, seems like he's having a good time. at the moment. Henrietta, thank you. Henrietta Trace there at Fader Partners. As we've been having this conversation, an update from the UAE on oil production from the team and some reporting elsewhere as well. Production there for crude has fallen to about 2 million barrels per day. That was around 3.5 million. Around 3.5 million before this war broke out.
And we're just 3 weeks in, so potentially this number can actually get a lot smaller, which is why when the IEA comes out with 400 million barrels a day and stockpiles being released, it is not enough to fill the gaps that we are seeing right now.
Equity futures this morning positive by 0.7% on the S&P 500. In just a moment, we'll talk about crude with Francisco Blanche of Bank of America on the growing threat to global energy supplies. Plus, Danny has your morning movers. Meta moving higher on some big reports of some big layoffs. That stock is higher by 3%.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Crude looks like this morning. Brent after a 40% move so far this month. Brent and WTI shaping up as follows. Brent crude at the moment 103.65, just about positive by 0.5%. In the equity market on the S&P 500, holding on to gains following a 4-day losing streak, up by 0.6%. Plenty of Monday morning notes are dropping, including this from Mike Wilson over at Morgan Stanley. Lisa, the bar remains high for the oil spike to threaten the business earnings cycle, while we can't rule out modest downside in the near term. If the rate of change on crude and the dollar accelerates further, we maintain our view that this correction is closer to its ending stages in time and in price.
Yeah, they're not alone. There are others as well, including Goldman Sachs and others who have come out and said something similar, because the U.S. economy is more immunized from any kind of oil price shock to the downside. And frankly, there's a lot to like, and people keep pointing to that. We were bullish just 2 weeks ago. Do we really have to change everything all over again?
A 5% move on the S&P 500. Is that your dip? Is it time to buy? Let's get you some single names, some morning movers. Danny Berger has more. Hey, Danny.
Hey, John, I want to start with where the oil majors are trading this morning. They still are moving higher, even though NYMEX crude is to the downside this morning. Exxon and Chevron. Chevron has been up some 5% since the war started, to close Friday at a record. Exxon closed just under a record. That's up less, about 2.5%. Some of the other corporate news we are tracking: Reuters reporting that Meta plans to lay off staff. It could affect about 20% of them. The idea is to funnel those savings into AI infrastructure spending. They're going to be spending about half of their revenue on capital expenditures. So a lot of maybe efficiency Mark Zuckerberg wants to bring back to the company. Those shares up 2.5%. And then the other side of this trade is Meta signing one of their biggest ever single contracts with Nebius. This is a neo cloud. It's worth about $27 billion over the next 5 years. Nebius is going to provide them with about $12 billion worth of space in their neo cloud. So those shares moving 14.2% in the pre-market, John.
Danny, appreciate the update. More from Danny in the next hour. On our radar this morning, Apollo executive John Zito calling out, quote, arrogance in private markets and blaming the media for creating a frenzy around private credit. According to audio obtained by the Wall Street Journal, Zito believes his firm is on solid footing. Elsewhere, the president saying Iran wants ceasefire talks. Iran's foreign minister refuting those claims.
No, we never asked for a ceasefire, and we have never asked even for negotiation. We are ready to defend ourselves as long as it takes.
Tehran launching fresh attacks across the Persian Gulf as the war enters its third week. And finally, the world's largest single-site aluminum smelter is cutting output as shipping through the Strait of Hormuz stalls. Aluminum prices on the LME, the London Metal Exchange, briefly jumping to the highest level since 2022.
It's important to remember we're not just talking about crude when we're talking about the Strait of Hormuz, and the story really highlights that. Yes, it's aluminum, but as we were talking earlier and Anne-Marie mentioned, it's also about 30% of the helium, which is a key ingredient to semiconductors, also travels through there. Also 30 to 50% of the world's urea, which is a key nitrogen ingredient in fertilizer. Also, of course, about a quarter of LNG, liquefied natural gas. So we're not just talking about an oil shock. We're talking about a whole slew of commodities that are also getting severely impacted.
Well, it's not just this aluminum smelter. It's also Total Energies overnight talking about some of the production they need to unwind in some of these countries. On top of that, when it comes to countries like India and places in Asia, which is really on the front lines of getting hit when it comes to an energy shock, liquefied petroleum gas, what they use to cook their meals with. There was a story over Bloomberg over the weekend, the fact that a number of Indian weddings, these wedding venues had to go out and tell brides and grooms, we're going to have to cut back on the menu because we cannot afford right now where prices are and we don't have the stock when it comes to this gas we need to make this food. It is incredible what is going on right now, and it's not just the crude complex.
It's getting serious, that's for sure. I just want to issue a quick correction. I've lived here more than a decade. I love this country, forgive me. Aluminium. Every time I say aluminum, I just don't feel good. It's particularly aluminium on the London Metal Exchange.
You know,
right? Just to...
I think that it's fair. I think it's fair for you to say aluminum.
You'll give me whatever that was.
But it wasn't
aluminium or aluminum.
But it wasn't worth the correction. It's just a difference, an alteration.
Adidas, Adidas.
My brothers and sisters over there might be getting,
really upset.
Upset,
might
maybe.
make Thanksgiving
the family group chat.
Brent crude climbing over $100 a barrel following President Trump's threat to extend attacks on Iran's oil hub. The NEC director, Kevin Hassett, dismissing concerns about elevated energy prices.
You can also look at futures markets, which are interesting because you've cited over and over the spot price of gasoline, which of course is affected right now by the disruption of the Strait. But if you look at the futures prices, they're expecting a rapid end to this situation and much lower prices. In fact, I don't think I've seen a sort of future price path with as steep a decline in all my years watching futures.
Francisco Blanch of Bank of America writing this: Brent could well average $100 a barrel for the year if the war impacts oil balances significantly into the third quarter, and could average near 130 if the disruptions extend into the fourth quarter. Francisco joins us now for more. Francisco, welcome to the program, sir. I want to start with a key assumption of yours in your research. We do not embed any permanent supply loss from this war. Francisco, why is that line so important?
Thanks for having me, John, and great to see you again. It's very important because if we end up with some meaningful destruction of energy assets, we're going to see forward points increasing very quickly in the curves, right? In these curves that Mr. Hassett was referring to in his comments. So, of course, we've seen Hark Island, Iran's main oil loading terminal, being struck over the weekend, and there was a clear point made that energy infrastructure was still intact, even though military assets had been specifically targeted. So I think it's very important, but of course, in wars, as you know, it's difficult to find sometimes a closure, and you know, we are always one step away from a major escalation on the energy side, and that's, I think, the fear the oil market has.
There are supply chain realities, though, that we could discuss right now. If you shut in production, how hard is it to restart it and get back production to where it was before?
Well, I mean, I think there's some concerns around that, but again, most oil fields across the Middle East are conventional. So I would expect a lot of the production to come back relatively quickly. Refineries are another point of concern. We saw the Tehran refinery, or at least Tehran refinery fuel depots being targeted. The refinery itself is unclear what's its current status. But I think generally most assets should be able to come back within a month to 2 months, if and when the war ends. And now, having said all that, another key assumption in our numbers is that Hormuz is going to be reopening sometime soon and recover the majority of its traffic, which might also be maybe too far-fetched an assumption. That's one very, very important concern. Hormuz, as you pointed out, is the choke point for a lot of the commodity flow in and out of the world.
Francisco, do you have a day circled on the calendar this week, to John's point earlier, where you start to challenge some of your assumptions and shift to some of the $130 a barrel base cases?
Well, look, I mean, we know the Houthis were able to disrupt traffic in Bab el-Mandeb for about 28 months. So I want to remind everybody of that. Flows were down from 9 million barrels a day to 4.1, 4.2. Now, the difference between Bab el-Mandeb and Hormuz is that there's clear alternatives that allowed shippers to reroute those 70 vessels that used to cross. A lot of them rerouted through the Cape. So that was, I think, a big relief valve for Bab el-Mandeb. Here, there's no clear rerouting. So I think the options are not great to reopen the strait, particularly in the light of all the capabilities that Iran might have, and also. To be honest, this quickly becomes a bit of a guerrilla war like we saw in Yemen, and I think shippers themselves will be very, very cautious not to take that route if there's risk of their vessels ending up in fire. And we've seen 20 of those already being attacked or so, I think. So it's a difficult time for shippers, for insurers. Everyone's kind of waiting for a resolution, but if it doesn't come up in the next few weeks, I mean, I'm going to give it maybe until the end of the month. Things can get very, very complicated for oil prices.
We had Jeff Curry of Carlisle on last week, and he was talking about how even if the Strait of Hormuz is opened this week or next week, there is going to be an extra risk premium placed not only on oil, but a whole bunch of different commodities, partly because there'll be nations that are stockpiling, akin to what China has done, and partly because people will understand that there is that risk of transporting goods on the seas. Do you agree with that thesis?
Yeah, I think the war is gonna transform the way we think about commodities more fundamentally. Remember, in the 1990s, Japan pushed for just-in-time, and in the 2020s, it's been China's just-in-case. strategy of inventory accumulation. So they've been building up huge oil reserves, and we've seen, obviously, in part because of trade tensions, in part because of political/military tensions, we've seen a big buildup in commodity inventories. I think this trend only speeds up once the war's over. And I think that provides support to long-dated commodity prices sooner or later, and we'll see, I think, a bit of a mad rush once we are out of the war. But again, we need to see this war coming to an end, because if we don't, I think the risks of recession will grow by the week as we head into April. And definitely, if we are still in the same place in May, looking into a third quarter, I've already mentioned we could see spikes to $160 a barrel. If things keep going, we could see Brent breaking $200 a barrel. I think it may take a little longer to get there, but it's important to understand that we don't have that much time, and obviously the U.S. is a little more insulated than other regions, but I think in particular Europe is very, very exposed, as are many other Asian countries, particularly Northeast Asian countries.
Francisco, I know that you track what is going on in terms of the OPEC countries, and we've learned this morning at Bloomberg that the UAE production has fallen to about 2 million barrels a day. It was closer to 3.6 in February. What other countries do you see production really falling off a cliff when it comes to the Gulf?
Well, it is known that Iraq has been curtailing output, as has Kuwait. Remember that, we think probably about 10, 11 million barrels a day of production has been curtailed in the past 2 weeks. So that's about 10% of the world's supplies. About 20% is what passes through Hormuz. So we've seen about production about cutting about half. The other big issue, I think, is refined petroleum products. Refineries have been shut down across the board. And the issue with refineries, as you know, is we don't really have a strategic petroleum reserve for petroleum products. We have it for crude oil, so it's a little bit mislabeled. The strategic petroleum reserve is really a strategic crude oil reserve. So if we lose refining capacity, that impacts petrochemical units. You pointed out to weddings in India for LPGs like propane, and honestly, like it's the supply chain dislocations that are building up in the background are gigantic. I mean, remember, 1% of energy is roughly 1% of GDP. So if you take out 10 percentage points of oil, and oil is about a third of energy, plus obviously we're losing on gas, we are looking at potentially 7 or 8 percentage points of energy sucked out the world's system right now, and that's going to have a big knockdown effect on GDP very soon if that disruption doesn't get resolved.
I'm glad you brought up products, because a lot of the conversations I had over the weekend was centered around jet fuel, diesel, LPG. When it comes to these Gulf exporters, are they having to start to pick and choose what they're going to export? What's the most important for the global economy?
Well, we are seeing very little petroleum, in terms of petroleum products flowing through the Gulf. I mean, my understanding is whatever has been flowing has been Iranian crude oil to a tune of 1.5 to 2 million barrels a day. And again, those are crude vessels heading for China, which I think sets a very interesting next set of days with Harg Island now being a bit in limbo. But also importantly, I think the petroleum products are already experiencing huge distress. Jet fuel prices are $250 a barrel already, right? So we've seen that, and we've seen, in fact, Dubai crude oil over $150 a barrel. Again, that's crude oil for delivery in the Persian Gulf, and of course we know China has been curtailing, has actually banned the export of petroleum product fuels like gasoline, jet fuel, and diesel, which is in part exacerbating this problem. So I think the question is, who else is going to do it? Who else is going to preserve or limit those petroleum product exports? And of course, we know who is most dependent on those petroleum product exports. Number one exporter in the world of petroleum products, America, 7 million barrels a day. So not a bad time for U.S. refiners, but obviously a point of concern as those petroleum fuels that are being exported also impact domestic prices for gasoline at home in America. So lots of question marks as countries go on to protect their own market.
Francisco, always good to catch up and get some clarity from you, sir, at a very volatile time. Francisco Blanch there of Bank of America on the broader commodity market. The latest on China, a big factor here. The president spoke to the Financial Times over the weekend and said this about China. I think China should help too because China gets 90% of its crude from the Strait of Hormuz. Before going on to say that we need to address these issues and ultimately he might have to delay his trip to China, which was set to take place in the next couple of weeks. The Treasury Secretary has been meeting with his Chinese counterpart over the weekend in Paris in preparation for that get-together, that meeting over in China. And this is what the Treasury Secretary had to say to the American press just moments ago. If you're connecting those stories, don't. It's false to say if China doesn't open Hormuz that the trip will be delayed. If the president delays the China trip, it would be due to prosecuting the war, the Treasury Secretary just moments ago.
So he's trying to put some distance between that trip and what is going on right now with the Strait of Hormuz and the fact that the president is coming out and saying that he is demanding, saying it is appropriate last night that people who are the beneficiaries of the Strait will help to make sure that nothing bad happens there. The biggest beneficiary of the Strait of Hormuz is arguably China, with Iran's exports 90%, 95% going to Beijing. But the Treasury Secretary is trying to put a gap in between almost what the president threatened last night when it comes to Air Force One in that interview with the Financial Times.
Besson doing what Besson does, which is calm things down. Just a little bit. Crude right now, 103 on Brent, WTI 97, with an update on stories worldwide with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. As Anne-Marie mentioned, the UAE's daily oil output has been cut nearly in half. Reuters reporting crude production has fallen to 2 million barrels a day from over 3.5 million in February. The Iran war and the effective closure of the Strait of Hormuz has forced widespread production cuts both on and offshore. Elsewhere in the UAE, Dubai's main airport resuming operations after a drone attack sparked a fuel tank fire that suspended flights. State-owned carrier Emiratis restarting a limited schedule after a more than 7-hour ground stop. The world's busiest hub for long-haul flights suffering 3 disruptions since the war began. And here in the U.S., FCC Chairman Brendan Carr threatening the licenses of major media broadcasters. In a post on social media, Carr writing broadcasters that are running hoaxes and news distortions have a chance now to correct course before their license renewals come up. Carr's warning follows a post from President Donald Trump complaining about coverage of the U.S.-Israeli strikes on Iran. That's your Bloomberg Brief. John.
Yahara, thank you. Thanks for the update. More from Yahara in about 30 minutes' time. Up next on the program, short-term pain for long-term gain.
The conflict will come to the end in the next few weeks, and we'll see a rebound in supplies and a pushing down of prices after that. This is short-term pain to get through to a much better place.
Up next, Vishal Kanduja of Morgan Stanley from New York City. You're watching Bloomberg TV.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller, and it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are gonna unleash this with a bunch of creators, and they're gonna go figure out stuff that we didn't even imagine that they can do with that interactivity.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Getting a real-time update on crude production from the team here at Bloomberg. So according to sources familiar with the matter, Kuwaiti oil output has fallen to about 1.3 million barrels a day. Before the war, that was 2.6. That's the latest on Kuwait. This is the latest on UAE. Oil production there has fallen to about 2 million barrels per day versus 3.56 back in February before this war. Just gives you an idea of how much production has been cut in certain places by about half. Brent crude right now positive by 0.2%, 103.34 on Brent. WTI at about 97. We've started to calm down just a bit in the commodity market. In the equity market, it looks like this. Equity futures on the S&P 500 positive through the last few hours, positive by 0.75%. Under surveillance this morning, short-term pain for long-term gain.
I think that this conflict will certainly come to the end in the next few weeks. Could be sooner than that, but the conflict will come to the end in the next few weeks, and we'll see a rebound in supplies and a pushing down of prices after that. This is short-term pain to get through to a much better place where the Middle East can no longer be held hostage by the one rogue nation in Iran.
So here's the latest this morning. Rising oil prices and the threat of higher inflation leading investors to scale back rate cut bets. Vishal Kundra of Morgan Stanley saying the onset of the war changed the dynamics. The stagflationary shock will delay central bank easing and inflation will cause further macro dispersion. Vishal joins us now for more. Vishal, welcome to the program. Ultimately, what does it mean for this Federal Reserve as they get together down in Washington, D.C. tomorrow?
Morning, John. Thanks for having me on. Interesting times that we live in. Not just inflation shock. I think we are seeing a growth shock as well that will probably subsequently follow. We've seen how history is proving to this or guides us towards this. Countries that are going through or regions that are going through this one right now and are oil importing or energy importing will feel that shock quite significantly. Countries or regions that are net exporters like the U.S., yes, we will feel it. It's painful, but it won't linger in the economy for long periods of time. But growth shocks on the negative side will be felt. So this week is a tough one for the Fed as well as the other central banks. I think it's easier for the Fed versus the other central banks, to be honest. But yes, I think a little bit more direction and no action this week.
Vishal, do you think that this is an opportunity to buy longer-term bonds if you believe this is going to be more of a growth shock and not necessarily a longer-term inflation shock?
We do think that way. I think around that 10-year, 7 to 10-year point of the yield curve does provide you quite a bit of protection, both from a growth shock subsequent that will follow, as well as I think that sort of if you go back to what the Fed was telling us, they felt that the rates even before this were in the restricted territory. And now we've backed up not only rates, smidge on the interest, spreads as well. That gets the overall sort of monetary policy a little bit more restricted than what it was. Now, the Fed, if it had it in its own, could have two rates, one for the lower end of the economy and one for the upper end of the economy. But I think they have to suffice with one. And we do think that they will focus on their second part of their mandate, which is the labor market, a lot more going forward.
Who would you rather be this week, Vishal? Fed Chair Jay Powell or ECB President Christine Lagarde?
Absolutely, Jay Powell. Easier shoes to fill. Economy can withstand this. We are coming into this with very, very strong balance sheets. Now, again, both those central bankers have to focus on the dispersion of opinions and dispersion in the economy that they're going to go through as well. Europe, with different countries coming together, one country doing really well versus the other four. And in the US, you're seeing a significant K-shaped economy. And this thing, the extra $200 million that the oil price jump will impact, it's going to impact more on that lower end of the K-shaped economy. So tough jobs they have to fulfill, tough shoes to fill in this week.
Vishal, is this a different ECB? Is there anything left of the Trichet ECB in 2008 when they did hike interest rates?
They are looking at history and significantly worried about this thing. They do not want to hike in a period where growth dynamics were deteriorating. Certain parts of their coalition are suffering through deficit issues similar to the US, France, Italy being case in point. They're going to go through some elections. Taxes are very, very high. UK, not in the EU, but still in that similar region, is facing similar issues as well. So they're looking at history and negotiating over this oil shock that we're going through. And that's why we believe that there might be sort of pain points or pain thresholds that we are crossing through as we are extending the duration of this conflict.
History has not been kind to that decision, that's for sure. Vishal, it's good to see you. Thank you, sir. Vishal Kanduja there of Morgan Stanley. The ECB, their decision on Thursday. The two-day meeting of the Federal Reserve begins tomorrow, concludes on Wednesday. Coming up in the next hour, Liz Thomas of SoFi, Jay Goldberg of Seaport, David Seif of Nomura, Barbara Reinhardt of Voya Investment Management. The third hour of Bloomberg Surveillance is up next.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
Investors are giving this bull market the benefit of the doubt.
This is starting to weigh on the market, but we have not quite seen that typical pullback.
Markets have essentially got an assumption that this could be a quick war.
We don't have a lens on when this is going to end. Nobody does.
The market right now is overly complacent in my mind.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Equities near session highs on the S&P 500, higher by 0.8%. Small caps outperforming, up by 1 percentage point. In the commodity market, Brent and WTI taking shape and looking like this. Brent crude unchanged at 103, WTI at 97, following a weekend full of escalating strikes into this week. This week right here, full of central bank decisions. A Federal Reserve on Wednesday, an ECB, BOE, BOJ a few days away as well.
Yeah, how do you respond to a stagflationary shock? How do you deal with the fact that inflation expectations in the short term are picking up to a significant degree at the same time that potentially this could crimp growth? Not well. That's sort of been history. And right now, the Fed has an easier job, arguably, of the different panoply of central banks that are going to release decisions. The ECB, the Bank of England, I do not envy them, given the fact that they face a bigger hit to growth and potentially a bigger fiscal response that will create some issues for them on the fiscal and the debt side.
We've repriced energy. They need to reprice growth if these moves hold. This from Kuwait moments ago. The team here at Bloomberg just breaking down the cuts to production we've seen across the region in the Middle East right now. Output in Kuwait has fallen to about 1.3 million barrels per day. Before the war in February, that number was 2.6, double what it is right now. For the UAE, that number now has fallen to about 2 million barrels per day. The number before the war for the month of February, 3.56 million. That's just two nations. There's others in the mix as well. But you can see the cuts here. We're talking about half, production cut in half at key producers in the Middle East.
And this is only the third week in. And this is what happens when basically you have the Strait of Hormuz blocked and this product has nowhere to go. We're still waiting on other numbers officially. We know that Iraq's numbers have come down, waiting on the Kingdom of Saudi Arabia. How much have they had to wind down some of their production given what's happening right now? And the issue with the Strait of Hormuz is that there's no answer right now. And everyone says you can pick apart and do little tools here and there, but the only silver bullet you have is reopening that strait. When it comes to the coalition, there's not a lot of countries that are running to the president's help.
The Iranians want you to feel it. They want you to feel the pain to make sure this never happens again. That's the goal of the Iranians. It's basically what we heard from the foreign minister earlier on this morning.
Ceasefire isn't the goal. That's not exactly what they're trying to do. What they're trying to do is to prevent this from ever happening again. And they've talked about $200 per barrel that is being an inevitability and, frankly, almost a goal. What can you do to offset this? What do you do if you are a corporate executive trying to come up with a plan and giving guidance? Good luck.
It's going to be very challenging, whether you're an oil executive or an executive that requires the use, which is pretty much every company, diesel, jet fuel, helium, fertilizer. This is going across not just the crude landscape, but other commodities as well. When it comes to the Strait of Hormuz, then what the Iranians are doing, there have been a tremendous amount of pressure put on this regime, and they are still not saying that they want to come to the table. Not just the Ayatollah and top brass of the regime taken out, but Karg Islands was hit. The military complex on Karg Island was hit. 9 out of every 10 crude barrels that Iran exports goes through that island. So Trump is showing them he can really hit them where it hurts, and it's not working right now.
And here we are Monday morning with equities up by 0.8%. On the S&P 500. Coming up this hour, Liz Thomas of SoFi with stocks on a 3-week decline as conflict in the Middle East sparks volatility. Jay Goldberg of Seaport looking ahead to NVIDIA's AI conference, and David Seith of Nomura counting down to this week's Fed decision. We begin this hour with stocks aiming to snap a 4-day losing streak. Liz Thomas of SoFi writing, periods like this are incredibly uncomfortable and impossible to predict, but it's unlikely that the stock market experiences a prolonged or deep drawdown? Liz joins us now for more. Liz, good to see you in the studio. Good morning.
Good to see you, too. I sound optimistic in that statement.
On the edge of optimism.
Yes.
After a 5% decline, is that it?
In my defense, I wrote that last Wednesday. So
how much has changed in a few trading days?
I mean, here's the thing. This is all about how long this lasts and how many countries are impacted from a growth perspective. Now, this word of stagflation is back, and it's back in a strong way. And I think we're worried about that globally. But I do believe that if this only lasts for, let's say, a month or less, we will be okay. There will be a snapback. And generally, I would say it's likely that we go back to the trends that were in place in January and maybe early February, that sort of cyclical rotation in the market. It's obvious to me that investors still have risk appetite. They're looking to position themselves in places that have been beaten down. So we've had some rough days throughout this conflict, but it was interesting, even in the early days, you saw something like software bounce on those rough days. So there's risk appetite there, I think. As long as we don't destroy that risk appetite, we still have an opportunity to bounce back if this de-escalates.
You can see how this has played out in commodities and energy, obviously, and you can see that's how this has played out in rates, in yields, and how we're pricing central banks and easing or not over the next year or so. Where have you seen it play out in equities? Have you seen any pockets of capitulation in the equity market?
Well, I think the ones that had been beaten down already, I already mentioned software. I think that found its bottom, or at least is in the bottoming process, and investors are looking for ways to position in some of those that maybe were called falling knives before, but now the knife has fallen, right? So looking for opportunities. And something like software, even before this conflict began, it was trading as if the entire industry was going to disappear. And that's probably not going to happen. Will there be disruption? Of course. But disappearance? Probably not. So I think I'm willing to leg into it and watch how this plays out as the year progresses. Other places that have been hit pretty hard by this, I mean, all of the cyclical sectors have been hit hard. Industrials, materials, even consumer discretionary and staples have been hit because we have this big question mark of how much will companies pass through if there is an inflationary shock and the consumer has to pull back. Rather than saying a certain spot in the market, I'd like to see consumer confidence bounce back. And if inflation feels like it's more under control or we're not going to have this prolonged shock, I think consumer confidence will bounce back pretty quickly.
I think that John's question really points to the paddling duck aspect of this market, the idea that each sector has been really operating on its own dynamics. And you've seen, half the stocks go up 20%, half the stocks go down 20%. And sure, the index looks flat, but a lot's going on under the surface. How long can that feature be a feature of resilience versus really challenged should there be a true growth scare in the United States?
So what I think you need to see, and this is, I'm going to answer both of your questions at the same time here. True capitulation is something that happens when you see correlation and volatility rise together. And I don't think we've really seen that yet, at least not even for a full trading day. We saw it the Tuesday after this conflict began. We saw it in the morning. It was a really rough Tuesday morning. Everything was down. The good stuff was being thrown out with the bad stuff. If that happens for a few days, then I think you've reached that peak fear. I don't think we've priced in peak fear yet. And unfortunately, we might need to see a full flush before we can find some more footing. But as I mentioned to John, the risk appetite for cyclicals and some of the spots that are looking more attractively valued, I think, is still healthy. So it's still alive. So that sort of paddling duck under the surface is still looking for places to buy in equities. And that, I think, as long as it remains alive, is a good thing for strength ahead. That's all sort of caveated by, let's say this does last over a month, and let's say break-even inflation rates spike and stay elevated. Let's say we've got a Fed who talks this Wednesday about stagflationary risks or starts to give us the impression that they're more concerned about inflation than jobs. Then I think we've got a conversation where something like hikes comes back onto the table later this year, which would probably terrify markets.
Would that make you more bullish or less bullish on the long end of the yield curve?
On the long end of the yield curve, less bullish. And I think we've seen the 10-year rise over this period for good reason. I mean, this would end up being an inflationary shock in many ways. And there there is some maybe saving grace that we are a net exporter of oil. So as prices rise, there are certain spots in the U.S. economy that could benefit from that. But the consumer drives our economy. And if you've got a consumer that's under pressure already from inflation and has been for a number of years, and now we're taking one of the non-negotiable items of their spending, which is energy and particularly gasoline, to get to work, take your kids to school, and pressuring that, then we've got a consumer that has to pull back and make different decisions in other places.
The round trip on bond yields has been unreal. February up 30, or rather down 30 basis points, and then March up 30 basis points, back to where we were at the start of last month.
Yeah, and a full range of one particular benchmark yield. I mean, it's not exactly moving that much out of that range. I do wonder, though, is this going to be recessionary or disinflationary down the line? I guess that's the real question, because if you start to spend less, does that cause the economy to grow more slowly or even contract and lead to lower yields down the line? This is sort of one of the big debates right now on Wall Street.
Let's mention consumer confidence. Mitch, came out on Friday going into the weekend. Sentiment 3-month low. The survey director said this to us: the sentiment readings that came in after the attacks were considerably lower than what we were collecting beforehand. The survey period, really important here, it was between Feb 17th and March 9th. So ultimately, anything that came afterwards, you saw a very different picture. I wonder, Liz, in your mind, and just to wrap things up, do you think this is going to change how consumers interact with the economy when they get those tax refunds, which were meant to fuel a cyclical bounce in this economy?
Yes, I think in the near term it will. And there are two different consumer confidence readings. There's the University of Michigan and there's the Conference Board. The questions for University of Michigan skew towards inflation more than jobs, Conference Board more toward jobs. So I would expect that we see a bigger hit to the University of Michigan numbers than the Conference Board numbers. But yes, in the near term, consumers do usually pull back. I think we're still in an era, though, where the consumer will just hit pause and not stop and not reverse yet. We haven't gotten to a point in gas prices yet, I think, where people have seen demand destruction or entirely changed their behavior. But there is a pause button that gets hit, and you'll see that sort of bake through into the data. One of the things that's really important to watch in this upcoming earnings season is operating margins, to see if companies have needed to start managing their cost structure differently. I don't expect... Operating margins are very strong right now, in fact, above trend. So there is some buffer to absorb this. But I don't expect that there's companies that are going to manage it yet. But you do want to watch that line, that operating margin line, for a rollover, even just the beginning of a rollover, and then sort of manage your expectations if it starts to come down.
Liz, this was awesome. It's good to see you in person. Thanks for being here. Thank you. Liz Thomas there of SoFi, breaking down this market. You mentioned earnings season and corporate executives who will need to talk about this. That's about a month away, the middle of April, when the bank earnings begin.
Yeah, they're probably glad they've got a little time to see how long this is going to go on. And to the point of that one big, beautiful bill, I still go back to this. Deutsche Bank economists think that a sustained oil price around $100 a barrel would be manageable and actually would be offset entirely and then some by the one big, beautiful bill. But $150, another story, even $130. So there's definitely is a sort of sea change as it goes higher.
But not if some of that money was already spent, because consumers knew it was coming down the pipeline. They maybe spent it during the holiday season or in January when electricity prices were higher. This is going to get incredibly challenging for this administration as gas prices continue to tick higher. In some states, it's already above $5 a gallon. And I think when it gets to 4 and continues tracking to 5, that's when you can see more of these controversial tools coming out of the toolbox.
Average around 370 at the moment and climbing pretty quickly. Let's give you an update on stories worldwide this morning with your Bloomberg Brief. Yahira has more. Hey, Yahira.
Hi, John. Treasury Secretary Scott Bessent saying this morning he sees more and more oil going through the Strait of Hormuz and expects oil prices to fall, quote, much lower than $80 a barrel in the coming months. Bessent went on to say his recent talks with his Chinese counterparts in Paris went well, and it's false to say President Trump's scheduled trip to China may be delayed due to the war. Iranian authorities are not seeking a ceasefire as the war enters its third week. The country's foreign minister saying, quote, this war must end in such a way that our enemies never again think of repeating these attacks. President Trump saying Washington is talking to Tehran, but he's not sure if Iranians were ready. And U.S. allies responding to President Trump's calls to form a coalition to support safe passage through the Strait of Hormuz. UK Prime Minister Keir Starmer saying efforts to reopen the strait won't come as a NATO mission, but the UK will work with partners on a plan. A spokesperson for the German government also saying Germany won't provide military support in Iran, calling the war unrelated to NATO. That's your Bloomberg Brief. John.
Yahara, thank you. Appreciate it. Up next on the programme, the Morning Calls Plus, Jay Goldberg of Seaport Global looking ahead to NVIDIA's AI conference live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day.
थोड़ी देर पहले एक स्टेटमेंट आया है फ्रॉम यूएस ट्रेजरी सेक्रेटरी, उनकी ओर से उन्होंने कहा है कि कुछ दिनों में हो सकता है क्रूड ऑयल के जो प्राइस हैं वापस $80 के नीचे आ जाएं। मेजर न्यूज़ है, यूएस क्रूड ऑयल अगर $80 के नीचे ट्रेड करना शुरू कर देता है तो दैट इज अ स्टेटमेंट फ्रॉम द यूएस ट्रेजरी सेक्रेटरी। Now आएगा नहीं आएगा that need to be seen, but this is a statement from Treasury Secretary of USA। ठीक है, क्रूड ऑयल भी वही है आपका ट्रेंड लाइन के सपोर्ट पे, नेचुरल गैस भी अराउंड ट्रेंड लाइन के सपोर्ट पे। This is just a statement, not a कोई ऐसा नहीं है कि गवर्नमेंट ने कहा है, बट उनके यस ट्रेजरी सेक्रेटरी हैं तो उस बात में दम तो है। सेंटकॉम ने यूएस की जो सेंट्रल कमांड है, they posted update for day 16 of Operation Epic Fury। let's see उनके कमांडर इन चीफ एडमिरल ब्रैड कूपर कुछ बोल रहे हैं।
Hi, I'm Admiral Brad Cooper, the commander of U.S. Central Command, here to provide another update on Operation Epic Fury. First, I want to remember and honor our fallen warriors who made the ultimate sacrifice in the KC-135 refueling aircraft incident last week. We hold their memories and their families, their friends and their teammates in our prayers. Their selfless service and dedication hardens our resolve. For 16 days, we've delivered overwhelming firepower deep into Iran. This past Friday, U.S. forces executed a large-scale precision strike on Karg Island, destroying more than 90 Iranian military targets, including storage bunkers for naval mines and missiles and other military infrastructure. To date, our Air Force, Navy, and Marine Corps aviators have collectively flown more than 6,000 combat flights, demonstrating the unmatched capability of America's joint force as we maintain air superiority over Iranian skies. We continue to remain centered on our military objectives. These are well defined and include eliminating Iran's ballistic missiles, drones, and naval threats. It's one thing to defend by striking launchers and intercepting missiles and drones, but it's another thing to eliminate the wider manufacturing apparatus behind them. And we are doing that today. We've talked about it in concept. Here's what it looks like in reality. Let me show you, for the first time, a few examples of how we are dismantling Iran's defense industrial base, which will prevent threats to the region into the future. Here you see a photo from March 1st of a naval drone storage facility located near the Strait of Hormuz. This is the same location 8 days later, completely destroyed. Next, here's a photo taken of an attack drone production factory in Tehran on March 5th. Here's that same factory 6 days later after a devastating barrage of U.S. airstrikes. And finally, the Yazdi military depot, pictured here last month. These 8 buildings are part of the IRGC's missile command infrastructure and are used to produce light and heavyweight torpedoes. Now, here's that same military depot just last week, or what's left of it. U.S. and partner strikes are doing exactly what they are intended to do, deliver on very clear military objectives to eliminate Iran's ability to project power against Americans and against its neighbors. We're also zeroed in on dismantling Iran's decades-old threat to the free flow of commerce through the Strait of Hormuz. Through a combination of air, land, and maritime capabilities, we have successfully destroyed over 100 Iranian naval vessels, and we aren't done. We will continue to rapidly deplete Iran's ability to threaten freedom of navigation in and around the Strait of Hormuz. Our progress remains steady, and we remain vigilant against the enemy. Now, a few thoughts about Iran. Over the last 2 weeks, they have launched attacks on Oman, Saudi Arabia, Israel, Jordan, Cyprus, Turkey, Azerbaijan, the United Arab Emirates, Qatar, Iraq, Kuwait, and Bahrain. In each of these countries, they are deliberately attacking innocent civilians. They've done this more than 300 times, which demonstrates their true nature as a global leader of terror. In just the last few days, the Iranian regime launched a reckless attack against civilian neighborhoods in Tel Aviv with cluster bombs, an inherently indiscriminate type of munition. We join countries across the region in condemning this aggression, and we stand shoulder to shoulder with our partners in bolstering our own defenses. In sum, I will reinforce what I've said before. Iran's capabilities are declining as our capabilities and advantages continue to build. And finally, I'd like to talk about the extraordinary 50,000 Americans who are deployed across the region executing this vital mission. It's long been my belief that every success we have begins and ends with our people. And today I'd like to recognize our unsung heroes, the sustainers enabling America's joint force to unleash this devastating firepower 24/7. To be clear, there's no other military on earth that does logistics like the U.S. military, and our team is at the top of their game today. They're managing distribution networks that span thousands of miles to ensure that munitions, fuel, and supplies reach warfighters on the front line on time, every time. To all our sustainers and logisticians, thank you and keep up the great work. And to the entire Operation Epic Fury team, keep pushing, remain steady, fight to win. Thanks so much and Godspeed.
Prime Minister Keir Starmer spoke today on the nature of potential plan to form a coalition to reopen the Strait of Hormuz, saying that any plan must be credible, visible plan. Both intra-European and European-US discussion have been ongoing on a plan to reopen the Strait of Hormuz. जिसकी सेंट्रल कमांड भी कंटिन्यूअसली बॉम्बार्डमेंट कर रही है ईरान का।
AI generated. They showed about 250,000 people in a square saying how much they love Khomeini. Totally AI generated. It never took place. The media knew it didn't take place, but they built it up like they have great support. They don't have support. And that whole rally that they had 3 days ago, 4 days ago, that
ऑयल भी ट्रेंड लाइन के सपोर्ट पर ही रुका हुआ है। ब्रेक करेगा तभी हो सकता है थोड़ा बहुत जाए वापस नीचे तक नेक्स्ट सपोर्ट एरिया तक, अदरवाइज यहीं से रिटर्न भी कर सकता है। सेलिंग में जो लोग हैं होल्ड मत करना, अब रिटर्न किया तो वापस पुल बैक में वहीं आ जाएगा जहां से सेलिंग आई है। नेचुरल गैस भी रिबाउंड हुआ है ट्रेंड लाइन के अप्रोक्सीमेटली, देखते हैं वापस आता है तो रेजिस्टेंस जोन पे मॉर्निंग से देखोगे रेंज के अंदर ही चल रहा है। हाई टू डे लो ओनली 6.5 पॉइंट रेंज है। तो ओपन इक्वल टू हाई नहीं, ओपन इक्वल टू हाई नहीं है, नॉर्मल कैंडल है। देखते हैं कैंडल कहाँ क्लोज होती है क्रूड ऑयल की। ये और नेक्स्ट कैंडल बड़ी इंपॉर्टेंट हो जाएगी। अगर ये ट्रेंड लाइन को प्रॉपरली ब्रेक डाउन करेगी तो फिर एक सेलिंग का ट्रेड यहाँ से भी प्लान हो जाएगा। डिपेंड करता है कैंडल कहाँ क्लोज होगी, अभी काफ़ी टाइम है। 8 मिनट इस कैंडल की क्लोजिंग पे अभी पेंडिंग है, उसके बाद एक और कैंडल पेंडिंग रहेगी। लग नहीं रहा है क्रूड ऑयल ब्रेक करेगा ट्रेंड लाइन को। लाइक भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। सेलिंग का प्रेशर जरूर दिख रहा है क्रूड में, बट मुझे लग रहा है शायद ये होल्ड कर सकता है इस लेवल को। नीचे 8400 देखोगे, यहाँ से 400 पॉइंट अभी भी डिस्टेंस पर है, 8400। देखते हैं कुछ बाइंग या सेलिंग फ्रेश बनती है तो। ठीक है, डे हाई से काफ़ी अच्छा फॉल आ गया ऑलरेडी इन क्रूड ऑयल। ओवरऑल देखोगे तो अप्रोक्सीमेटली 500 पॉइंट डाउन है। डे हाई से। इंडेक्स भी 99.60 के ऊपर ट्रेड कर रहा है। लेट्स सी $100 को एक बार जाता है तो उसके बाद फिर देखते हैं $100 के ऊपर कहाँ तक जा सकता है या फिर यहाँ से रिजेक्शन मिलेगा। $100 परसों आ तो गया था, सस्टेन होना चाहिए डेली टाइम फ्रेम पे। नेचुरल गैस में देखोगे कैंडल ओपन इक्वल टू हाई है। नेचुरल गैस कैंडल इज ओपन इक्वल टू हाई। क्रूड ऑयल कैंडल स्टिल नॉर्मल, ये भी ट्रेंड लाइन के सपोर्ट पर आ गया वापस नेचुरल गैस। इंपॉर्टेंट लेवल पे रहेगा, देखते हैं ब्रेकडाउन कैसा होता है नेचुरल गैस का, नहीं तो उसमें भी पॉसिबिलिटी है सेलिंग की फ्रेश।
cloud infrastructure. It's a neo cloud, whatever that is. So firing employees so can invest in Nebius, basically.
All right. That's a big bummer, obviously, for a lot of people feeding families. Let's take a look at what's going on in the markets right now. S&P futures are higher, 0.9%. We closed down on Friday. You do have Brent crude giving up some of its gains right now. It's down to 101.67. It had been up to 105 and hanging out in that area for a while. NYMEX WTI was up over $100 for a while last night as well. The 10-year yield coming down about 5 basis points now to 4.23. So it looks like risk-on moves are in store for this market this morning, Danny.
And we're tracking the geopolitics as to what we'll do to oil and other assets. President Trump trying to assemble allies to reopen the Strait of Hormuz as the war with Iran shows no signs of letting up. Trump also claims that the Iranian regime wants to make a deal, but Iran's foreign minister says that is not the case.
No, we never asked for a ceasefire, and we have never asked even for negotiation. We are ready to defend ourselves as long as it takes, and this is what we have done so far, and we continue to do that until President Trump comes to the point that this is an illegal war with no victory.
Let's get the latest with Bloomberg Washington correspondent Tyler Kendall at the White House. So, Tyler, certainly some conflicting messages between Iranian leadership and this White House.
Right, Danny, good morning. Conflicting messages after President Trump appeared to float the possibility that we could see talks, but then that was shot down by Iran, saying that that outreach hasn't happened. We heard from President Trump over the weekend saying that it is because of him that an agreement hasn't been reached, because he is unhappy with the terms that have been put forward, saying that in order for him to agree to a deal, he would have to have firm commitments that Iran was abandoning its nuclear ambitions. At this point, it is unclear exactly who is speaking with whom and if those talks are actually happening, as the White House does intensify its calls to reopen the Strait of Hormuz. Of course, the top disruption that we've been watching closely. And as you mentioned at the top there, President Trump is now demanding that allies take part in potential naval escorts to secure the strait, though at the moment it appears that our allies are wary of that movement. A NATO official did confirm in a statement with Bloomberg News earlier today that individual allies are in talks with the U.S. about what more could be done in regards to the strait, but it appears that efforts are falling short of a full naval mission. For example, we heard from the UK Prime Minister Keir Starmer earlier this morning, who said that a NATO mission will not be sent to secure the strait, though people familiar with the matter do tell us here at Bloomberg News the UK is floating some other potential options that could be put on the table, including potentially deploying autonomous mine hunting drones. Matt and Danny, this comes after over the weekend President Trump did threaten the NATO alliance in an interview with the FT, saying that NATO will have a, quote, very bad future if it doesn't deploy ships. We know that this is something that is actively under consideration and a top priority for this White House.
I know, Tyler, that French President Emmanuel Macron said it's up to President Trump to clarify his objectives. He reportedly declined to clarify those objectives in a call with our allies, and he told a Fox news host that he'll know the war is over when he feels it in his bones. But he did tweet on, or post to Truth Social on March 6th, that there will be no deal with Iran except an unconditional surrender. So that means there would be no terms at all. They have to simply say, we quit and we're at your mercy. Are these objectives, are these goalposts going to stay where they are?
Well, Matt, we're going to ultimately have to wait and see, because as you're laying out here, there has been mixed messaging from the administration, though if you ask officials here at the White House, they still maintain that those core goals when it comes to dismantling Iran's nuclear program, its ballistic missile system, and its support for proxy militia groups remain front and center. But you're exactly right. There are, of course, questions here about exactly how the administration is going to be measuring progress. As we heard from some senior administration officials in interviews.
फ्रैंकलिन अरुण फिलहाल मेरे साइड से तो कुछ नहीं है. ट्रेंड लाइन जरूर है, तो हो सकता है थोड़ा बहुत मार्केट मूव करे नेचुरल गैस में, बट मेरे अकॉर्डिंग वहाँ पे कोई सपोर्ट नहीं बना हुआ है. क्रूड ऑयल भी ट्रेंड लाइन के अराउंड ही है, सपोर्ट पे थोड़ा सा आया नहीं. अगर नीचे आता है तो एक बाइंग अपॉर्चुनिटी जरूर है, आएगा तो देखते हैं. आया नहीं है नीचे, सपोर्ट क्रूड ऑयल का काफ़ी दूर है, 8400 अप्रोक्सीमेटली. फिलहाल ये दोनों जगह पे ट्रेंड लाइन पे है. अगर ट्रेंड लाइन पे ट्रेड करते हो तो बढ़िया है. मैं नहीं करता हूँ तो मैं इस पे कुछ कहूँगा नहीं अभी. लेट्स सी कुछ बनता है अगर बाइंग सेलिंग. विल सी. नेचुरल गैस नीचे ही आ जाए, क्रूड ऑयल ऊपर ही चला जाए तो दोनों जगह ट्रेड बन जाएगा, एक सेलिंग और एक बाइंग. बट लेवल पे नहीं. यूएस मार्केट भी ओपन होने वाला है, ध्यान रखना. 7 PM आधा घंटा रह गया.
A barrel, and we see NYMEX WTI had gone up over 100, is back down now. This, even as Iran steps up attacks on ports and airports. B of A commodities analyst Francisco Blanche says the next 2 weeks are crucial for reopening the Strait of Hormuz.
Shippers themselves will be very, very cautious not to take that route if there's risk of their vessels sending up in fire. And we've seen 20 of those already being attacked or so, I think. So it's a difficult time for shippers, for insurers. Everyone's kind of waiting for a resolution, but if it doesn't come up in the next few weeks, I mean, I'm going to give it maybe until the end of the month, things can get very, very complicated for oil prices.
Let's discuss with Will Kennedy, Bloomberg News Director for Europe, the Middle East, and Africa. And Will, it seems as though it would be in the best interest of Iran and obviously in the best interest of Russia as well to keep the Strait of Hormuz closed.
Good morning, Matt. That's going to be the concern right now, is that for Iran, this is the point of maximum leverage, and the longer it can keep the strait closed, the more economic pain it will inflict on the rest of the world, putting pressure on the US to find an end or an exit from this war. But prices are down today, and I think that reflects some hope that there may be a solution at hand. But the other thing it reflects is that we've got to look at the energy system as a whole, and that, you know, crude oil is only one part of that. And if you want to look at the pain, you should be looking at the refining system, some of the products that come out of refineries like jet fuel, fuel oil that's used to power ships, and diesel that's used to power cars and trucks and factories around the world. And those prices are very high indeed. And so there's not oil able to go into those refineries, but that's sending the price of refined product much higher.
Well, one of the bets that this president seems to be making is that the pain will especially be acute for China, that China needs the Strait of Hormuz to be open, and President Trump floating this idea that the summit with President Xi would be delayed unless China does help. Does it seem like there is any willingness from China to send escorts, to send a navy to help open the Strait of Hormuz, and is it necessary for them to do so?
I think most people think that that's quite unlikely. For the Chinese to use its naval power in that way would be unprecedented. And it's also incredibly striking that the US president, who's often leads a country that's often had an antagonistic relationship with China in the last few years, and that sees the rise of China as the greatest strategic challenge, is asking for Chinese military help to solve this problem. Yes, in some senses, interests are aligned. The Chinese need this strait to open at some point soon. It has insulated itself with some very large strategic reserves, but it gets a lot of its oil supplies from the Middle East. So the interests are aligned, but whether China would be able to lend that very direct military help to solve this problem seems quite unlikely.
Will, thank you very much for that. That's Bloomberg's Will Kennedy in London. Now, elsewhere, away from the war in corporate news, Meta is reportedly planning layoffs that could affect 20% or more of the company. It's also spending $27 billion over 5 years with Nebius to build out AI infrastructure. Let's get to Bloomberg Tech's Ed Ludlow. Ed, just how necessary are layoffs at Meta in order for them to keep spending at the rate that they are?
Yeah, I mean, the capital expenditures commitment is very high, and the Reuters report details that is the trade-off to make cuts at 20% or beyond 20% of total workforce because of the rising infrastructure spend. And the interpretation of the sell side on this is interesting. They look at the Block announcement for a few weeks ago and say that, you know, there is evidence within Meta internally that AI productivity could help them, and that would be a part of the story in eliminating some roles. But also, like, it's a signal of intent to keep spending. And if you're going to do that, reducing headcount at those levels also protects margins, right? You know, the terminal team with that chart just showing capital expenditures as a proportion of revenue, like very, very high. But Meta's still a profitable company, right? And so protecting the bottom line is something that the sell side has kind of cheered, and one reason the stock's up in the pre-market such as it is.
What do we know about the deal with Nebius, Ed? You know, last week we were talking about Meta's own chips, and maybe they're not quite there yet in terms of competition with NVIDIA or or Google, but will they be using their chips in these, neo clouds?
Yeah, it's the everything strategy. So their own chips, buy NVIDIA and AMD chips for their own data centers. And then this third part of the strategy is the Neo Cloud, buy AI-specific capacity. So it's a 5-year agreement for $27 billion total, but $12 billion of committed or dedicated compute next year. That's quite aggressive and accelerated timeline. Nebius principally relies on NVIDIA-based systems. And that's been a part of their selling point, just as CoreWeave in this country has made it a selling point as well. They need compute. They are compute constrained. The demand for internal workloads is greater than they have access to. This is a big spend by them on the Neo Cloud portion.
Yeah, the risk is in execute and supply. Not in demand, as Mark Zuckerberg has made very clear. Ed Ludlow, Bloomberg Tech co-anchor. That show kicks off at 11 a.m. Definitely tune in for more on that. Let's get a look right now at some of the other movers on our radar this morning. Alibaba is revamping its business to put all AI products under a single unit that will focus on profitability. So you see Alibaba shares. These are the ADRs here trading up 3%.
In other tech movers, Micron sealing a deal to build another site in Taiwan. That was announced 2 months ago. They also report earnings on Wednesday's shares climbing more than 4% ahead of that.
And Dollar Tree delivered a mixed annual outlook, raising doubts about its ability to keep winning over shoppers with low prices.
And finally, some deal news. Public Storage set to acquire National Storage in an all-stock deal worth about $10.5 billion, creating a $57 billion storage giant.
That's a legit Halo asset, right?
Yeah, that's Bruce Richards likes Halo, right?
Yeah. I mean, a lot of people like Halo right now. Hard assets, low obsolescence, I believe, is the O.
Yeah, that sounds right. Well remembered.
All right, coming up, UniCredit's attempt to take over Commerzbank, or is it? Berlin says no. We'll talk about it with Steve Ahrens out of Frankfurt next. This is Bloomberg Open Interest.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
getting out of high interest. Look what's making headlines around the world. The Wall Street Journal is reporting that Apollo executive John Zito has warned of arrogance in private markets, saying troubled private credit loans to smaller software firms may recover only 20 to 40 cents on the dollar. He says many private equity valuations are wrong. He actually said literally all marks are wrong, but a spokesman later clarified that he was referring only to the software loans out of private credit. So we'll continue to keep an eye on this space. Obviously, this show is very focused on the private credit party, as Mr. Zito called it in what was apparently an off-the-record conversation. Elon Musk's AI startup, xAI, is recruiting Wall Street bankers, traders, and credit analysts to train its Grok chatbot on complex finance strategy. The hires will help Grok to model deals like leveraged loans and mortgage bonds as AI firms race to sell tools to investment professionals. The push comes as xAI tries to catch up to rivals like OpenAI and Anthropic in business software. And UniCredit is making a $40 billion bid for Commerzbank, pushing its stake past the key 30% takeover threshold under German law. The CEO of UniCredit, Andrea Orcel, says the move gives his bank flexibility over the potential of a future takeover, though full control isn't the goal right now. A formal offer is expected in early May. And joining us now is Bloomberg's Stephen Ahrens. He leads our EU finance coverage out of Frankfurt. And Stephen, they have to make this offer, right? It's a procedural motion after they pass the 30% stake. But they don't seem to want to take over all of Commerzbank right now. So why build such a big stake?
Yes, you're right. The offer sort of needs to take place and then gives Commerzbank the freedom. It's going to be off the table. They don't expect many people, any people really, to accept it. And then they're free to buy more shares if they want to. So that's the, I think, the rationale behind this. They want to be able to actually take over the bank, but they can't yet. There's government opposition to the potential deal. And once they have that flexibility, they have more time to talk to the government, to talk to the bank, and prepare, lay the groundwork for a potential acquisition bid further down the road.
Well, they'll need that time to talk with the government because already the German government, Stephen, has dismissed this, calling it unacceptable. What is their position?
You're right. The government is very clear. They've been against this deal from the very start when Orcel first disclosed.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Breaking news on this Saturday morning.
There's really only one story, and that is Iran.
Balance of Power has all the angles covered.
Trust Bloomberg for on-the-ground coverage.
An entire region pulled into this conflict.
Talking to you from the bomb shelters.
Up-to-the-minute reporting.
Iran remains a viable threat.
And the analysis you need.
There was no imminent threat.
There's never a good time, but there are better times.
Netanyahu is my opponent. However, on this issue, we stand together.
Nobody covers geopolitics like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Strategists still see equity pain ahead, but no bear market. Goldman's Peter Oppenheimer warns of a downturn, but says we are not going to get that 20% decline. He says that geopolitical and energy shocks have historically led to short-lived corrections and reverse quickly. Meanwhile, Morgan Stanley's Mike Wilson believes the correction phase of this conflict is nearing an end. The S&P 500 is down 4%. I don't know if you can call that a correction from its highs, and had its worst two-week performance since April's tariff turmoil. Joining us now is RBC head of U.S. equity strategy, Lori Calvasina. Lori, is it your expectation that there's more pain in store for this equity market?
So it wouldn't surprise me. I mean, we define on our tiers of fear, and I know I'm scaring everybody by talking about this. I'm actually not that bearish. Not
at all, actually.
I'm not.
I don't think you're bearish at all. Yeah.
No, I'm actually pretty neutral. But, you know, part of it, right, last year on tariffs, actually heading into that situation, we kind of formalized our process for thinking about drawdowns. And so we sorted them into 4 tiers, which we call the tiers of fear. And tier 1 is a garden variety 5 to 10% drawdown. We tend to have these often, right? We had one last October and November that bottomed out at 5.1%. It's possible this could be it, right? I mean, that one that we had last fall felt like it would go much deeper, and it didn't. And the U.S. is benefiting right now from, you know, kind of the safe haven trade at the moment. So, you know, it's certainly possible this could be it, but it wouldn't surprise me at all to see us go down a bit deeper. And if you kind of hit that 10% mark, 6,300 is about where you go. Now, we have said that the second tier of fear, which is what we had last year, that 18.9% drawdown, we've had 5 of those since the great financial crisis, where we've had peak to trough declines of 14 to 20%. Risks of that have grown, but you have to get to a point, right, where there's genuine fear of either a recession or some sort of contagion. And I don't think that's where we are yet. I don't think we're really even close to that, frankly, from talking to clients, from seeing what companies have been saying. I was at our financials conference last week, and the tone was solid and steady. So I understand the fears and kind of looking at that left tail worst case scenario, but we're just not at that point yet where you'd even kind of get to a tier 2.
Did you see the John Zito story in the Wall Street Journal today?
On private credit.
Top dog at Apollo. Yeah, not just private credit, though.
Yeah.
He said, I told my wife last night, I feel like the market should be down at least 10%.
Yeah.
And that was last month. That was before we invaded Iran.
Yeah, well, look, I mean, I don't want to sort of speculate. I wasn't in the room, right? But in terms of why we've been so resilient in the U.S. equity market, we've been watching PE multiples creep down since last August, right? And it's been AI jitters. It's been private credit fears. Geopolitical tensions, frankly, started to really balloon back in January. I was up in Canada the first week of the year. We talked mostly about Greenland, not really about Iran, but I went back and looked at betting market data, and we actually saw expectations for the U.S. to strike Iran spike back then, and that's around when the S&P turned choppy and the energy trade really took off relative to the S&P. So I do think there was a tremendous amount of preparation going into those strikes. I think obviously people were not anticipating the extent of it. And, you know, when I talk to my colleagues sort of on the derivative side of the business, right, it seems like a lot of people have been very well hedged coming into this. So I think there is a lot of nervousness, but I think there's also a lot of protection on as well.
All right, you're going to stay with us, Lori. We've got the opening bells up next as futures rise this morning. Oil back down to only a mere $101.78 a barrel for Brent crude. S&P futures higher and NASDAQ futures up by more than 1%. We're back with the opening bell on the other side of this break.
We are in such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes. And I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We are moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller, looking at pretty decent gains in terms of futures. 0.9% on S&P futures. NASDAQ futures up more than 1%. It may be that this market came down. At one point, it was down 5%, at least intraday, and that's enough of a correction, I guess, so that we're off to the races again. Ireland Inc. ringing the opening bell at the New York Stock Exchange. We're going to talk to Peter Burke later on in this program. I think they're ringing the bell today because tomorrow, St. Patrick's Day, is a market holiday, so they wouldn't be able to.
It's not
a market holiday.
No, it's not. I was like,
It's
am
not.
unaware of that.
It should be, I think.
Oh,
you know.
If anything, the day after should
Why
be.
not? Exactly, Wednesday should be. Acadia ringing the opening bell down the NASDAQ, ACAD. The stock is down by more than a fifth year to date, so hopefully this gives them a little bit of a boost in terms of performance.
Speaking of boost, I'm looking at Meta and Nebius this morning. Reuters reporting that Meta could cut up to 20% of its workforce to offset AI costs. People kind of pointing to the block firing of people too and saying, hey, this is a very similar thing. You free up capital in order to spend on AI, or at least that's what you say. But Meta's not just saying it, they're doing it. Planning to spend up to $27 billion over 5 years for access to Nebius's cloud infrastructure. Nebius now up 13% at the open, Matt.
All right, we're also watching Dollar Tree. It anticipates slowing sales growth this year, raising doubts about winning over shoppers with its low prices. Shares were negative after the report, but are climbing right now, up more than 4%. Let's bring back in RBC head of U.S. equity strategy, Lori Calvasina. And Calvasina, is that Irish? Are you Irish?
It's Italian. It's Italian.
It's your birthday, though, today. Happy birthday.
Happy birthday, Lori.
Lori. You see Dollar Tree's glum outlook, and I wonder if you're not worried about the consumer as gas prices start to rise again. What are we at? $3.70 now for regular unleaded, and the consumer is squeezed in so many other ways. Inflation, PCE, core PCE was 3.1% in the last reading before the gas prices came into play. How could you be so bullish on the stock market as we get into this forever war?
Well, it's funny. I was at a dinner last week with my rate strategist, Blake Gwynn, and we were actually debating this point, and I had to remind him the U.S. equity market, the S&P 500 specifically, it doesn't have the same weight to the consumer that the U.S. economy does, right? And, you know, just to give you sort of an illustration of that, a couple of days after the Iran situation broke out, I went to my U.S. analysts and said, look, I said, I need you to fill out this survey. I'm really sorry. Like, and they were actually great. And I had a few people who even thanked me for doing it. But we just said we want to gauge impact from this conflict if oil goes above $100 for an extended period of time, and if the conflict goes on for an extended period of time, which we define as more than 4 weeks. So those were their parameters, and we said, you know, we want you to gauge impact to earnings from oil and gas. We want you to gauge revenue exposure directly from the Middle East. And third, and I think most importantly, we want you to gauge the impact of knock-on effects. And so then they had 5 choices. They could say none. They could say only a little. They could say mixed, not relevant. They could say some, a decent amount, and then they could say a lot. And so those latter 2 were sort of in the more significant impact category, and the first 3 were kind of the lesser significance category. On the earnings question, 72% fell into those 3 categories of lesser significance. On the revenue exposure question, it was 77% that fell into the lesser significant categories. Now, knock-on effects, there was more impact seen, but it was still surprising that 66% fell into those less impact categories. Now, 2 of the sectors that were viewed as being significantly impacted were consumer staples and consumer discretionary. The other one was materials. So we took away from that yes, there are pockets of risk. You want to be concerned about those, obviously. And talking to Nick Modi, my consumer staples analyst, I actually went back to him with a survey, and I said, you know, because he scored, you know, as more significant across all 3 of the questions. And I said, I want to make sure these are your real answers, because people are going to think staples is defensive, but you're telling me it's not by answering this. And he said, no, I agree with that. So, you know, we do think...
You agree with that it's not defensive?
That staples may not be as defensive as you think it is in this conflict.
Why is this different this time? You have seen that in the market price action. It was down nearly 5% in the first week and down 1.2% last week.
Yeah, so look, this was a sector, we've been neutral on this sector, right? But we've classified it as one of the ones with better valuations, and that was a good data point coming into the year because people really did want cheap sectors, right? You actually saw the sector benefiting from that early on in the quarter. But as things wore on, I know there was one day, I forget if it was last week or the first week, but like consumer staples were just getting whacked across the board. And like I talked to my trader, and there were not really, you know, sort of, there was one company that had a bad earnings data point, but then others were just sort of getting pressured. And I was also seeing materials was the second worst performing sector, along with staples out of the gate.
That's a halo trade, materials. I thought that was hard asset, low obsolescence.
Well, look,
commodities are just through the roof, right?
Well, I will say materials, you know, the metals and mining trade, you know, was really what was gassing a lot of that, and that's actually started to look a little bit expensive in here. But, you know, we do think that what we learned from that analyst survey, right, is there are pockets of risk, but this idea that the broader U.S. equity market has some insulation, you're hearing that from a bottom-up perspective. And I learned a long time ago, had a lovely transportation analyst I used to work with back in my Credit Suisse days. And, you know, we would go, you know, all the macro people would talk about all these things going on. And I just remember I would always talk to Allison, and her name was Allison Landry, and she covered the rails and other transportation and logistic companies. She said, well, my companies aren't saying that. And, you know, she would be very direct with us, like, yeah, you guys can go off and, you know, sort of think whatever you think, but like until the companies actually start giving us color on that, investors are not going to pay attention.
Lori, one of the things I've been kind of obsessed with over the past week, that this came from a cocktail party conversation, but this idea that so much
cocktail party is a really nice way to put it.
Thank you, Matt. That's exactly what it was. But this idea that so much of what we're seeing in equity markets can really be attributed to the pod shops, that all of the money gets concentrated in the winning pods, so momentum goes up really hard, but they have really severe risk parameters. So when the market turns against them, they degross and get as low to the ground as they can. So over the past 2 weeks, what we've just seen is unwinding of software shorts, so software does better, selling everything else off, and that's why a lot of the market moved lower that maybe didn't seem like it made sense. How much of this market has just been positioning and from these pod shop hedge funds?
You know, I don't have a specific number on that. I think that's generally the right instinct. I do think that what my long-only managers tend to do when you're in markets like these is sort of sit back and wait and see what happens and then look for things to buy on dislocations, right? And, you know, I think software, I had some conversation, you know, this is pre-Iran, but I had some conversations about software when we were going through that AI, you know, jitter trade that turned into scary trade really fast. And I remember talking to some people, and they're like, well, you know, yes, the valuations are cheap, but people are looking at cash flow. We have to sort of sort through that. I remember someone telling me, you know, I want to see, you know, sort of more capitulation from the sell side. I want to see more analyst downgrades. And I don't know if this gentleman has, you know, kind of moved in yet or not. It's been a little while since I talked to him. But the reality is I do think that long-only managers do tend to look at things with a longer-term lens and will sort of look at that noise created by the hedge funds and figure out where they can be opportunistic. And I heard a lot of that around the tariff example, for example.
I'll bring John Zito up again. because in this off-the-record discussion he had at UBS, or with UBS clients, the Wall Street Journal reports, he said, I think it's more likely than not we go into a recession, a consumer confidence-led recession.
Well, let me tell you on consumer confidence. Okay, so if we look at both the Conference Board data and the Michigan data updated on Friday, and I tend to watch that because post-COVID, it's had a pretty decent relationship with the stock market. It's broken down a little bit the last year, and it's been a barometer for sector performance since the financial crisis. So I do watch the Michigan data pretty closely, and even with the downtick it saw last week. So if you look at that press release, they said basically, things were pretty good in the first half of the survey period before Iran, and then things came down and offset the gains in the second half, right? And people were mentioning gas prices. That at least is my take on the press release. And so we know that this conflict had an impact on that and ended up knocking the data point down. But even with that knockdown, we've seen that time series sort of stabilize around, pretty extreme lows in recent months. So you just have to remember that coming into this, the consumer was already, not feeling great, frankly. When I asked my analysts about knock-on effects, consumer confidence and inflation were the top two. But guess what? We have been dealing with those consistently in the post-COVID environment. So the question, right, is are companies able to work around those kinds of issues? And I think the jury is still out on that. But I have to tell you, this private credit conversation needs to evolve. We are hearing a lot of companies, I'm not speaking about any particular company, we did have a BDC panel at our conference last week and a number of other speakers, so we wrote about this a little bit in our weekly today. But if you sort of think about the conversation, right, it's like, well, I'm better off than this firm. And if there's a recession, yeah, the metrics are going to get messier. I think that the bigger issue, right, is that there is just not a lot of transparency in this industry, right? So when folks like me try to sit down and analyze risks, it's very, very difficult to do so. And we're kind of stuck in this narrative. And I think what we need at this point is more focus on the industry and more evaluation of the industry. And we need to have players stop pointing fingers at each other, frankly. We need to sort of really understand what are the risks of this industry to the broader financial sector. If you talk to Gerard Cassidy, he would tell you, he's not overly worried, would be my guess. We had some companies at our conference specifically say they don't see a massive correction. They don't see contagion. Like, they are watching this issue, right? But I think that we're just sort of stuck on the narrative right now. And I don't know who is going to break us out, but somebody needs to do it.
It's such a good point. It is everyone that joins us is like, there's problems in the industry, but not us. We're doing great. Everything is wonderful. But
we don't have any software exposure.
Yeah. No, Apollo said they're going to start to try to mark things daily, so maybe it's
true.
Apollo, ironically, or not, that leads us out of this. Lori, we're going to have to end things there. Okay. Thank you for joining us on your birthday. Happy birthday.
Thank
Are you going to get a cake?
My kids are demanding one. I wanted cupcakes, but they wanted a cake, so we're getting a cake.
I'm for a full cake.
They should be happy with either.
I'm still paying for the cake, so.
Lori, thank you so much. Wonderful to see you. That's RBC Head of U.S. Equity Strategy, Lori Calvasina. Let's get a check on your equity market. 10 minutes into your trading day this morning. We move higher by 1% after consecutive declines on the S&P 500 for 4 days. Last week, it was the longest losing streak so far of this year. It's the Mag 7 leading us higher after entering into a correction. Nvidia up 2.2%. A Reuters report out just moments ago that they are forming a JV with private equity companies led by TPG worth about $10 billion. Meta also having a good day, the second best performer in terms of added points to the S&P after a report that they will be letting go about 20% of their staff. Micron, they're going to be reporting earnings on Wednesday, so moving ahead of that. To the downside, it's Walmart, Netflix, even though one battle after another, one best picture. Wait, that's not a Netflix picture, is it?
No, not at all.
I guess that's the reason. Maybe it's down. I don't know. Anyway, Costco moves lower. Public Storage moves lower after a bid for national storage, creating a $57 billion storage giant. Chevron is down because if you look at the individual sectors, everything is up except for energy, with the price of oil moving lower this morning, but not down really significantly. Infotech, again, that's the best performer, with Nvidia leading the gains, and they have. Oh, Matt, your memory is going to be better than mine this morning. The developers conference that they do.
The GPU.
Yes.
TC.
Yes, exactly that. But there is a good chart floating out there that apparently, when Jensen Huang tends to speak at these things, Nvidia actually falls. So it's not necessarily an indicator for how the stock will do. But again, there's that Reuters report of private equity money moving into OpenAI, more spending happening. So maybe NVIDIA gets...
he sounds too much like a hype man, right? It's like, dude, you don't need to convince us. Just show us the numbers. But he's always trying to big them up. He's always like, oh, you can't believe how much demand there is. Okay, we can believe it. We see the numbers, but I think that's a problem.
Yeah. Sometimes it helps other companies like TSMC moves higher or something, or the memory chip stocks move higher because Jensen Huang talks about the memory cost, but NVIDIA doesn't necessarily move. All right, we're going to follow all of it for you. And, of course, Bloomberg Tech kicks off at 11 a.m. We will be talking more about Facebook. Meta, the parent company, may be the next big tech firm to lay off a ton of employees. Reuters saying a fifth of its workforce as it spends more on AI than people. Details next. This is Open Interest.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophy.
1-1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Let's get your top calls this morning. What the sell side is saying. First up, KBW. They upgrade Rocket companies, saying that the stock looks cheap based on its outlook for mortgage demand and Rocket's earnings. KBW believes that changes to the business could lead to stronger and more stable earnings. Shares up just under 7%. Next up, Argus is downgrading Adobe after the company's latest results and the CEO stepping down, saying that the leadership change overshadows its earnings and comes amid broader concerns about AI disruption. Shares down nearly 1%. Finally, Seaport Research, they downgrade Qualcomm to a sell, arguing a shortage of memory chips will hit Qualcomm's customers the hardest and leave the company losing share even as the overall market gets smaller this year. Little change to Qualcomm shares this morning, Matt.
All right, so some upgrades and downgrades there. Let's talk about a company that is rallying big. on huge job losses, reports of huge job losses. Meta, according to Reuters, will cut 20% of its staff to offset costly investments in AI infrastructure. Today, Meta also announced plans to spend $27 billion over 5 years on that infrastructure with Nebius, a neo-cloud provider. Let's get a read on this with Bloomberg Intelligence head of global tech, Mandeep Singh. So, markets responding really positively, and obviously this has been a goal number one for Mark Zuckerberg, to turn the social media augmented reality AI company into an AI company. Is he going to get a real return on this kind of investment?
I mean, there are two ways to interpret this. One is that AI is driving efficiencies, and that's why, they're doing the layoffs. The other side of it is the foundational model has been trailing, the leading models like OpenAI, Anthropic, and Gemini. And they will be investing over $100 billion in CapEx this year. So they obviously want to carry on with that. And the margins are going to really look back. The free cash flow margins for this year are going to really look back despite the acceleration in top line that Meta is talking about. So from that standpoint, not having a product, a standalone app like OpenAI's or Anthropic is a problem for Meta, given how much they are investing. And so from that standpoint, to offset the margin impact, they're doing this ahead of time, because to me, the cut is really coming at the R&D line. Look at the R&D line.
But Mandeep, did they not need these people? Did they just have an extra 20% of staff just sitting around to be fired?
Well, what they are saying is all the product managers need to be more efficient in terms of how they are managing the team, and they are doing that proactively as opposed to the market forcing it when it happened in 2022, 2023. But other than the R&D line, they don't have as much cost intensities to cut. So if you're talking about a 20% layoff, it has to come, a bulk of it from the R&D line, because they spent almost $58 billion on R&D, in the last 12 months. So from that perspective, given their R&D intensity is much higher than a Microsoft or an Alphabet, it makes sense for them to, optimize that cost structure right now.
I mean, but again, the point you're making just seems like that can't be enough. Is that fair to say, that layoffs can't be enough to save your margins given the spending that they're doing?
Especially if the top line doesn't get that bump from, the large language models. I mean, look at how fast Anthropic and OpenAI are growing their revenues. Meta is growing a very healthy, 25% top line, but all that is coming from their core business. The apps that are very addictive, they continue to monetize them very well in terms of the feeds. But in terms of the pure play AI contribution from the large language models, whether it's APIs or standalone app, it's almost nothing. And you're really hoping that $110 billion of CapEx will translate into top-line revenue. And that's where not having a cloud business, the infrastructure cloud portion that Microsoft and Google have, is a disadvantage for Meta.
For now, Meta shares getting rewarded up 2.5%. Mandeep, thanks for joining us on this Monday morning. That's Mandeep Singh of Bloomberg Intelligence. Coming up on Open Interest, BYD shares surge as the Chinese EV leader makes moves abroad. That's coming up next. You're watching Bloomberg TV.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
BYD shares surging the most in 13 months, lifting with it other Chinese EV stocks such as NIO and Xiaomi. BYD's Brazil plant received orders for about 100,000 units, a sign of improving sales outlook in foreign countries. Bloomberg's Detroit bureau chief David Welch joins us now. And David, with all the success of these more affordable, smaller electric cars, with all of the talk about BYD maybe getting into F1 and World Endurance Championships, it seems that more people in other countries are ordering their cars.
That's right. And look, the Chinese car companies, especially BYD, have done really well exporting vehicles or setting up shop elsewhere. They've done pretty well in Europe, where they've gotten market share. South America is a big market for them now. They're growing there, and they're doing well in Mexico, right on our doorstep. And that's fed a lot of the concern among U.S. car companies and the other Western automakers that without some sort of protective measures, tariffs, bans, outright bans on their vehicles in the U.S. market, they'll take over here too, because China has far more capacity to build autos than it actually sells them domestically. So they're sending their vehicles overseas.
Is there any action, besides from the United States, to actually push on things like that, David?
There are. You're seeing more restrictions from the European Union, a lot of talk about it, higher tariffs. Canada too, even though Canada is talking about allowing a small number of Chinese vehicles into that market, it's still a restricted market for them. And as part of the USMCA negotiations, how Mexico treats Chinese-made vehicles, that's also a big piece of this. What a lot of China hawks in the Trump administration and the domestic auto industry here wants to make sure that Mexico doesn't become, and for that matter Canada, sort of a backdoor entry point for Chinese vehicles into the U.S. market.
We are looking at gas today, David, that's up to more than $3.70. It's not an alarming national average like $4 or even $5, but the backlash against EVs, is that set to turn around as people realize they could actually save money with these things?
Yeah, I've thought for a long time, Matt, that there is an inflection point. It's not 370. But if we were to get gas prices to stay well above 4 for a while, you might have people, certainly they'll look at hybrids, right? And they already are. But you could have them also looking at EVs if gasoline gets expensive over time. Problem with EV sales in the U.S. is once you take away the government incentives, there are too many trade-offs for a lot of consumers. But if they start to see benefit because fuel is expensive, then they would certainly give the plug-in vehicles and pure electrics another look.
My favorite hybrid is the Corvette E-Ray. It's just fantastic the way they put the power down. David Welch in our Detroit bureau, thanks very much for that. Tune in to my podcast because my co-host Hannah Elliott disagrees with me about the Corvette. It's called Hot Pursuit. You can get it on your favorite podcast platform.
atividade estava sitiada.
Nisso, ao começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being a billion-dollar business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
CBS News on the Hour, sponsored by JTV.com.
I'm Deborah Rodriguez. Week 3 of the Iran war, and the White House is pushing back, with some NATO allies snubbing his call to help reopen a key shipping lane in the Middle East to get global oil supplies moving again. Spokeswoman Caroline Levitt.
These countries are absolutely benefiting from ensuring that Iran can never obtain a nuclear weapon. This is something not just the United States, but the entire Western world has agreed with for many, many years. So I think the president is absolutely right to call on these countries to do more to help the United States to reopen the Strait of Hormuz.
Those Iranian women's soccer players have been having second thoughts about seeking sanctuary in Australia.
Iran state media report the captain of the Iranian women's soccer team has withdrawn her bid for asylum in Australia and will return to Iran. That means 5 of the original 7 players have now changed their mind under unbearable pressure, it seems, from the Iranian authorities, who human rights activists say threatened the women's families with reprisals. Fear of reprisals for refusing to sing their national anthem at the tournament in Australia is what led the women to seek sanctuary in the first place. Vicky Barker, CBS News, London.
Spring is 4 days away, and so far signs are it'll come in like a lion, from blizzard conditions in the upper Midwest to possible twisters, strong winds and heavy rain in the east. CBS meteorologist Lonnie Quinn.
The highest risk for tornadoes and the worst severe weather anywhere from, say, around South Carolina up to Washington, D.C. around 5 o'clock this afternoon, with the tough weather even stretching into New York City. It's offshore by the time we get to about 2 a.m.
Almost 3,800 union employees have gone on strike at the nation's biggest meatpacking plant. Their beef, not money, but safety. Deborah Rodart works at JBS in Greeley, Colorado.
The jury took.
We should be treated better than the cattle, because the cattle is the one that gets treated better.
Deliberations continue in L.A. today in the first ever jury trial on the harmful effects of social media.
The jury took up the case Friday after a trial which heard witnesses including Meta chief Mark Zuckerberg. The issue is whether Meta or YouTube deliberately created programs posing a danger of addiction in children, or if they were negligent. A 20-year-old woman filed a lawsuit claiming she became obsessed with social media starting at age 6, which amplified depression and suicidal thoughts. Michael Toscano, CBS News.
Days after he called for an end to the Iran war,
migliaia di persone innocenti.
We're learning Pope Leo will be honored in Philadelphia on the U.S. 250th anniversary in July. He'll deliver a virtual acceptance speech from the Vatican when he's awarded the National Constitution Center's Liberty Medal. Average gas price, $3.72 a gallon. This is CBS News. The bracket is set for the women's NCAA tournament.
After going a perfect 34-0 on the season, UConn earns the top overall seed in this year's tournament. But when the action begins, none of that matters to Huskies head coach Gino Auriemma.
We've lost a bunch of tournaments being the number one, and we've won a couple not being the number one. You're going to have to play everybody anyway, so you might as well just go play.
UConn, aiming for its 13th national title, is joined by UCLA, Texas, and South Carolina as the other number one seeds. The women's tournament gets underway with the first four on Wednesday and Thursday. Erica Herskowitz for CBS News.
In last night's Oscars in Memoriam on ABC,
so hits the laughter.
83-year-old Barbara Streisand remembered her The Way We Were co-star Robert Redford with a few bars from her Oscar-winning song. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Monday morning from the Bloomberg Interactive Brokers Studio in New York City. We are streaming live on YouTube. We're also streaming live on Bloomberg.com, so you can check us out there as well. Coming up today, we're going to check in with Dan Williams, reporter for Bloomberg News. He's based in Jerusalem to get the latest on the Middle East. Ed Ludlow, B-Tech co-anchor. He's going to give us the tech news of the day. I want to talk to him about this Meta story. Meta to spend up to $27 billion on nebulous AI infrastructure. The deals just keep on coming there, and the numbers are so huge. Cliff Kupchan, chairman at Eurasia Group, discussed the latest out of the Middle East. I'm still trying to get through the note from those folks. It's very dense, a lot of good stuff, so we'll get the breakdown there. Scarlett Fu and Paul Sweeney live here with you with the Bloomberg Intelligence Program. Let's kick it all off with John Tucker and a Bloomberg Business.
All right, risk on, at least right now. This Bloomberg Business Flash being brought to you by IBKR. Will the U.S. Consumer Confidence Index be above 101 in March 2026? Turn your view into a trade at ibkr.com/forecast. Last trading day is March 22nd. So all 11 major industry groups in the S&P 500 are higher right now, and technology shares in the lead in the S&P 500. The leaders individually: SanDisk, Seagate Technology, Ciena Corporation, and Micron Technology. At the bottom, energy, oil lower on word of a trickle of vessels beginning to find a way through the Strait of Hormuz. Right now, Brent crude, which has been in the driver's seat for so long for so many assets, right now down 2.6%. Still above $100 a barrel, though, 155 cents. Michael Kelly at Pine Ridge Investments is advising investors: any more dips, jump in and buy.
We're still leaning constructively towards the markets, understanding, you know, if they do have another back off, we think we're a couple weeks from the beginning of seeing some sort of calming down, and we would buy into further disruption.
Right now, the S&P 500, 82 points higher, up 1.25%, 67.15 on the index. The Dow, up 526 points, that's up 1.1%. The NASDAQ 100, 328 points higher, that's up 1.4%. Javier Blas has a great column today, and this is implications for global trade. He writes, of course, about oil infrastructure and energy in particular. We've seen dramatic swings in the price of fuel for ships. This is fuel oil. It's the stuff that's actually at the bottom of the distillates when you crack the fuel. Blas points out it's getting crazy expensive. The real worry is that some key ports may run dry of fuel for ships, effectively bringing world trade to a screeching halt, or whatever ships do when they halt. We check the markets for you all day long, right here.
I think they drift.
Yeah,
drifting.
well, you don't want that either. Right here on Bloomberg Radio, I'm John Tucker. That's your Bloomberg Business Flash. The band's back together again.
I know, it's
so
great.
I don't know. It's and Paul's tan actually.
It was
Who gets
sunny out
tan
there.
from skiing?
It was 5 days of bright sunshine, not a cloud all week, and when you're at 12,000 feet, it just beats on you.
Yeah, that's true.
So,
well, you know, it offsets what we have, which is like that pasty white skin from months in winter weather.
Gray.
It was good. This probably can be the last week or two of skiing out there.
Yeah, I would imagine.
Oof.
But you got snow, though.
We got snow the week before, so we were okay. But like Utah, the photos I'm seeing there are just nothing. So
yeah, it looks like the East Coast,
it's
basically.
a very early end to the season out west, unfortunately. Except for the people in Tahoe, they got tons of snow. All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here with you in the Bloomberg Interactive Broker Studio, streaming live on YouTube and streaming live on Bloomberg.com. As John was reporting, we got green on the screen here, but let's take a look at some of the stocks on the move today. For that, we're joined by Bloomberg's Tatiana Daria. Tatiana, what are you looking at today?
Paul, we got to talk about Meta shares. They are up by about 3% after reports the social media giant is planning layoffs that could affect about 20% of its workforce or more. No date has been set for these cuts. The magnitude is also a moving target. Nonetheless, in the world of AI capex overshadowing everything else, a reduction in the labor force is welcomed by the market, particularly if it comes as a result of AI productivity. But let's see more on that when the company actually announces something. Again, this is based on a Reuters report without a confirmation for the company. Shares up by 3% this morning.
All right, let's stay in the tech space. What do you have for number two?
Well, where we have a confirmation is actually Meta's deal with Nebius, and will pay about as much as $27 billion over the next 5 years to access AI infrastructure from the cloud provider as it spends aggressively to compete for the top frontier models. Nebius is a Dutch company listed in the U.S. and a so-called neocloud that operates data centers and has a strategic partnership with NVIDIA. Separately, Meta also committed to buying as much as $15 billion in additional capacity that the cloud provider is building for third-party clients. So all in all, this represents one of the biggest single contracts for Meta, which tells you, two things here, that the AI trade is alive and well in parts of the market. And the second one, that the war isn't really impacting CapEx plans just yet.
Just yet. Okay. The numbers are big, but that AI story really gets me here because I think that portends in other industries as well.
Yeah.
I mean,
obviously.
Big time. I mean, so I'm sticking with my strategy or my call that it's a net destroyer of jobs, that being AI versus a net creator. One more, Dollar Tree.
Dollar Tree shares are up by 5%, really rebounding here from losses in the pre-market on a mixed annual outlook, which raised some doubts about its ability to keep winning shoppers with low prices. Its sale projection for this year of about $21 billion equates to growth of about 7%, and that is a slowdown from a gain of 10% last year. Overall, though, for quarter profits topped projections, so it looks like the street is coming back saying that maybe that outlook was just out of abundance of caution in this tough environment. But man, with oil prices up so much and other, as you guys mentioned, prices too, one would have to really think that Dollar Tree would benefit from that.
All right, well, we'll see how it all plays out. Tatiana Darie, thank you so much. She is our strategist for our Markets Live blog. You can check her work out at MLiveGo on the Bloomberg terminal. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple, Spotify, or anywhere you listen, really, to get your podcasts. All right, let's get the latest on what's going on in the Middle East. There was an attack today on one of the main ports that the UAE relies on that's separate from the Strait of Hormuz. It's just outside the Strait of Hormuz. It looks like things have kind of gotten back to normal. They've had a resumption in operations. Let's bring in Dan Williams. He's a reporter for Bloomberg News based in Jerusalem. And clearly this is what everyone's watching in terms of the resumption of some oil operations. But just walk us through where we are in day 17 of this war in Iran.
Good morning, yes. It's well into the third week of this war. It would appear that the war, while intensive, while being fought on several fronts, is now really focused on energy attrition. Each side trying to inflict pain on the other in terms of how they can sustain this when it comes to energy resources, energy worries, keeping in mind that this is the Strait of Hormuz, at least, is a pathway, a maritime corridor for some 1/5 of energy exports, oil and gas. The U.S. president has been appealing to various allies in hope of finding a way to break the logjam created there, or should I say the de facto closure, given worries about Iranian attacks on shipping there. There have been a trickle of ships allowed through. It would appear that that has yet to be resolved. Obviously, it's affecting energy prices. Meanwhile, in the corner of the Middle East where I am, in Israel, a second front is proceeding apace. That is between Israel and Hezbollah, which has long been Iran's cat's paw in Lebanon, which borders Israel to the north. That front had been relatively quiet until 2 days into this war, when Hezbollah resumed attacks on Israel across the border, and the Israelis are going in very forcibly, increasing ground forces by the day, and now basically saying they're establishing a de facto buffer zone in the south of Lebanon.
Dan, also being reported that President Trump has called on world powers to help U.S. reopen the Strait of Hormuz. How's that going over?
To my knowledge, it's slow going. The president may have exhausted some of his credit with those powers when it comes to NATO, given his past comments on NATO, his past disinterest or avowed disinterest in NATO, or at least the heavy U.S. participation that has traditionally been seen in NATO. The British Prime Minister already saying that Britain will not be drawn into this war. It's worth remembering that when Britain said it was mustering a naval contingent to send here, I think it was just about a week ago, perhaps over a week, they were publicly poo-pooed by the US president, who said they were too late to the party. I'm paraphrasing there. And that the Brits would not be welcome, given that then, as he put it, victory was already at hand. So there's no need for the Brits to come in. Apparently there is need now for allies to come in and assist. The main alliance here is between the US and Israel. Israel is not geographically situated to help with that. The Americans are increasing their US Navy assets in the region. I think everyone's looking especially at Harg Island, which is a major asset when it comes to Iranian oil exports. Some 90% of oil exports are piped to this island and loaded onto ships. Now, the Americans just 2 days ago bombed military facilities there. They say the energy facilities have remained intact. There's some speculation they might land troops to control that, taking out of the hands of the Iranian regime while nonetheless preserving the infrastructure for the whatever administration, whatever leadership they hope follows the regime, should that regime fall as the allies want it to fall. So that would obviously be another escalation, more pain applied on the Iranian regime. It's talking a big game. It's nonetheless outgunned by the US and Israel. The question is how long it can last, how long its firepower will last.
Dan, before we let you go, we've got a minute left. The president here says that Iran is ready to make a deal. The U.S. wants better terms, however, and Iran is denying all of that.
True. It's worth remembering Bloomberg had an exclusive story, I think it was 4 days ago, where Iran said what truce terms it would accept, and withdrawal of forces, of enemy forces and the like. So clearly the Iranians are thinking in terms of a truce. I guess the distinction here is they're not suing for a truce, they're saying. So it's hard to know what to make of all this. One imagines there are back-channel discussions. It's worth remembering that for a long time, the U.S. and Iran didn't really directly engage. That changed around the nuclear diplomacy of recent years. I'm presuming there are channels intact. Time will tell what's true here.
All right. Thank you so much. Dan Williams, our reporter for Bloomberg News, based in Jerusalem on the latest out of the Middle East. Again, we are well into the third week of fighting in Iran. Day 17 of this conflict.
Right.
Now.
And I'm just looking at the energy markets here. WTI crude oil off about $4.70, down to $94 per barrel. So coming in a little bit. Brent crude also off about 2% here, right around $100 per barrel. That's impacting global financial markets. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Oil pushing lower. That's helping lift stocks today. You have tech leading the gains. Among other things, NVIDIA's AI conference that's starting today. Also have this news report that OpenAI is discussing a joint venture with private equity. S&P 500 right now 88 points higher. That's up 1.3%, 6720 on the index. The Dow Jones Industrial Average of 566 points. That's up 1.2%. The Nasdaq 100 up 352 points. That is up 1.5%. Brent crude still above 192, but it's down 2.1%. Then you have WTI. That's the biggest of the declining in the fuel prices, down close to 5%, 94.05 for American crude. And in the yield space, the twos, which are more policy reactive. Remember, we have a Fed meeting this week, down almost 4 basis points, 368. The 10-year, that's down 6 basis points right now at 422. Some of the individual movers. Public Storage agreeing to acquire National Storage affiliates in a $5.6 billion all-stock deal. Creates a storage unit company with a combined market cap of about $57 billion. A lot of money in storage. National Storage, right now, those shares are up over 28%. And then Scarlett was talking about this Dollar Tree strategy to introduce higher price items, helping it increase sales, especially with wealthier shoppers.
It's part of the trade down, seeking more value for your dollar.
Oh, yeah.
But I don't think things are $1 at Dollar Tree anymore.
Well, you know, you can find stuff for $1. It's just you got to look hard. Sales projected to be as much as $20.7 billion this year. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Scarlett and Paul.
All right, JT, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube and at Bloomberg.com. Boy, the tech news continues to come fast and furious. Let's get the latest with Ed Ludlow, B-Tech co-host. He's out there somewhere in California getting into trouble in Silicon Valley. Ed, I want to start with the Meta platforms paying as much as $27 billion for cutting-edge artificial intelligence infrastructure from Nebius Group. Nebius Group stock's up 13% today. All right, not bad. Up 52% year-to-date. Okay, better. Up 345% on a trailing 12-month basis. Ed, let's just start with the basics. What is Nebius Group? What's going on over there?
Yeah, it's what we call a neo cloud. It's a fancy way of saying it's a data center that just runs AI workloads, because prior to this point, lots of data centers have done all kinds of software and storage. And, you know, Meta is pursuing this kind of everything strategy. Meta is not a cloud computing company, but it has a lot of compute demand. And so it's buying loads of chips from NVIDIA and AMD for its own data centers. It's working on its own chips in-house that go into its own data centers. And then it's basically leasing or renting capacity from a number of other players. The difference with this Nebius deal is, like, it's really big. It's $27 billion over 5 years, but up front, $12 billion next year for dedicated capacity. And that tells you that they've moved very quickly, and it's a very serious arrangement.
And it adds to its $3 billion deal with Nebius last year as well. You talk about Meta really diversifying and not betting on just any one company, right? I mean, it's kind of spread its chips everywhere.
Yeah, the idea is that in an environment where you are supply constrained, in other words, the demand that a company has for compute power is greater than what exists in the real world, they have found that diversifying is the best way to get the compute needed for different workloads. Meta is a very big and serious buyer of NVIDIA chips. You know, it's in the top 5 easily. But there is benefit to designing at scale. Like, the economics of designing your own chips makes sense, particularly when it's for running internal workloads, right? When I visited Meta's chip lab last week, one of the chips they've come up with, for example, trains the algorithm that does ranking and recommendations. In other words, how ads show up in your timeline. That's, like, very specific to them. And so it's paid off the investment so far.
I mean, just looking at the graph of this chart from Nebius, I mean, went public in 2011, kind of bouncing around, not doing anything. And then around the February of 2022, at the price of about $20 a share, people said, oh, this is an AI play. So we go from $20 to $128. Where was that call, Ed Ludlow?
Well, there's also a history part of it, which is that it was previously associated with or a property of Yandex, which is a Russian cloud computing company. And so, just simply due to what's the word I'm looking for? I guess sanctions. You know, it changed itself. It's now an Amsterdam-based company, so that's a part of it. But it's completely. I'm visualizing the chart for our audio audience, but you know, it completely coincides with the birth of the neo cloud and demand specifically for data centers that just run AI.
All right, here's another story that just recently crossed the Bloomberg terminal. Again, big numbers. OpenAI in talks for $10 billion joint venture with PE firms. What's up with that?
Yeah, so we've just moved our own version of this story. And what I'm told by sources is that basically it helps a lot for OpenAI to have some money that's off the balance sheet, to go out there and find a vehicle, a mechanism to sell its software. And so what these guys are doing is they've set up an entity where those private equity companies in the first instance can go to all of the different kinds of companies that they own and are trying to make better in the classic PE style and say, you know what, why don't you guys use OpenAI stuff? It's pretty good. And so that gives like OpenAI a way of going to market, and it gives these private equity firms some exposure to OpenAI and a mechanism to do business with them that also benefits all of their existing portfolio of investments.
Do we think that this is going to be the template that it starts to use more of these off-balance sheet kind of ventures?
Yeah, I think this is very interesting because like what I hear from time to time across Silicon Valley for all sorts of things is that there is benefit in having multiple entities, be that a geographic split or be it a business line split. And in part because you at scale with enterprises, the OpenAI private equity story is about selling OpenAI's platform to different enterprise companies. It's just a sort of old archaic world where it seems like going back to that model is what is in favor. But this news that broke this morning is the first real example I've seen of it. Yep. The idea has been spoken about in the corridors for a little while.
Ed, great stuff as always. Lots of stuff to discuss. Ed Ludlow, BTech co-anchor with Caroline Hyde, talking on the tech news of the day. Let's get back to these markets. Ann Berry joins us here in our Bloomberg Interactive Broker Studio. She's a founder and managing partner of Threadneedle. We want to talk to her about the markets, but I got to start here. Campbell's soup. I love Campbell's soup. You grew up on it. Basically saying my mother was not
favorite flavor?
Manhattan clam chowder.
Oh, I like that one too.
And Paul's favorite snack, which sometimes he dips into the soup.
It would be a yodel or
the goldfish.
Oh, the goldfish, absolutely.
Owned by
All right,
Campbell's.
so Campbell's soup. Again, I grew up on this stuff. It's based in Camden, New Jersey. Another reason I like it. Why is it on your list, Ann Berry?
It's on my list because it's underperforming, and I think it's ripe for a catalyst. So if you take a look at what's gone on food, you've got activists all over the sector. Elliott Management, $4 billion stake in Pepsi, shaking things up.
True, yep.
Right. We've got Kraft Heinz, which was going to split itself up, and this new CEO said, hey, let's take a beat. I think I've got a plan. You had Kellogg's, another iconic American food company, split itself up. Now parts of it owned by Mars, parts by Ferrero. General Mills is trying, it's doubling down on pet. So what's Campbell doing? And in my opinion, it's not doing enough. It's just hit nearly 2-decade lows, which means that it's time, I think, that you're going to have the activist community looking at this one and making a play. And that's why I went into it.
What do you think activist investors would force it to do? I mean, these companies, Campbell among them, are facing some structural headwinds, including the fact that consumers really do like those private label food companies. They don't necessarily want to pay up for that brand.
Absolutely. And so one thing that Campbell's did do, and I think is the one thing that it sort of figured out, it doubled down on Rayo's. So it went into a great brand. It's got great consumer awareness, and that's in the sauce space. Trying to figure out, does it divest some of its legacy assets? There is a market for those. Private equity does have a history of coming in and buying these legacy brands, stripping out the costs, and basically running them for cash, freeing up a public company like Campbell's to double down on some of the higher growth segments. So there are things that they can do, but they're not doing it to themselves. They're not self-medicating.
That's a tough business. I mean, it's always been a low margin business.
Yes.
But now with the store brands and the so I can see how there would be some disruption.
Or add
there.
protein. Just add protein to everything.
Yeah,
Yes,
Doritos protein, right? Back to what others are doing, yeah.
Exactly. All right, I like this note you have in your notes. I being you, finally found a CEO who could articulate why the sell-off for his company is overdone.
Yes.
So who is this company and what are they saying?
So this is Zeta Global. It's in
Zeta Global.
Zeta Global. David Steinberg's the CEO and founder. And software, as we've talked about here on the show, the software sell-off has been astronomical. So I've been saying, look, babies are being thrown out with the bathwater. They always are in moments like this. Cybersecurity has been one. I see CrowdStrike down today. I'm absolutely going to go and add that one. But Zeta's interesting, and let me give you the context for it. When I'm sitting in boardrooms or I'm running businesses, there's one area that everyone is focused on making sure they succeed in, and that's marketing, because of the battle for eyeballs and the battle for consumer attention. You've now got boards who are increasingly paying attention to technology because of AI, and they're all saying, show us return on investment. It's not enough to be brand building anymore. It's kind of amorphous. We need to see metrics and hitting attainment. And Zeta's got a platform that has provably delivered 600% ROI on investments to have personalized ads targeting you and me. And it's working. And when you've got 600% ROI, you can take price. They've had a fantastic set of consecutive quarters of outperformance. And I can see the play here. And this is what David Steinberg, the CEO, said that really caught my eye, Paul, which is if you think about how you sell into enterprises, you've got to get through compliance, through legal, through the financial department. You've got to get through tech. It's not easy to kick out. It's really hard to get in. And they're managing it. So that's why.
So I guess there is room for software companies that can survive this AI onslaught. You just have to be really focused and really know where to look. What would that approach yield in terms of other software companies? I mean, how do you think about the parameters you search for?
Well, I think there are some that are really going to struggle. Let's take Adobe, for example, which really, I've been frustrated by Adobe, I've been frustrated by PayPal, because they're the kinds of companies that had huge incumbency advantages, had enormous repositories of proprietary data, and fell totally behind in terms of how to mine it and ultimately how to build the kinds of models that others have been doing for them. So
I got complacent?
I think they absolutely got complacent. And I think that there was a lack of willingness to take a bold move in terms of their executive changes. Finally, it happened. But I also think they got stuck. It wasn't just complacency. I think it reached a point where they just didn't know what to do other than try to buy their way out of it and couldn't get the M&A to work. So I do think there are, this idea of proprietary data is critical. Number one, it's a necessary but not sufficient condition. The next piece is trying to figure out, have they got the technological chops to go mine it in a differentiated fashion? You need both.
30 seconds. And what are you doing on the private side?
I've just cut a check for Jan LeCun's new AI firm, Advanced Machine Intelligence. Jan LeCun's one of the godfathers. He's doing a new approach to building AI models, which is based on how we learn as humans. We don't read as children. We take in data through listening and through looking, and that's his next go-around.
Technology, AI, that's what the kids are doing.
She's not being stopped by the war whatsoever.
No, just keep going. Anne, thank you so much for joining us. Really appreciate it. Anne Barry, she's a founder and managing partner for Threadneedle, joining us live here in our Bloomberg Interactive Brokers studio. Taking a look at oil here. WTI crude oil, it's off about $3.75, just about $95 per gallon. And on the Brent side, off about 1% here, but still $102 per barrel. So still lots of risk premium baked into that commodity here. Bitcoin on the other side is risk on here, up 2.4% to about $73,000. The equity markets, S&P is up 1%, the Nasdaq's up 1.2%, and the Dow is up 0.9%. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Well, today, traders seem to be latching onto any glimmer of hope that you're going to get out of the Mideast. There was news of the trickle of ships to the Strait of Hormuz. So you have oil lower and stocks are higher, although the major averages, stock averages, though, are off the best levels of the session. The S&P 500 up 63 points, just under 1% higher, 66.96 on the index. The Dow Jones Industrial Average right now up 367 points. The NASDAQ 100 up 257 points. And Brent down right now about 1.5%. So we're still above 100, 101.64. WTI, that is down right now to 94.79 a barrel. That's down almost $4 a barrel. Meta is going to pay as much as $27 billion over the next 5 years for access to cutting-edge AI infrastructure from Nebius Group. Nebius up close to 13%. Meta shares also are higher. They're up about 3% on word that they're cutting jobs. Meantime, Chris Verone at Strategis Securities says stocks may have further to fall.
Yeah, we're sitting here with about 40% of the S&P above the 50-day. We really haven't seen the big surge in new lows yet. The put-call ratio remains pretty benign here. So things I would want to see to really mark some capitulative flush, I don't think have necessarily been checked yet.
And yields, remember Fed meeting Wednesday, it concludes 10-year down 4 basis points. 423, the 2-year down 3 basis points, and that is at 368. So at the Wawa, just 357 this morning. So it's like down 2 cents.
Okay.
But Americans are feeling the pain. The price at the pump this morning nationally for a gallon of regular, according to AAA at least, is $3.72 a gallon, which is a 27% jump in the past month.
You go to California. I was there last week. Yeah.
Oh, that's a special item.
$5.69 a gallon.
Special case.
That's why they all
I was like, my
drive
eyes,
Teslas.
shield my
That's
eyes.
why they all drive Teslas.
Yeah.
Right, exactly.
Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, the Eurasia Monday note came into my inbox this morning. I printed it out. I will read it on my 2-hour train ride home today, and I feel like I'm going to need all 2 hours. These things are dense, people, but you have to read every word. That's how good they are. Cliff Kupchan joins us. He is the chairman of the Eurasia Group, one of the people to blame for these huge notes that I have to read, like homework, it feels like. Cliff, let's focus on Iran here. I think most folks probably couldn't articulate a reason why we are in Iran, but I guess that's past tense. The question now is, how does the U.S. get out of Iran? Do we have any idea how that might work and when?
I think eventually the U.S. and Iran are going to both taper their fires. I don't think it can happen until the Strait of Hormuz is at least somewhat more open to oil passage, and that's going to delay. I mean, Trump just can't declare victory with the strait shut and oil markets over 100. And I think it's going to be some time before he gets the naval convoys, the insurance schemes, and decreased Iranian fires. Those are the key conditions he's got to get before we see some relief here.
Okay, so that's what the U.S. is looking for. What about Israel? I mean, does the U.S. have a different goal than Israel at this point?
Well, the key question is what Bibi Netanyahu is going to do with the regime change issue. The Israelis see this as the chance of a generation, the shot of a generation to get rid of the Darth Vader, the ultimate evil in the world, the Iranian regime. They sold this, as did Trump, but the Israelis sold this to their population as a chance for regime change. And the war is incredibly popular, unlike in this country, incredibly popular in Israel. And I think the Israelis are starting to realize that there's likely to be a hardline government in Iran when this war, this phase of the conflict, however you want to look at it, ends. But that's going to be a hard decision for Israel. So I don't think in the end game there will be a difference in goals, because I think the Israelis above all prize the relationship with Trump and the U.S. But there is a chance that Israel won't stop shooting when Trump wants them to, and that would be really ugly.
Is there a reasonable chance for regime change in Iran in the near to intermediate term, do you think?
I don't think it's very, very realistic or very high, because I mean, one of the real misjudgments by the Trump administration was that the security forces, this is Venezuela 2.0, that they can find a Delcy Rodriguez. And, you know, we all have to say that Venezuela was pulled off brilliantly by the president and his team. But this is not Venezuela. There is, you know, the United States of America has spent the better part of 60 years looking for Iranian moderates. And, you know, we haven't found them. I think there are some, but they don't have power. So the capacity of the security forces is very, very likely, after this is over, to be able to put down any kind of dissent, either nationwide protests or ethnic, the Kurds, other Kurds, the Baluchistanis. I think the chance is remote. It's possible, but it's really remote.
So in addition to seeing this conflict as Venezuela 2.0, the White House also did not necessarily anticipate having to clear the Strait of Hormuz and get that going again. Right now, the president is calling on other countries, France, UK, Japan, China, to help the U.S. clear the Strait of Hormuz. Is this going to gain any traction, this kind of request?
In the near term, I don't think so. Most of our allies don't want to be involved or perceived as being involved in the war, offensive operations. Now, clearing the strait is kind of offense, defense, it's squishy. I am increasingly of the view that the U.S. either won't or more likely isn't able to do this by itself. Again, to be fair to the Trump administration, the analytic community was completely wrong too about the common wisdom, since I've been doing this issue for 30 years, was that the United States Navy can clear the strait in a month to a week. That was wrong, because nobody, including the Trump administration, priced in that we'd also have to be defending the Gulf countries and Israel. And there's just not enough boats to do that. So I think ultimately, yes, I think there will be contributions from other countries. It's going to be slow. The whole process is going to be slow, but we need the Europeans, and ultimately I think they'll do something.
So it sounds like the whole linchpin here is the Strait of Hormuz, and
it is.
And making that safe is the only way to make that safe is just to come to an agreement with Iran to make it safe?
No. I mean, that's the best way to get the Iranians to stop shooting. But I don't think they're going to stop shooting. I don't think we're going to stop shooting anytime soon. So the best we're going to be able to do is convoys. I mean, possibly what the Marine Expeditionary Unit, these 2,500 Marines going in, one of the things they may be able to do, they might take Karg Island. They might try to secure the fissile material. We can talk about that if you want. But the other thing they might do is suppress and occupy sites along the Strait of Hormuz, missile launching sites. Now, that's incredibly dangerous for the Marines, but that's another way to secure the strait. But we're going to have to get at least 2 or 3 million barrels a day to calm oil markets out of the strait. And yes, I think for market participants, especially, but also for geopolitics, this is about the Strait of Hormuz right now. And I think that's often missed in the press.
Okay. Quick final question for you about the summit with Xi Jinping of China. President Trump putting that at risk, saying that he could delay that summit if Xi Jinping doesn't help clear the Strait of Hormuz. How are you thinking about that?
I think it's a coin flip, this summit right now. I think that, look, I mean, if you're President Trump, would you want to fly to Beijing and be in front of global press when the Chinese are not helping with the issue that might cost Trump his presidency? The optics aren't really very good. On the other hand, China showed what the critical minerals weapon can do to markets. So he's caught between a rock and a hard place. Ultimately, I think he'll go, but I don't think I bet, more than $1 on that.
Interesting. All right, Cliff, thanks so much. Broad range of topics there for sure. Cliff Kupchan, Chairman, Eurasia Group, joining us there on the Middle East and on a potential meeting with President Trump and Xi. Markets here, they are higher here today. The S&P is up 58 points, about 0.9%. The NASDAQ up 240 points. That's 1%. We'll have more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube and streaming live at Bloomberg.com as well. Let's talk a little healthcare here. We do that every Monday with Sam Fazeli. He's the Director of Research for Global Industries, and he's a Senior Pharmaceutical Analyst for Bloomberg Intelligence based in London. Sam, understand, I was looking through how we can do that here. We can spy on fellow employees. I was looking at your calendar. I saw you're in China last week. What's going on there?
Oh, a lot going on there, Paul. China biotech has been on a rising trend for the past 21, 22 years that I've been going there in terms of moving from, or China pharma, let's say, moving from two drugs and generics and active ingredients to first-in-class innovative drugs that they've been working on, and you can see that in several trends, number of trials that are taking place with their drugs in the US, or drugs that have been originated at least in China, number of licensing deals, i.e. partnerships with Western pharma, if you like. So all of that is in a rising trend, which is really positive for the sector there, and the companies are looking really good shape. Good money, i.e. in terms of cash balances, so they should be able to deliver on this in the next 5 years.
And of course, you look at the huge market for those weight loss drugs. I understand that Novo Nordisk begins losing its IP on that active ingredient used in Ozempic and Wegovy in several large countries, including China. What is the progress of weight loss drugs in that market?
Well, there are plenty of approved drugs, but there is already an approved drug there, which is not, aside from originated in China, and I think that you're going to get a whole host of others that tends to be the way that China pharma biotech works. A lot of people chase the same asset, or same class, or same disease. I think there will be a little bit of a change there, but I think you'll see quite a lot of companies with products there. Of course, usually in the world, the best drug wins, but this is a mass market product to a degree, so I think price is going to be a significant thing. Of course, things are cheaper there, but even there, you're going to have a competitive price there. Now, today, Scarlett, we had news of Structure Therapeutics in the US, but their assets actually came from China. So that's quite an interesting connection between, and they've got one of the best oral pills in terms of data that's reported today, and the share price is up 5 to 7% today. So again, a China-originated drug or a China-originated base. So that's that all ties in quite nicely together.
Sam, you've been going to China for 20 years, you mentioned. How has it changed in terms of how much of their pharmaceuticals do they make themselves? Do they source in country versus maybe license from the West or buy from the West?
Yeah, so that's become more and more the case, that they have fast followers, is what you would call it, that's going on in China. So a lot of the drugs, generics, of course, nobody talks about it because anybody can make them, especially if they're standard small molecules. Even biologics, they've started to be able to make themselves. And so I would say, if you wanted me to give you a number, I'm pretty sure it's north of 80% of drugs. Now, of course, there are some drugs that they can't copy, if you like, or have a generic, but they do their own IP and they work on that themselves. Some of them, for example, one of them being AstraZeneca's best-selling drug for lung cancer called Tagrisso. There's a company in China that developed a version themselves, and that's launched, and they're competing in China. So it's not exactly a copy, but what's going to be interesting is, where are these first-in-class drugs? How many of those is China going to be responsible for in the next 5 years? And that's going to be the thing to look out for.
I'm so glad you mentioned that idea that Structure's weight loss drug was originated in China. How big a source is the innovation on drugs in China for so many U.S. pharmaceutical companies and European pharmaceutical companies that face expiration of patents and need to fill their pipeline?
Yeah, I mean, I would say they punch above their weight. Let's not forget, U.S. is the biotech center of the globe, right? That is where most of the biotech companies are, that is where most of the biotech innovation has been happening. China has been picking up in the past 5 or 6 years. One of the things that we found is that a lot of that's interestingly correlated with Chinese nationals who've been working in the US, working at Harvard, working in pharma companies, going back. And you can see that a few years later, you start seeing the fruits of that. So, but there, in terms of the number of deals, number of drugs based on the number of companies, I would say they punch above their weight. So what's going to be interesting, of course, is, well, how many of those drugs are going to be, again, I keep calling it this phrase, first in class, true innovation that they've managed to bring to market. That's going to be something to watch out for in the next 5 years.
Sam, thanks so much. Appreciate it. Sam Fazeli, Director of Research for Global Industries and Senior Pharmaceutical Analyst, Bloomberg Intelligence, joining us from London. I see in his calendar that he will be in the States early April. We'll get him here in the studio.
Absolutely.
So we'll do that. See, I can see
well, drug boss, right?
Yeah.
That's his jacket?
I don't know. Yeah, he's all over the place. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence coming up in just a moment with markets moving higher here. The S&P is up 1%. Same for the Dow. The Nasdaq doing a little bit better, up 1.2%. And the small caps doing well as well. The Russell, really the best performer out there, up 1.4%. So some breath in the market. Energy pulling back just a little bit. WTI crude oil off $3.50. That's about 3.6%. $95 a barrel. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Monday morning. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu, live from our Bloomberg Interactive Broker studio in Midtown Manhattan. We are streaming live on YouTube as well. Coming up in this second hour of Bloomberg Intelligence, it is well into week 3 of this war in Iran. We are on day 17 right now. So, of course, we're going to get an update on everything that's been happening there. We're also going to dig into company news. Jen Bartashis, our senior analyst covering retail staples and packaged foods, will talk to us about Dollar Tree's latest earnings. Elliot Stein, he is our litigation analyst. We'll talk about the DOJ appealing the Powell subpoena quash and how that is likely to fail and what that means for the Federal Reserve Chair nominee, Kevin Warsh, as well. We also have with us as well David Doherty. He is BNEF's head of natural resources research on oil. Oil prices have been pretty much all over the place. Right now, they are lower. WTI is trading below $95 a barrel. Brent is holding above $101 a barrel. And we're going to check in as well with Michelle Korsmo. She is the CEO of National Restaurant Association on some restaurant industry headwinds. My guess is higher costs, including higher oil prices, will be a big part of that conversation. First, though, let's go to John Tucker for our Bloomberg Business Flash. John.
All right, guys. Thanks to the 11 major industry groups in the S&P 500. Tech is at the top right now. Oil is at the bottom. Brent crude down 1.2%. The Bloomberg Mag 7 index up 1.4%. Today is GTC. That's NVIDIA's annual AI conference. I might get something out of that. This comes after 6 months in which the shares essentially have traded water for NVIDIA. OpenAI in advanced discussions to form a joint venture with private equity firms, including Bain Capital and TPG. It would focus on bolstering adoption of its AI software. And we have this headline. I'm still trying to figure this the why behind this, but trading has been halted in key contracts on the London Metal Exchange. And as soon as we find out more on this, I'll bring it to you. Meantime, Lori Calvasina at RBC Capital Markets says markets may have to sell off further before clearing.
5 to 10%, is kind of what we think of as a garden variety pullback. Frankly, I will be relieved if we actually cross that 5% barrier so we can, sort of get some of this needed pain out of the way.
Right now, the S&P 500 up 72 points, up 1%, 6704. The Dow Jones Industrial Average up 468 points. That's a 1% rise. The Nasdaq 100 up 286 points, and that's up 1.2%. The VIX down to 2408. Again, Brent crude down 1.4%, 101.75. 10-year yield is down 4 basis points, 423, I'll call it. The 2-year is down 3 basis points. That right now is at 368. The tech companies' needs for AI processing facilities and making data centers the latest darling of the real estate industry. So spending on data centers in the U.S. has exploded, surpassing offices for the first time.
That makes sense.
It makes sense, but, I would say it's kind of a key moment in real
Inflection
estate.
point?
An inflection point. Thank you. That's why I pay attention to Scarlett. Key point, inflection point for the real estate industry. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Scarlett.
All right. Thank you so much, John Tucker, with our Bloomberg Business Flash. Let's get a check on stocks that are on the move this morning. And for that, we bring in Carmen Reinecke. She is our Bloomberg Equities reporter. Carmen, what are you looking at?
Yeah, so the first one I'm looking at this morning is Nebius Group. This is ticker NBIS. So shares are up about 12% right now. This is only the most in like a few days, but still a pretty significant jump. It's at the highest since November. Basically what happened is Meta Platforms announced it will pay as much as $27 billion over the next 5 years for access to artificial intelligence infrastructure from Nebius, which is a new cloud, so cloud provider that operates data centers. And this company also has a strategic partnership with NVIDIA Corp, which will also provide Meta some dedicated capacity starting in 2027. So just seeing more and more companies put more money into building out their artificial intelligence infrastructure. And looks really good for some of these cloud providers. Yeah, it's putting Nebius certainly in a prime position here. All right, next up on your list? Yeah, so we got to look at Dollar Tree. Shares doing pretty well here as well. This is ticker DLTR. Shares up about 4.9%. So this is the best intraday since early January. So the company had earnings this morning, and investors are happy with the results that they're seeing. Sort of a key thing to point out. So they've introduced higher priced items to sort of get more wealthier, higher income, shoppers coming to their stores. So that helped also by increasing sort of store traffic. So more people coming in to buy these items in a range from $3 to $5. So boosted results for that company. All right, we know we're near the end of earnings season when you've got the retailers reporting, but you do have a tech company reporting as well. Yeah, so Micron here, this is ticker MU, and this is going to be a really interesting one to watch because the memory names have done so well this year. So shares are up about 5% today. This could close at a record high if it stays at this level. And what we're looking at is results come after close on Wednesday. All right, Micron to be reporting earnings later on this week. Thank you so much. Carmen Reinecke with our Stocks on the Move. And for more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Carmen had mentioned one of the big movers was Dollar Tree. And the outlook here from Dollar Tree was kind of mixed because even though adjusted earnings per share is going to meet the average analyst estimate, the outlook for revenue came in a little bit light. So let's bring in Jen Bartashis. She is our senior analyst covering retail staples and packaged foods. And Jen, we've seen these value retailers do pretty well in this current environment with a lot of higher income consumers trading down. Yet this sales view did miss the average analyst estimate. Is that because analysts and investors have gotten a little bit ahead of themselves when it comes to the outlook here?
Well, it's a good question, Scarlett. With regards to the overall revenue growth for Dollar Tree, last year was a real transition year for them. They shed the Family Dollar unit. They're refocusing. They've been, investing in the business. But that trade down customer doesn't come all that often into stores. And so while they bring a much higher basket and they're big adopters of that higher price point of $3 to $5, they're just not coming in as frequently as kind of the core low income consumer. And so I think the conservative view on the top line is that there are a lot of things going on right now. You've got, fuel prices are on the rise. You've got consumers who are stretched, and you've got a mixed behavior with regards to the types of households that are coming into Dollar Tree.
So, what's Dollar Tree and other dollar stores? How are they adjusting their strategies at all?
So, with regards to strategy, one of the things that they really ran into trouble with, and this is why they went beyond that $1 price point back in 2022. Was being able to have a compelling variety of merchandise in the stores. So the multi-price point strategy that Dollar Tree is rolling out has been really effective for them because it gives people slightly more choice of what's in the store, and they can offer more compelling value. So that's been a tactic that's really paying off. It's just a question of, they're still in the process of rolling that out to all of their stores. So it's not everywhere yet. And so they're getting that bump as stores are adopting these higher price points. But once they're in all the stores, the question is, how sustainable will it be? So that's one of the things that everyone is looking for.
And Jen, one thing we know about Dollar Tree is that it has done better in terms of operations, in terms of performance, because of this decision to divest its Family Dollar chain, which was begun last year. How far along that process is Dollar Tree? Is it halfway done, 2/3 done, 100% done?
So the divestitures is done. The question is the refocusing on their own internal operations. So, with regards to last year, they started to pay a little bit more attention. They're really working at improving their supply chain efficiency. They're working at improving store level productivity. They've invested in wages in the stores to help have more employees there at the right times and to provide the right amount of customer service. But it's still early days for the overall transformation of the company now that it's back to being just a single banner. And so it will probably extend through this year that we see more of those tactics start to take hold and to have a real material impact on the business overall.
What is Target? What is Walmart? What are they doing in response here?
What's really interesting, Paul, is that Dollar General, as a direct competitor in the dollar store space, they talk about having over 500 items that are at the $1 price point or below. So they're actually undercutting Dollar Tree on some of that value play. If you go into a Walmart or a Target, when you first walk in, they have kind of those value alleys where they have low-priced items right at the front where you can see them. So everybody has a strategy to try to show value through some variety that's at very low price points. But then when you get to the big box guys, their competitive advantage really is in the breadth of assortment that they carry. And if they can be compelling on value across the store, that puts them in a good position.
Yeah, value is definitely the play right now for all of the big retailers, whether you're already in it or you are looking to kind of beef up that part of your offerings. Jen, thank you so much. Jen Bartashis is Bloomberg Intelligence senior analyst covering retail staples and packaged foods on Dollar Tree's earnings. The stock up about 5% right now. We do have some breaking news here. Bank of America has agreed to settle claims that it aided Jeffrey Epstein's sex trafficking. This is according to a court record. It's reached an agreement in principle to settle a proposed class action lawsuit on behalf of Jeffrey Epstein's victims. They had accused the bank of aiding in Epstein's sex trafficking. We will bring you more details as we get it.
Okay. All right, on Friday, U.S. Attorney Jeanine Pirro reacted to news that a judge blocked subpoenas of Fed Chair Jay Powell. Pirro was stern in her criticism of the judge who made a decision and suggested Powell was now, quote, bathed in immunity. Let's take a listen.
Jerome Powell today is now bathed in immunity, preventing my office from investigating the Federal Reserve. This is wrong, and it is without legal authority.
All right, that was U.S. Attorney Jeanine Pirro talking about the case with Fed Chair Jay Powell. Not sure really where this is, but our next guest is Elliot Stein, Bloomberg Intelligence litigation analyst. Elliot, just summarize what's going on here for those folks that aren't, paying attention to this kind of stuff, and where are we now?
Right. So, I mean, there's a history here between President Trump and Jay Powell. President Trump has been upset that Jay Powell, chairman of the Federal Reserve, has not lowered interest rates quickly enough. He's been, criticizing him for years now. In January, we learned from Chairman Powell that the Federal Reserve had received subpoenas from the U.S. Attorney's Office in D.C., which had opened a criminal investigation revolving around Chairman Powell's testimony to the Senate back in June concerning cost overruns related to renovations of the Federal Reserve building. So that's sort of the basis of the investigation, and the subpoenas are meant to gather additional evidence of a potential crime to see if Chairman Powell lied to Congress in June.
And of course, it was Chair Powell who made the direct linkage between this subpoena and the fact that the president has wanted him to cut interest rates, but he hasn't because he's more focused on the data, as he says. So where do things stand now? Because I know the White House had kind of said that they were not part of this decision by the District of Columbia's Attorney General to subpoena Jay Powell. So have we seen that link completely disappear, or is there some kind of tenuous link?
It's interesting to hear the White House say that, because on the other hand, they are taking the position in all these cases that everyone who works in the executive branch reports to the president and he has unfettered control over them. So I think there is a little bit of a disconnect there. But the judge essentially did agree with the Federal Reserve here that the subpoenas were issued, basically as a pretext to go after Chairman Powell for not resigning or not lowering interest rates. The court found that it was essentially a fishing expedition looking for some evidence of a crime where there isn't any yet. And he weighed two things, right? The judge weighed the voluminous number of comments and tweets that the president has issued over the last several months or years criticizing Chairman Powell for not lowering interest rates versus any justification from the U.S. Attorney's Office that a crime was committed here, and he found that they could produce almost nothing so far. And so based on those two issues, he said this was really a pretext meant to harass Chairman Powell.
So in terms of Mr. Warsh, where do we go here?
Yeah, so this is what's really interesting, right? Because
Mr. Warsh being the...
Yeah, Kevin Warsh is President Trump's nominee to replace Chairman Powell as chair of the Federal Reserve Board when Chair Powell's term in that seat ends on May 15th. Remember, Chairman Powell's term as a governor doesn't end until January 2028, and his role as chair of the FOMC actually runs until the next coming January, in January 2027. So Kevin Warsh is the nominee to replace Powell as chair of the Federal Reserve Board. But Senator Tom Tillis, who sits on the Senate Banking Committee, which oversees the nominations and confirmations of Warsh, has said that until this Justice Department probe is resolved, he will not vote to confirm anybody in this seat. He actually likes Kevin Warsh. He thinks he's qualified. But in terms of the process, he thinks it's a problem that there's this investigation. So what does that mean for Warsh? It means right now, it looks like his nomination is going to be delayed.
It's going to be delayed, and I guess the question is whether there's any kind of workaround for that, or does it have to be? Does it have to go through that confirmation hearing that is chaired by Tom Tillis?
Well, in order to get Warsh on there, you have to go through the confirmation hearing. This could have been an off-ramp for the Justice Department to sort of end the investigation and sort of clear the path for Warsh to go through the confirmation process without any issue. But the Justice Department, Janine Pirro, indicated that they're going to appeal this decision. So that's probably going to run several months. It's likely not going to be resolved by May 15th, so you're not going to get a confirmation of Kevin Warsh. What you could see, because on May 15th, I think Chair Powell will have to step down as chair of the Federal Reserve Board, not the FOMC, but the Federal Reserve Board. And you could see President Trump name someone like Stephen Myron as acting chair of the Federal Reserve Board at that time. He's already on the board. He's been confirmed as a governor. But he could name Myron, I think, as acting chair. And
there's so many layers to this.
There's a lot of layers. And the FOMC is really what's important here, because they drive the rates policy.
All right, and of course the FOMC begins its two-day meeting tomorrow
this week,
and concludes it with the announcement on where it sets interest rates Wednesday at 2 p.m. Elliot, thank you so much for breaking that down for us. Elliot Stein, Bloomberg Intelligence litigation analyst, the DOJ appealing the Powell subpoena quash. Where does it go from here? For now, Kevin Warsh is sitting around waiting. for his Senate confirmation hearing to start, but no indication it's going to start anytime soon. Thank you so much. All right, we're looking at equities in the green right now. They've come off their highs and they've bounced off their lows. They're just kind of waffling around. The S&P up 1%.